everybody in the audience is not an expert. So I think before even talking about like the marketing process of an STO, I think we should start with what is an STO and why does it matter? Jenny?
STO, actually, STO is kind of like a stock. But I think like even for the people who work in this industry, we're not familiar with this concept. Most of the people in the crypto field, we're still investing on Bitcoin, Ethereum, those tokens, utility tokens, because we are facing some regulation problems. Like take Singapore for example. Singapore, we only have one exchange that can do the STO. And actually, they are not really running the business yet. So it's a very new concept.
Absolutely, yes? Absolutely. Artem, how would you define an STO, Artem? Why do you think it's important?
Yeah, actually, I believe that it's a great model, but because of the some issues with regulators in some specific countries, it's really like complicated to conduct a proper company and issue security tokens and find a proper investor for that kind of activity. So far on the market, I like Jenny, I only see that people only invest in utility tokens because it's much more clear for them how to raise money here, how to build the business, and so on and so forth. Yeah. But from another point of view, for example, I believe in countries like Switzerland or Liechtenstein, it's much more easier to conduct an STO because people, like have a kind of like more clear understanding of how they can issue the security token there. So I believe it's just possible if you have like a proper company with big stuff and you can build a valuable coin and share among your company staff or company shareholders and allow them to like influence or earn while just holding or trading the security assets. So I believe it's just only possible if you have already established enterprise or something like that. So
yeah, thank you, Artem. I appreciate that, Artem and Jenny. I mean, the thing about this industry is it's one, I think, with the most evolving set of jargon out of any industry I've ever worked in. So to you, me, and everyone else here, like the definition of STO is really, really simple. But I think one of the big problems with being in an industry which is based around tech and which evolves so quickly is it's our job to be able to translate what it is we understand in very simple words for people who aren't in the blockchain industry to be able to easily understand. So I'm assuming, Anna, this is, since you're in the sort of news section of this business, this is your speciality. So can you explain to our audience exactly what an STO is in the simplest possible way?
Yeah, STO is the same as public offering, but it's offering of digital shares in the company or, for example, in the real estate. And it considered to be easier and democratizing the access to the financial services to everybody. But this issue is well disputable because we face that in some cases only accredited investors can invest into STOs. So as well the easy access to such financial tool is not solved.
Absolutely, absolutely. I'll just sort of chime in here and maybe like add my 2 cents in here as sort of like STO definition. So if I had to think about a very simple way to describe it, I'd say STO is simply the tokenization of an asset. Very, very simple. It's the process of grabbing an asset and linking it to a specific token which you create and dividing ownership of that asset into X number of tokens. That is the definition of an STO, I think, in its simplest and most beautiful form. So let's let's move on a little bit and talk about sort of why STOs exist in the first place. Like why, and maybe before the reason why they exist, let's talk about the people who invest in them. Like what makes an STO investor different to the kind of person that invests in a standard company? Artem.
I believe it just more could be more flexible for them because they can avoid a lot of, like a mess of paperwork, a mess of like third parties, companies that are helping usually investors during the whole investment process. Yeah, so basically digitalization and tokenization allows them to simplify and make the whole faster and more security, because everything will also, like be secured in blockchain technology if they're using it. So I believe just these are main, like key parameters that are given an advantage to this model of raising funds.
Sure. Jenny, do you agree?
Yes, I totally agree, and I think it lowered the boundaries of the fundraising. Like traditionally, only credit investors can invest on the real estate or those big projects. Ordinary individual investors is very difficult, but through STO, you can buy like $1 of a building, so you can buy a very tiny share of a very big project, which is good for the individual investors. But I think it's a very good concept, but it's not that easy to do, especially nowadays. The financial regulations are tighter and tighter. We see big exchanges facing problems. BitMEX, they are under the investigation of SEC. And in China, the biggest under investigation, and the founders, they are under arrest. So it is not very clear yet. So I think we need to get through the regulation first, and then this STO thing can really develop overall.
Sure. Anna, what's your opinion?
Maybe not in a very short time.
Yeah, generally, the investors into STOs are the same as investors, for example, into real estate, so like into venture capitalists, who invest into some startups companies. But these people are like early adopters of blockchain, of crypto, and like supporters of the tokenization of real world assets, or as well crypto enthusiasts who invest into not only STOs, but as well like to popular crypto like Bitcoin or Ethereum, or into utility tokens as well.
Yeah, and I think that's an interesting point which you touched on, Anna. Just because as far as Bitcoin goes, and as far as sort of mainstream crypto goes, I mean, you have, at least in my opinion, I think you have two kinds of investors, right? You have companies like Grayscale, for example, sort of like financial institutions which are first movers, and then before that you have the nerds, right? People like us. That's kind of why we're here. I think that the one thing we have in common is we're all kind of crypto junkies and nerds at some kind of level, right? And is there? I think the main difference is Bitcoin didn't really need any kind of marketing to be able to reach people like us, because it's just what we look for, right? But if we take real estate, for example, since this is an idea which everyone seems to mention, there are like set channels for how to market a property, right? I mean, there's in the UK, there's Rightmove. In the US, there's Zillow. You know, every sort of country has its own standard marketing channel for real estate. With STOs, the path isn't really that clear. So if I wanted to create an STO, let's say I wanted to tokenize the building I'm in, and I want to sell it. What do I do, Anna?
So you just go to security tokenizations platform. Like, for example, companies can partner with STObox or like with Polymath, Securities, there are different such companies now. And so they can make the STO legally compliant, and they don't really need to have some technical knowledge because it will be done everything for them. And that's it. Like, if we're talking about real estate, a lot of real estate objects, they just tokenize the part, not the whole real estate. And a lot of people who do this, they just test this thing out, how it truly works.
Okay, thank you. Jenny, what's your take? How would you go about marketing an STO for a property versus actually selling a physical property, right? Because as we said, they're two completely different streams.
I had a few round of meetings with the real estate agents. Like they're trying to do the STO for their properties in Southeast Asia. They want to put it into like very small shares and sell it to a wider range of people. But until now, it's still a concept. Like I said, it's not that easy to proceed now in Asian market because all the Asian governments, they are quite tight and strict in this security market. So I don't know whether in other part of the world it will be easier, but till now, as far as I see, at least in the Asian market, we are not able to do that yet.
Sure. How about you, Artem? If a customer came to you and said, "Hey man, I've got this epic piece of real estate and I want to tokenize it." Let's assume that sort of the legalities were in place and you could get around the regulatory issues, because I'm confident that even without existing underlying infrastructure to regulate STOs, I still think there's ways to do it, which I'll maybe go into a little bit later. But how would you go about actually marketing the token and getting people to give you their money? Because that's what this is about. No?
Yeah, actually, it really depends on the target audience that we will choose. So it could be a regular investor. So, for example, just people who want to invest, I don't know, like $500 to $1,000, or it could be a kind of some bigger companies or venture funds who can invest much more. Yeah. So we first of all need to like decide who we are targeting for, and after like personally, right now, I'm thinking that it will be easier if the project really wants to raise funds. It will be much more easier to target these venture funds rather than regular investors, because regular investors always has, like a lot of consumptions because they're not really sure that they can, like there's a lot of so they sure that this investment will be a proper one. But with the venture funds, if you can bring like a proper legal documents and everything, it's probably much more easier to persuade them and persuade them to buy like some shares of this company. And like for this marketing strategy, the best way is to do a good brand awareness through some like trusted tier 1 media. And afterwards, try to bring several angel investors who are the popular among the investor clubs, And once it usually works like that once people see some like familiar names, if they know these investors and they know that they're pretty successful, everyone just starting to put their money in. Yeah, and this is how it usually works, for example, in the US and probably other countries as well. So the best way is just to, like build a proper network and build a proper brand awareness using some trusted media. So this is like step number 1, And afterwards, once you will finalize this stage, I believe there is a way to make a kind of like crowd sale and target some regular investors who can just invest small amount of money, because you can already show them the big guys already in this game, And for this stage, you probably need to do like proper digital marketing and build like simply sales funnel for them, so they will, like quickly understand and know the tutorial, how they can, like research the needed information and how they can quickly get in using different like payment services. So basically there is a big work here, and you need to build everything in a proper way, starting from the like website, special design, SEO optimization to bring it to the top of searching engines, and afterwards take care of the social media and other channels. Put probably some call center or like account managers who will pick up the conversation and share all the needed information to the regular investors and describe them and explain how it works and how the process looks like. And afterwards, probably it could be done, but it definitely takes some time. Yeah. So for the story, I believe probably the like approximate timeline will be like 3 to 6 months in the best way.
Okay, fair enough. I mean, that sounds like a long day at the office, I think, to say the least. And let's sort of take a step back there, because I think at the beginning of your point, you mentioned, you very rightly said, right, that the strategy for marketing an STO should depend entirely on whether you're selling, I don't know, like a massive tower to a B2B, or you're selling, like a residential complex and you're selling individual shares at €1 or $1, for example. So let's use Jenny's example, because Jenny mentioned earlier that she was having a little chat with some investors, and she was talking a little bit about what an STO project may look like, even though it didn't materialize. Let's like hypothesize with that example for a second. So Jenny, can you, like, without mentioning any names maybe, or any roads or any projects, can you just give us a little bit of an example of what that specific STO looked like, so we can use it as an example based off that?
It's a Southeast Asia real estate STO projects, but it's still on hold because, like, first, the company who issued the token must have the license, or it cannot be a small company. It have to be a big company. And second, there's no liquidity for the STO yet, because they also have a limit for the investors who invest in. They're like, the barriers are quite high, but you can get around it a little bit if you are not using fiat money. Like the investors, they invest in the STO token with maybe Bitcoin, Ethereum, then you can get around the regulation a little bit, but still is not very easy. So back to the project, they are thinking of like listing their coins, like maybe cut the one real asset to like 10,000 shares and put it on a STO exchange. You cannot list it on a like normal exchange. And for the STO exchange, they don't have the fiat channel, so they are still planning it, but it's been a long time.
That's fine. But
nothing came
I think
up really.
you've like answered what it is we were looking for. And if I may as well, just to sort of add to that, was there a part of that round which was private, or was the idea entirely public?
Oh, they are targeting two kinds of audience. First is the traditional real estate investors, traditional institutions, credit investors. For them, they are, and the other part is the crypto world. Those people who want to invest on coins, they are targeting these two types of people. For the credit investors and institutions, they are doing it in a traditional way. So you will be talking to their agents in a very traditional way. For the crypto market part, as far as I know, until now, you can only invest in crypto, not fiat money.
Fair enough. No, that's a fair like answer. So we're talking about a bit of like a hybrid approach, basically, a little bit of a private raise and then a sort of a public acquisition, which is great. This is kind of what we wanted to get to. So Anna, if you had a customer that came to you and said, "Hey, listen, I have this epic STO project. It's not a scam, I promise you. How would you help me reach the public and maybe raise awareness about this project I'm trying to raise for?
First of all, we should decide who is our target audience, and the marketing, the promotion of this or that company, or either this is real estate, should be, first of all, we should take into account what we market. And maybe we not even should stick a lot that this is exactly security token offering, because, for example, if real estate object is interesting to this or that investor, they may look into the ways of investing via STO as well. And as for security token offerings, we should educate more and more the public on such way of investing into digital assets. So we should first of all target the biggest channels, and of course as well, if, for example, if we go to some security token conferences, we see different crowd from the general blockchain conferences. We can see more banks interested in such kind of offerings. We can see more institutional investors, some traditional funds, and they are quite interested in this space. So if we talk about media, we should target the biggest ones, like, for example, Forbes, Bloomberg, CNBC, some other channels where there is audience who's looking for what is new on the market, etc. And of course, we take some crypto media with the biggest traffic, because they as well, if you make some posts, get your company into the biggest outlets. Smaller outlets will just copy the news, and you will get some additional buzz as well.
Like a trickle-down effect, basically.
Yeah, and of course it should be a complex approach. We should use social media as well, video marketing, participate well at conferences.
So let me make this question a little bit more specific. I'm sorry to interrupt you, Anna, because I feel like I think one of the biggest issues with the blockchain world is ambiguity, right? Meaning we talk about a subject which is so vast and broad that we can't really give like an exact answer because there's so many possibilities here. So let's shrink this down for a second and talk about specifics. Let's use Jenny and Artem's example earlier for a sort of hybrid raise. Let's say we're talking about a private raise in the beginning, and then we'll talk about the latter public raise after that. So let's forget the public and talk specifically about the private here. So you mentioned, Anna, that people would get stories in Forbes, for example, etc. So what I found is that whenever you're talking to anybody about any kind of blockchain investment, it's not like you're selling them like a piece of real estate. Let's be honest, right? If you wanted to go and like raise $5-10 million to build a building, it's way easier to do that without the idea of introducing an STO. Why? Because for the most part, it's an established industry. And within the STO world and in the blockchain world, it's so sort of small and tight-knit that usually kind of most people in this space are sort of second and third connections on LinkedIn. Let's just kind of leave it at that, right? So with that in mind, I think it's pretty it's a sort of known fact that or a sort of well-hidden, well-kept secret, or not so well-kept secret, that if you want to get a story out in Forbes, you just pay $3,000 and you get that story. It's basically how it works, right?
No, it doesn't work this way.
Oh, come on. I mean, I'm not here to mention names or here to sort of call anyone out, but what I'm saying here is that if you go to an investor and you show them a story in Forbes and they're familiar with the blockchain world, aren't they going to say, okay, or the only thing it's telling me is you've got $3,000 to spend, and you can write something which makes sense and like actually holds water. What do you say to that, Artem?
So as for publications, I mentioned it's as I told, we need to educate investors about security token offerings, because of course, as you told, that it's much easier to sell real estate without like in a traditional way. So we should use these channels to educate investors.
Sure. Okay, Artem, it seems like Anna really wanted to answer that question, but I'll give you a shot now. What do you think?
Yeah, actually, I believe if we want to use this kind of media and like use it as an additional tool to attract investors and persuade them to invest, basically we need to achieve a proper stage of the company development. Yeah, so for example, we need to show them traction. So if we can write in this article that we already collected like specific, like amount of money, and we already have such audience who are invested in us, and we are on this like progress, and we can, like explain and describe it in the article, and afterwards we can spread it out like around the globe, then it definitely can help. If we just will mention about the company, about its ambitions, it won't help. Definitely.
Sure.
So it just it doesn't make sense. So basically, all this PR and additional marketing is just additional tools that helping us to like persuade and attract more people and more attention. But first of all, we definitely need to use like our own network, or just attract a specific right people who will help us with introductions, rising funds, and etc. Because we need to build some traction before we go to the public, yeah, and we need to build something definitely. But because if we just started doing simply marketing and PR, and we couldn't show them the traction, it just will be useless and pointless.
Sure.
Definitely.
So that's I think something really interesting which you mentioned, sort of the sort of differentiation between simple PR and smart PR, right? Because PR is a very, very broad spectrum, and there's many ways to do this. One great example I'd say is like again sort of touching on what you mentioned earlier is you find like an accredited investor or someone that people look up to, and if you can sort of say that this person has invested in your project, then you're going to sort of gain some traction and gain some credibility in the market, and then maybe sort of that 3K spent on Forbes would be justified. But I think one of the biggest issues with that, and I think it's something we've seen like in recent times, right, when the Twitter hack took place, and we're seeing words being put in celebrities' mouths for sort of lack of better words. So I don't know. I'd say 1 in every 8 adverts I see on YouTube is Vitalik talking about something to do with Ether and some shitcoin link at the bottom that has nothing to do with Ether. So it's all well and good to have a sort of a big name on board, but how can we make sure that the public understands that's really the case and it's not a scam? Jenny, what are your thoughts?
Oh, like before you mentioned that if you give money, you use money, you can definitely get on Forbes. I kind of agree on that point. You're kind of right. If I see a project on Forbes, then although I have not decided to invest on them, but at least it shows that they have money, they have funds to run it for a longer time. Like you said, for individual investors, how can they know that this project is not a scam? They have no way to know. Like even for me, I work in this industry for years. Still, I got tricked by the scams. Like in this July, when DeFi is at the really high, like I invested in a few DeFi projects. They look really nice. They got this like a fantastic like team, and they got this like those words that you cannot understand, but that makes sense. Those kind of stuff on their white paper. I invest and I put into the pool, and like 1 week later, the whole pool is gone. Like even me, I work in this industry for years. I don't know how to recognize a scam. Like how can a just normal individual can recognize that? So I will suggest that you invest on those projects that run for long times, like Bitcoin, Ethereum, like those kind of thing. If you don't have the deeper knowledge in this coin, or you don't work for the projects, you just
Sure.
invest on the big names. And Bitcoin has been here for 12 years. And I think for projects, they should not waste money on PR or media before they get the idea or before they know exactly what the regulation is. I would not suggest any marketing like things, those projects who want to do STO in Asian market, because that will be a waste of time, waste of money. Until this gray area is clear, until the whole regulation came out, until you don't have any risk, then I will suggest you to do the marketing, to do like everything you can to push it out. But before that, you have to like think really clear, not just because that you want to spend money or you want to try this new thing out, then you do it.
Love that.
Yeah.
Love that. Thank you, Jenny. That was beautiful honesty, like just straight up honesty. I love it. Artem, what are your thoughts on this topic?
Yeah, actually, I absolutely agree with Jenny, because it's the right way. Yeah, and the only thing I wanted to add is, when you wanted to attract investments, people just, for example, start collecting some, like email addresses of VC funds, looking for some ventures, and trying, just to spam it, and just continue emailing them and asking for money. And all these things, yeah. But the key thing is that if the venture fund wanted to invest, they already know what companies they wanted to invest in, and they got like dozens of such mails. And what is the sense for them to invest in a like no-name company where they don't know any kind of people behind the project, without any kind of experience and previous track record? Because they already know the companies that is growing and that are growing, and they know that it's worth to put some money there, and they're just trying to reach out these companies. So the best way to attract these people is just to continue developing your company, and at the right stage, just open an opportunity for them to make this investment. So the key thing here is just to choose right time and build the company to the right stage, and afterward just give a tool to all these investors and let them come into. And afterwards, you can when the company grows, after you can just make an exit and collect your money. So this is how it works.
Yeah. So in summary, basically, Artem, is if you throw enough shit around, something's gonna stick. That's basically the summary. Like if it's a good project, right? I mean, Anna, what do you think about this? What's your how do you show the public that you have the right investors on board without ever sort of falling into a scam? Because like Jenny mentioned, like experts like yourselves, I mean, get caught up into this. So how do we make sure that the public doesn't fall into the same trap? What are your thoughts?
I think it actually starts from feasibility of making a STO for this or that company. I consider that it is reasonable to conduct it either if you make it as an alternative to IPO, and so the company like in the real world and has already some traction. It's not a seed stage company. It's maybe like Series B, Series C, or later stage company, which has revenues and just wants to tokenize its shares. This way, I think it's a good way to conduct an STO instead of IPO, because it's much easier and cheaper. Or, for example, in case of tokenization of real estate. And as well, a lot of companies, some companies are not really scams. but they just have like some big ideas, but they don't know how to implement them into real life and how it actually works. And so just a lot of companies fail. And initially, they maybe didn't have intention to scam anybody. So, for example, it's not reasonable for a seed stage or Series A stage company to go for STO because it requires, first of all, much more funds for building infrastructure for STO and etc. and to hold it. And as well as for STOs, this space is much more regulated, so it prevents us from scams.
Sure. So this is like basically it's the age-old problem, right? It's sort of people using a blockchain or sort of using something when they don't actually need it, and they just end up creating their own trap. So I'm gonna throw out an argument here, or maybe a possible solution. This is not something I've researched. This is just like something which just came to mind while we were discussing this problem. So we mentioned that we need to sort of find a way to ensure that strategic investors or the right investors have actually invested in your project, right? What if sort of any STO company would take on investment, its initial founding investment, not in fiat, but purely in crypto? And within that crypto transaction, let's take like Bitcoin. Let's say that somebody invests in your token fund in Bitcoin, and within the transaction note, when they transfer their BTC to your BTC as a fund, they would enter their name, for example, Vitalik Buterin. That in itself is going to make the news. And if it's not true that Vitalik would have invested in a token, then he's going to call it out and he's going to say something. But ultimately, the fact that transfer has been made would be entirely transparent, shown on a blockchain, and irrefutable. What do you think, Jenny? What are your thoughts? Am I talking bullshit, or is it a good idea?
And then it makes sense. Like you have some like professionals, like really, like Vitalik, the best in the industry invested in you. That is really convincing. Like if some projects are backed up by Vitalik, I will probably invest in. But I think for STO, I'm still not very sure. I want to wait until this whole thing got matured first before I set foot in this. Like just take the DeFi example again. Like in this July, it's still a very messed up market. Like anyone can get on the Uniswap and do the DeFi thing. And so a lot of people got scammed. So I think before the whole thing got clear, the regulation came out, I would not consider like trying any STO thing. And just like a good project, even if not with a blockchain, is still a good project. We should see the business model behind it,
Sure.
Not the technology. The good business model without blockchain is still a good business. Like Tesla without blockchain is still a very good company. But if a shit project plus blockchain or plus STO is still a shit project,
Yep.
It still got shit coins. So I will investigate on the business model instead of like see what kind of like the method, like how they respond and what kind of like the words we don't understand they use. So I'll dig into the business model, whether the
Sure.
makes
So
sense.
basically, like if we had to sort of put this in layman terms, you don't want to be like you want to be Neil Armstrong, right? You don't want to be the first dog in space. You want the dog to have gone to space, died, did its thing, and then you want to be the person that lands on the moon, which is a fantastic tactic. I can't refute it. I'm just clarifying this here. Arthur, how about you? Do you want to be the dog or do you want to be the man? What's your take?
Actually, I guess this game, when you're just promoting and showing these transactions and promoting that some, like popular people already invest their funds and money to your project, this game is definitely works, and it works for a long time. The only thing that you never know what happens in reality, like on the backstage, yeah, because it could be just simply manipulated, and the people just simply, like give money or provoke them to invest, and because they will be the first one, they will just get returns from like further investments. That's it. So they will just, like start selling their tokens or shares, whatever, and this game like always works, but it really needs to be, like you really need to check it out if is it true or is it manipulated. So this is
pump and dump city, basically.
Yeah, this is just a money game, and as Jenny told previously, if it's shitty project, it will be shitty projects, no matter how like how much money they put into the marketing, and like do the STO or just ICO or whatever. And if the project is really good, they just won't start this money game. Yeah, because they will just like usually such entrepreneurs who just like believe in an idea and find the right technology and what they want to bring to the masses, they just continue developing, and they don't really like think over how to attract a lot of money and how to like build this money game to attract more and more. Yeah, they just continue developing their product and finding the right end customer and just starting like to get in some traction and building some revenue streams. That's what they're usually doing. So you just need, like to make your due diligence on the company, just to take a deeper look and see what is the behavior this or those founder has, and afterwards you will probably understand if it
absolutely works. But I mean, like you touched on something again, like, and this is a sort of standard problem, I'd say, in the blockchain space, which is you should do due diligence. Absolutely, don't get me wrong. I think this is something that most people should do. But if the experts are in a position where they can be fooled, and Jenny, I'm not sort of rubbing salt in sore wounds here. This is like a common thing across the industry. It's not an isolated case, right? So the solution here is, or the issue is that we need to find a common problem to be able to address that said investors have actually invested in this project. Now, blockchain and well, STOs are built on an underlying blockchain, which is all about transparency. So the fact that I think we haven't found the solution yet is a little bit of a problem. Anna, what are your thoughts on this issue? Do you see any way that STOs can market their token while proving that said investor has actually given the money? Is there a framework in your head?
So generally, for me, it looks like it works the same way as in, for example, traditional venture capital funding. For example, when this or that prominent fund invest into this project, others funds take a deeper look into it and jump into investment round as well. And as for blockchain, we should as well check who the investor is, because a lot of investors, they won't just say that they invested into scam because they value their reputation and their credibility and how they appear in public. Of course, in blockchain space, you can see a number of it. Some people who are quite public speakers, etc., and they're advisors of plenty projects. And then you may think like probably those projects are not that good, because first it's impossible to advise like really in a good way that many projects, and maybe they just pay to this like so-called advisor investor like a bunch of money just to be a face of the project, and then you just should doubt the credibility of that investor.
Absolutely, absolutely. And I mean, with that in mind, actually, that, by the way, to anybody in the audience, and like Anna, I think just touched on something amazing, which is absolutely, like, if you're advising 15 different companies, I'm not saying it can't be done, but if you're advising them in crypto, chances are you're not really advising them. That's the sort of diplomatic way to put it, right? I mean, I'll let you guys fill in the gaps. But moving on, I think we have time for one or two more quick questions. Somebody once said to me, or I was on a panel once, and we had this conversation about blockchain and AI, and we spoke about when these technologies will actually become somewhat useful in the world, and when there'll be actual use cases. Because as far as blockchain goes, STOs included, right? Use cases are the most difficult thing to come. This person once told me, they said, listen, in the best possible scenario, or rather in 90% of cases, blockchain will not solve the problem. It absolutely won't, because it's very bad at doing very many things and very good at doing very few things. Blockchain will only be useful, only truly be useful, when you don't have to mention the fact that you're using blockchain, right? So so the same thing applies with AI. When somebody sells you a Google Home, or someone sells you an Alexa, no one tells you, hey guys, buy this AI, it's really cool, it's great. They're like, no, if you want to set timers in your kitchen, Google Home's great. If you want to play music, you use Google Home, and you want to control all this thing with your voice. That's what you use Google Home for. It's not marketed as an AI tool. It's marketed as an assistant tool. So with the same reasoning, how do you guys feel about the marketing of STOs? Do you feel like you should market them as STO projects, or do you feel as though there's some other kind of added value which really makes an STO shine? Artem.
Yeah, actually, I believe the marketing should be really simple, and the approach should be also really simple, because you don't need to understand people how Google works, yeah, how the search engine works. You don't sell in them like this kind of like technology, because no one just understands it, yeah, the like biggest part of the world. But if you just show them the results and show them like, okay guys, in a few clicks you can just find whatever you want in the whole internet, then it makes sense, yeah, and then people just like it and pay for money for that. So the approach should be really simple, I believe, and you just need to just like highlight the advantages of the STO and show how it could be like why it's better. So for example, if we are talking about security tokens, then it goes that it will be much more compliant. It will be like the investors here will be much more reputable, yeah, and there will be much more institutionals. Because, for example, if you are comparing to utility, in this market, the biggest part of people, they are just, they are just gamblers, and they wanted to speculate and just earn like quick money. So they're totally fine with it. They don't care about the project itself. They just looking into the graphics, into the charts, and see like if the price goes down, if there is liquidity, and if they can earn some money here just while trading. So they don't really care about the company, about the team, whatever. Yeah, they just like looking at the numbers. So they don't care about what is the name of this like token or coin, whatever. Yeah, but in the STO, it's totally another game. Yeah, it just more like looks like in a classical market with the VC funds, with the like real companies where you need to make a good due diligence, check the people, and invest in the long term, not short term. Yeah, so that's probably the main difference. And I believe that you need just to highlight what kind of like advantages you have here in this journey while you invest in the securities, and just target the proper audience, because you don't need to target gamblers from crypto, because they won't be interested in it. They wanted to like short and earn just money. That's it. It's not they're not the target audience of these projects. That's it.
So I think you just kind of touched on a great way to close this, and that's the highlight there. Is you should sort of a great factor of any kind of marketing plan is to be able to convey a very complex message in a very, very few amount of words, because people have a short attention span, right? At the end of the day, myself included. I'm a little ADHD kid, basically. So I'll leave you guys with a final question. I'm going to ask this question to each of you, and then we'll end the round. Is if you had to market an STO, if you had to convince an investor why they should invest in an STO versus a traditional security in one sentence, what would that sentence be? We'll start with you, Artem.
Give me a minute to think.
Take some time. Anyone have any answers? Anna, Jenny?
I'll say don't trust human, trust the system. Like in traditional market, like you got a lot of people in the middle, like a lot of people. When there's a lot of people in the middle, there are problems. You can get scammed. But with STO, they are all proceed on blockchain. It's the technology running the whole thing. So I would say in one sentence, don't trust human,
don't trust human, don't
technology.
Trust technology. Anna, how about you?
Quicker process, facilitated cheaper investment.
Quick process that facilitates cheaper investment.
No, quick process, facilitated cheaper investment.
Fair enough. I asked for a sentence. You included a comma. We'll let that fly. That's fine. Bit sneaky, but we'll let that fly. Don't worry. Artem, how about yourself?
Yeah, I probably will say that digitalization is a future. So you need to make another step forward.
Short and sweet. That's why he's the marketing guy. Digitalization is the future. I love it. Guys, thank you so much for your time. Thank you so much for being here. It was lovely to meet all of you. Thank you to the audience for taking the time to listen to us. And thank you, Boris, for having me. Have a lovely day.
Thank you, everyone, for the panel. The discussion was fascinating, and we got so many insights about the importance of being specific in communication, speaking not about like the STO stuff and the benefits related to the technology, but benefits related to the project and what people actually get. Speaking not in complex terms, but simple solutions. Importance of having this strong underlying project. This one is really crucial to get your marketing right. The interesting discussion on actually the role of PR and can the media be as important as they were, given that publications can be bought. So I really thank you for these great insights and greatest discussion from my side. I would add, if you allow me, we have a few minutes before the next speaker joins in, is that, and I think that very often projects don't have to distinguish between their marketing as a product and service and marketing as an investment, because people who trust you the most are actually people who already use your product and find value in you. And especially if you're a B2C company and you have already thousands or dozens of thousands of users, these are your first investors and first evangelists. And I suppose that underestimated channel of marketing many STO projects is actually their existing customers. And one of the reasons why it is underestimated is precisely the fact that many projects do STO or ISO at too early stage when they don't have customers yet. But when the market evolves, I hope we will see more projects, more mature projects that do already have customer base, and thus doing STO will be easier for them. Like if you're a new project and you just launch, you have to spend 10% of target raise to just give your money if no one knows you. But if you're already existing on the market and you have your audience, that reaching them with an investment offer is much easier, I would say. What are your thoughts on that? If I'm not boring you too much.
I'll jump in here actually, if you don't mind, because I feel like I've been asking the questions all night. I'll do a little bit of answering. of answering. I'd say that the biggest problems that I see with an STO at the moment is, besides the sort of lack of legislation, which I think Jenny very rightly pointed, is that nobody, from what I've seen, has been able to sort of position some real USP, some real value add that an STO offers. And I think the reason why that's the case is because of the structure that most STO companies take. So most companies tend to link themselves up with some kind of local authority, and then create a kind of digital share transaction between the ownership of shares and in real time. And that, besides being a really hefty and lumpy process, again, it doesn't really add a whole lot of value, I'd say, because to get there, like, it sounds all well and good, but the road to get there is very hard for a government to be able to tell you, hey, yeah, plug into our infrastructure. We've never met you before, right? So I think the solution is for the company itself, for the STO exchange itself, maybe to have sub-funds, and each fund would own the asset, like the fund would own the building, and then you would trade shares of that building on the exchange. But ultimately, from a governmental perspective, it doesn't really matter. And the result of that is that you can have transparency, and you can have the quick trade of digital assets, and you can have all the benefits that an STO allows for without any of the hassle. And that's why I think STOs haven't caught on yet, because that I feel is the only way to add value. What do you guys think?
I would say STO is just a tool. You have to get this business model right and correct. Like the moderator said, you get your audience, you get those users first, and you got everything ready. People already have the demand, and then you use this tool to like make it easier to make this business like to a higher level. It's not like for most of the projects now, they just want to get into the hype of blockchain, so they this tool first, and then they think of like, oh, what should I do? What kind of business should I put into this tool? Which is like not the right order.
I agree with about mentioned, and that companies should refer to STO when they're at later stages and they already have market traction and known, and because it's first of all quite costly to conduct an STO, and yeah, it's just a tool, and it's and as well, if you're early stage company, you won't go for IPOs. The same with STO. If you're too early on the market, you shouldn't do it.
Yeah, actually, it works in the same way in any section of the world, you know, like in any area, because it doesn't matter if it's blockchain or real estate or whatever. If you want to make business, you just need to make this business. You don't need to to try to find a way how to just make like quick money, you know, because there's no way.
Don't sell the hype, basically, in summary. And I'll add to that, actually, again, for anyone in the audience, just while the sort of next guests are coming on. There's a fantastic podcast out there. It's not mine. But it's a fantastic podcast by a gentleman named Anthony Day. And
Gene, sorry for interrupting you. We do already have the next speaker, and it's just time for the next speech. So I have to.
Sure, I'll leave you guys to it then. Thank you so much for your time.
Yeah, thank you
for a good one.
Panel. Have a nice day.
My pleasure. Take care, guys. Bye-bye.
Bye.
Thank you.
Thank you. Bye.
And I am ready to introduce our next speaker. The next speaker is Lex so calling the global fintech co-head at Consensus, one of the most important blockchain studio that participated in the development of so many crucial infrastructure pieces in the Ethereum infrastructure, including the MetaMask wallet and others. And Lex will tell us about, will provide us with the macro overview of the state of blockchain and digital asset software, the topic where he is definitely one of the most professional people in the world, and I'm looking forward to hearing his thoughts. So we are waiting for the Lex to join the stage. Please let him in. Waiting a second, and we are having I'm actually very proud of the speakers we have here, guys from Consensus, from other big places. That's amazing. Lex, I see you're here with us already. Please say hi to the participants. Perhaps turn on your camera so that we can see you. Okay, while we're waiting to join Lex, I am reminding you that we are also having, except speeches and fascinating panels, we are having a workshop today at 3:50 by GMT +2 at the end of today's session. We will conduct a workshop at which we will present the functionality of Stobox digital securities dashboard, how it can be used to sell security tokens, and how it can be used to manage investor relations. So make sure to check it out. We inputted many cool compliance features there and very slick UX. You will definitely like it. I assume Lex may have some internet connection problems because he joined in, but I can't see him.
Wonderful, amazing. Everything's working. I'm used to a Zoom situation, so you're not supposed to see the 150 little Post-it notes that my son draws for me every morning and puts in a pile, and I can't touch that. It'll just be very upsetting to him. So that's the situation. Let me share my screen. Hopefully that will work. Okay. Can everybody see my screen? Can anyone see my screen? Oh, we have a nice recursive visual. That's perfect. Okay. So that makes all of it easy to jump in and talk about sort of the state of progress where we are today. So my discussion is really a macro discussion. I think it places digital assets and security tokens and the concept of digital securities in the context of broader blockchain development. As mentioned before, Consensus is one of the foundational companies in the space. And I'll talk a little bit about sort of what it focuses on and what it does very briefly, and then primarily spend the time on where the industry is today, kind of globally and broadly speaking, and touch a little bit on the implementation of financial infrastructure based on blockchain within traditional financial institutions, and then talk a little bit about decentralized finance and how it's evolving to pave the next stage for digital assets, whether they are regulated or whether they are internet native. Okay, so Consensus is a blockchain software company that works with both large financial institutions, and so you see the logo print at the top, where we provide quorum to lay down the groundwork for private permissioned networks. And then we also, of course, work with developers and with consumers through both Infura, which has over 100,000 developers using it to build decentralized apps, and then MetaMask, which is the primary way that customers interact with ERC20 tokens and i.e. most public permissionless digital assets are accessed. And so I'm going to start on the institutional side because I think digital assets are in this intersection of the public chain activity and then what the global financial industry is doing. And so we'll start institutional and then we'll go a little bit broader to the public chain. And so often one of the questions I get is like, is it dead yet? Is the whole thing, did it stop? Can it please go away? Like no more blockchain. And of course the answer is it's not dead yet. And if anything, the secular trends are that there is increasingly more investment into blockchain engagements and blockchain-based financial infrastructure that allows for the deployment of digital assets year over year. So if we look at 2019, it was almost a 50% to 100% growth in terms of the number of projects that were being built by institutions, with companies like Accenture and KPMG and IBM. And then similarly, more and more people are spending time on building these types of things. And of course, everybody at this event probably intuitively knows that capital markets and generally value exchange, settlement is a great fit for the manufacturing of financial instruments. And that's due to the core attributes of blockchains, so the special things which are scarcity for digital assets, the fact that you can exchange them, you can build markets out of them, that they are composable infrastructure rails, meaning that you have payments and equities and venture capital and real estate investment funds and cars and art all using the same standard is unbelievably powerful. And on top of that, the transparency and data accuracy of these networks allows for compliance to be stronger than ever before. We just have to build it. So the claims around KYC, AML, and so on being harder on these networks, in my view, are absolutely false in the sense that there is no better infrastructure on which to build kind of the right elements of customer protection, because again, everything is programmable and composable. And so if you look at the large names, there's almost no bank in the world that isn't touching in some sense digital assets and doesn't have a head of digital assets or a blockchain group. Whether you touch JP Morgan or Citi or the Swiss Digital Exchange or Santander or SocGen, over and over and over again, more and more banks are committing to building infrastructure, financial infrastructure that moves around digital assets. And if you look at the really large registries, the CSDs, settlement organizations, and they're different depending where you are. They're different if you're in the US or in Europe or in France versus the UK, or in Eastern Europe or in India versus China. They're going to be different entities with different goals. But what you see are national sized entities working on stock registries, on security settlement, using, again, programmable digital infrastructure, programmable blockchains and DLT. And if you look at regulation's coming along too. So even in, Europe is sort of in the middle in terms of its risk tolerance, but we now have draft regulations that's saying a CSD can operate a $2 billion blockchain-based settlement system, and or 2.5 billion euro is the limit. And so this is in the most conservative part of the industry, right, which is very encouraging. The institutional capital markets associations have started to answer for themselves the questions of what kinds of assets are there, how do you go from fiat to crypto, how do you do delivery versus payment, what is the role of tokens and stable coins versus traditional monies and bank accounts, how do you think about issuance? And again, in the most conservative part of the industry, we see a lot of thinking and design and architecture for how to interact between DLT platforms, native public blockchains, and traditional systems. And of course, if you look at really what's the technology that's driving this on the enterprise side, it's going to be a choice between Ethereum in the number 1 or number 2 spot, Ethereum and Quorum being the same protocol. Hyperledger Fabric backed by IBM is the number 2 protocol, and then R3 Corda being the third. So that's where kind of the battle lines are. And I think the interesting thing to watch out for is the transition from private blockchains, which is what all of these enterprise things are, to public Ethereum, which is a broad mainnet. It's been up in production for 5 years. It has the largest developer community. It has a lot of the native digital asset tokens, both in terms of STOs as well as decentralized finance infrastructure. And so it's important to watch how traditional institutions interact with that mainnet, and projects like Baseline or Enterprise Ethereum Alliance, or the Linux Hyperledger project. Those are all steps towards incorporating a large public chain into that traditional infrastructure. And a lot of the enterprises that today are still hesitant about mainnet are actually doing experiments and thinking about and trying to connect into it. So something like 30% of the folks who are building out blockchain projects inside of institutions are thinking about integrating into mainnet, which is where most of the crypto ecosystem really lives today. Okay, part of this conversation, of course, is CBDCs and central banks. We know that China has seen about $300 million worth of volume in its digital currency. I think there's lots of things to say about whether that's a cryptocurrency and that blockchains are not involved, but we know that it's a national priority for China to deliver a blockchain services network and to own those financial rails. And so we at Consensus are engaged in 4 CBDC projects and are very hopeful that there's going to be kind of cross-national cooperation for the digital euro, for the digital dollar, and to have large rails that would interoperate with the public chains, and in particular Ethereum. I mentioned the business services network. And so the question is, where do we go from enterprise? How do we transition from enterprise to security tokens and digital assets to decentralized finance? And there's kind of a crypto maturity curve that we can talk about, which is traditional institutions will start with just this concept of mutualizing data, of taking workflows and taking information like account opening information or price information and anchoring it to a blockchain, just to say, this is our shared view of the world. And in large part, that's a immutable shared database. And then once you have that and you've embedded workflows into it, the question is, what do I apply it to? How do I apply it to something that matters? And so that's where security tokens, in large part for alternative investments, get packaged in, right? So tokens are a hyperlink to the real world, where the real world has a large pack of legal documents that are associated with some asset. And over time, that hyperlink becomes richer and richer in the sense that the token becomes smarter and has more things it can do, whether that's governance or cash distribution or staking functionality or what have you. And so as you go up this maturity curve, what you see is that the financial software that was used in the past as an abstraction to to tracking a security as a ticker, for example, or as a QSIP, those abstractions go away and start to apply to the underlying instrument itself. So your collateral management or portfolio management software starts living in the network. Your trade order management systems and your rebalancing systems start living in the software. Your risk management systems start living in the software. And then you get to underwriting and trading and issuance living within the network itself. And that's how we get to the decentralized economy and the type of environment that we see in DeFi. Not necessarily the exposure, but the type of manufacturing that we see in DeFi. So I think, to categorize different buckets, a lot of the enterprise activity is still focused on data and just standing up the network. A lot of the digital asset STO activity has packaged up certain exposures, mostly private equity or early stage, and is looking for a young network, like a young public network, to distribute that exposure to people. And there's an audience, but there's potential for a much larger audience. And then in the long run, the whole ecosystem which is necessary. So from issuance to trading venues to asset allocation converges into the network itself. Okay, that was a lot of talking. So I'm going to take a coffee break. Okay, my coffee break's over. It's okay. We're fine. All right, so I'll touch on DeFi and then open it up. So DeFi is the concept of, it's a twofold concept. One is that you are remapping the manufacturing, the actual infrastructure of finance into the programmable network. And then number two is you're remapping the exposure into new types of venues. And these are important things to kind of follow and understand the difference between, but it goes across asset classes. It goes across, commercial banking to exchanges, to brokerage, to insurance, to payments, and so on. And Ethereum is the largest footprint in terms of where this happens. And we talked earlier in the conference about, having a market and having clients and so on. And it's like the iPhone or Android, developers build where there are users. And so Ethereum has now about 100 million users, of which about 500,000 are focused on decentralized finance. There's about 3.5 million contract calls executed per day. So the software actually running on the network. I believe about 15 billion in terms of collateral deployed, about 20 to 25 billion of USD equivalents in the form of stable coins, which are largely powering the value transfer on the network. So most of Ethereum is denominated in the US dollar. And there's a integration and complexity of various protocols, whether it's the money market protocols or the lending underwriting protocols or the trading protocols. And that complexity shows you kind of the maturity of the ecosystem. So we're going from just a few players trading between each other to something that looks a lot more like a real marketplace, a differentiated marketplace with players that perform quite specialized functions, which again points to a maturity in the space. And so you can think of DeFi, and I could talk about this for hours, but kind of the high level is that if a blockchain is a set of nodes, and in the Bitcoin blockchain, it's a set of nodes with the information about the balances, the ledger of Bitcoin, then confirmed through mining activity and consensus algorithms. With programmable blockchains, each node also has essentially a computer in it, and that computer can execute software. And so you can build machines that sit on the network, which then use the same consensus algorithm to come to a version of truth and scarcity. And you can have different vending machines that function as banks, as lenders, as exchanges, and so on. And so we've seen novel ideas in terms of automating market making, which allows for exchange to happen between a vending machine and a single party. We've seen the invention of lending markets that create interest rates and yield across lots and lots of value pairs in in a very open and interesting way, and create asset class exposure. And I think we're going to see more and more of these vending machines popping up on the network and replicating the types of things that traditionally we would expect human organizations to do. And then the last thing I want to leave you with is just the concept of the distinction between the protocol and the asset. And so there are two innovation tracks happening, both of which are very valuable. One is the innovation track of what is the machinery by which the financial instrument is manufactured? And so, how do you issue the digital asset? And then once the digital asset exists, what exactly is it? How does it travel around? What account does it sit in? How do you access it? What can you do with it? How do you trade it? How does it do governance? Who owns it? How do cash flows work? Et cetera, et cetera. And so that's what you see on the left. And what you should track in that case is the total sort of assets under care. It's not custody, it's not management, but it's locked assets in those protocols. And then on the right, there are assets that those machines make. And that's sort of a lot of the speculative stuff that people are obsessed with, are the trading, the exposure that comes out of these machines. And I think there's lots of interesting and differentiated exposure that comes out of these new projects. But I think you can believe in one and not believe in the other and still be very bullish on this space. So to sum it all up, we see strong activity on the institutional side, primarily still building out consortia networks and trying to figure out the bridges into the traditional economy. We see an explosion of decentralized finance innovation that's creating more sophisticated machines that can process digital assets and that can help make them valuable, because it gives people something to do with the things that they buy through the issuance process. And with that, I'm going to pause. Thank you very much.
Thank you very much for your speech. It was fascinating, and we were very interested to hear what actually happens on the institutional side of things, because we are here all very in, I would say, more startup stages, most of the companies and participants, and exposed to early stage tokens. So hearing about what large companies and enterprises are doing was very interesting. And I have so many questions to ask, but unfortunately, it's time for the next speaker. So I'm very grateful for your speech. I hope that we can one day continue this conversation, and interested viewers can reach out to you to ask questions or think what collaboration opportunities are there.
Absolutely. So, I'm easy to find, at Lex Sokolin on Twitter, and of course, consensus.net. Contact us. Happy to connect and happy to help this ecosystem grow and be successful. Thank you.
Thank you. Good luck developing the infrastructure for us all. We are using Ethereum as well, actually. Okay, and it's time to introduce our next speaker. The next speaker is special one, because he will accept an individual speaking slot. He is also participating in the panel, and he has a lot to share. Welcome, Roel Wolfert. He is a former vice president at Visa Europe 6 years ago, and later he shifted to doing business in the digital securities space and building digital securities platforms and assisting companies with digital securities offerings. And he's doing some cool, innovative stuff in Netherlands, which you will hear about soon in just a minute. So, Roel, it's a pleasure to have you here. Please join into the call. Yeah, I can see.
Hey, Boris, how are you? You can hear me? You can see me?
Yes. Yes.
Okay. Well, you see my cuckoo's clock behind me, so that's to keep the time for everybody. And a green area, locked up at home again, but enjoying the sunshine from remotely. So thanks for the introduction, Boris. I will just make sure that I share. Can everybody see my presentation now?
Yes, we can see your presentation.
Okay, so I'm just gonna put it on slideshow. Okay, great. So I'll be in the panel a little bit later on, but maybe a little bit of an introduction here. So compared to the other speaker, I'm a little bit more gray and older, but I'm 25 years in financial services and technology, and have done quite a few things around the world that changed, hopefully, the world a little bit to a better place, at least to an easier place, like global introduction of contactless cards. When I was an executive at Visa, I took part in some initiatives that are Ideal, which is one of the first debit card-driven internet payment systems. So that's already quite a while back. I was involved in the first mobile payments pilots in Europe, early 2000s. Things like that. So quite a background also in transferring funds. However, today I am an entrepreneur. My company is called Business Creation, and we are a redevelopment company, or I call myself the business doctor. If you're in trouble, we can help. That's basically it. And since we do a lot in technology, and we've been active there, we also got involved in blockchain initiatives. So we founded a company called Liquidity, which is a tokenization platform, about 3 years ago. And because we saw that market moving, we also, with all the problems that were there, we set up a foundation here in the Netherlands together with Allen Overy, PricewaterhouseCoopers, Kastbank, which is a custodian here in the Netherlands. But also small tech parties like Liquid, like Valut, and legal experts like Allen Overy. So a whole ecosystem representation. And that has resulted in the Crypto Delta Foundation. And the whole purpose, I think, of Crypto Delta Foundation today is to create and help and support trust and show opportunity to entrepreneurs and investors what's going on. Yeah, we figured out that with all the cryptocurrencies, 90% didn't deliver what was promised or anticipated. The good news is 10% did. Yeah, but there was a lot of lack of trust in how to fund, in money moving away, how does a token work? So many questions that we felt that there was a better way of doing that. Now, most importantly, Crypto Delta is focused around offering options for liquidity for companies and investors. So how can you trade faster, take partial stakes? As a company, how do I get access to funding? And that can be one way. I'm a startup company, I need money, or a scale-up company, I want to expand, or I'm a company and I have, 500 pieces of real estate. How, do I sell a complete building, or can I sell parts? How do I increase the liquidity of what I have? And we are really there to help with the trust in the ecosystem so that it can scale. So to put it really practically, companies call us, they join us as a member, or they ask for an expert session with some Crypto Delta members that we select based on their question. And we just give them 1 or 2 hours and basically explain them everything that they need to do to resolve their problem on a high level. And after that, at least most of the companies or persons can make a clear decision in which direction they want to go using blockchain technology, yes or no, how to get the funding, or how to work with the digital assets, or whatever it may be. So Crypto Delta is really there to stimulate the innovation by facilitating an end-to-end ecosystem for digital assets. We do that for the whole world, but especially for the Netherlands, because we have some very special interests here that are happening. Now, there's one thing I wanted to share with you before we start, and this was in Moscow in December 2017, if I'm not, no, sorry, maybe 2018, but this was the time that me and one of my business associate, Herman, we actually went there. We spoke about, in the middle of the ICO hype, about issuing a real stock share on the blockchain. And I know that initially there were like maybe 20 people in the room. And whilst we were progressing the speech, I think at the end, the people didn't know how to get into the room anymore to understand what was going on, because at that point in time, I think we were probably the first company, at least in Europe, that we know of, to announce a clear share to be issued on the blockchain, Ethereum blockchain. That share was from a company called Bilex. That's one of the companies. It's an IT company that we used one of our own companies to actually do that. So we've actually done one of the first STOs myself, and since then I've been helping and working with probably over 100 companies that are in need for some refinancing, capitalization, but also work with investors that want to invest in tokens. Background, so quite some experience. I'm Dutch, so I'm going to say it as I see it. Doesn't mean I'm necessarily right, or you don't have to agree with me. But I'm also open to questions, and I'm open to opinions, and I'm easily convinced with good facts. So what I want to do today with you guys is share the top 5 mistakes or don'ts that we came across, and share a little bit more about what we feel should be best practice to get this industry to really move faster at a bigger pace, at a bigger scale. Because it's not just technology, it's trust in all parties there, and everybody has a specific role to play. So without further ado, let's go in there, the top 5 mistakes. And as I said, I worked with quite some entrepreneurs to help them, raise capital through security token offering. But I've spoken with even more, many more. And what I generally figured out is that a lot of entrepreneurs are not ready. Yeah, they don't have the knowledge or experience to see which bumps are ahead when you go public. Yeah, because it might not be an initial public offering, but you get multiple investors, and it's not 1 or 2. It's generally hundreds, if not thousands, of new investors, and that means you are public in that sense of the word. And generally, entrepreneurs that I spoke with, as I said, 9 out of 10, I just advised, don't go this, don't do it. You're not ready for it as a person, or as a management team. What people generally don't see when you explain to them, you're a public company. So that means that people will talk to you, and they want to talk to you. They want to hear from you. They will shame you and give you glory on internet, social media. Be ready. And some people just find it very difficult to deal with because they feel threatened or hurt or things like that when you explain them and show them some examples of mistakes. And we all know the examples for CEOs of publicly listed companies, but maybe when you do an STO, you're not in the CNN news or whatever news, but you might be in your regional newspaper. And that still hurts because your neighbors might know and other things. And that really requires a certain attitude and knowledge how to deal with that. Good training on PR, media relations, public speaking, understanding how social media works, how to respond, how to set up your organization to deal with social media. And it's not just during the fundraise, it's mainly afterwards that it becomes the hassle. It also means you have to spend quite some time on dealing with these items. So 20, 30, 40, sometimes even 50% of your time in certain weeks, like quarterly results, half-year results. It's quite absorbing, and that takes focus away. So you got a lot of money, but you've got a lot of work to do. also what a lot of entrepreneurs that I spoke with don't necessarily see, and that really needs to drill down, is that when you get money, you have to give something back, like voting rights or dividends, or and you know, most entrepreneurs, and I'm one myself, we want to be in control of what we do, but by accepting funds from outside, from investors via security token offering or whatever means, that means that they have a say in your business. And you know, most entrepreneurs, or a lot of entrepreneurs I spoke with, they do not have that. You know, people have that say. Anyway, that is number one. So if you're an entrepreneur and you're listening to this, ask yourself those questions. Am I willing to be a public figure? Do I really want to spend this amount of time on informing investors and working with them going forward? Yeah, and be transparent on everything, et cetera, et cetera. Number two to work with. I think, especially also at events like this, we see a lot of focus on technology and arriving. And I'm a big tech freak myself, so I love this. But if you're an entrepreneur and you're working to raise money, it's about your financing need and the leverage. So raising equity is one side of it, but you need to have a good understanding of what your blended financing mix looks like. So ultimately, when Adyen or whatever company went to the stock market, they went there to get equity side, and against that equity side, that changes their lending facility, interest rate go down because your balance sheet changed. And that means that you, rather than raising 10 million in equity, you can get 5 million in equity and 5 million in additional debt, because that, you know, doesn't impact your company. Actually, it makes your company look positive. So with the total raise of financing, with so much focus on, you know, giving an asset away, whether it's a share or a brick or whatever the asset is, and put that against money, you know, quite often you see that traditional financing is about blended finance to optimize the value of the company, create the liquidity that you need to really grow without giving away so much of the shares or assets in your business. So traditional financing rules still apply in a high-tech new world. Yeah, and a lot of the people that I spoke with, I'm not talking about bigger banks or financial institutions, but generally mid-sized entrepreneurs, scale-up entrepreneurs, they haven't got the experience to understand the blended finance model with some stock, some equity, business bonds, high-risk short-term lending, long lending, cash pool facilities, et cetera, that need to be understood properly. So, you know, I would generally talk to a financial advisor, and not a personal financial advisor, but a business advisor, about fiscal policies, about balance sheets, and how things. But above all, you know, look at where your personal desires are and what you feel comfortable with. Because some people say, okay, I just give 3 million of STD. I don't want any bank loan against that. I feel more comfortable here. But be aware what the possibilities are and what the potential risks are out there. And there's too little emphasis in this industry, from my point of view, because you know, that's generally not spoken about how you do that. That's taken for granted, but a lot of people just are not aware. Number 3, trust. So, you know, I got entrepreneurs coming to me, oh, I've got these solar panels. That's a really great asset, and solar, or classic cars, or real estate. You know, that's all great. But trust is, in this world, is just not a single thing. It builds up. And in order to convince investors to actually be with you and work with you, you need a little bit more than a good asset. So you need a solid company, and please don't register it in the Isle of Man or in places like Malta, or because you need to protect your retail investors. Yeah, so make sure that you're in a proper governed place under EU law or American law, and make sure that the legal entity that you choose is something that everybody can understand. Like, in the US, a Delaware construct, everybody in the US knows how that works. Yeah. In Europe, there's only one single entity that is similar across all countries. That's the cooperative model. Yeah. So these legal structures have same legal background in all the countries. Hence, you can reach out to as many people in all those countries without having to go, oh, I am a GmbH in Germany, or I'm in a special purpose vehicle in the Netherlands, or, understanding things like that is quite essential when it comes to trust. Now, trust is also mean, be clear about your planning. Yeah. So don't give some vague plan, but stick to proper standards of showing financial results. And please, people, let's get rid of, I have an ID, give me 10 million and I'll realize the ID, because that time is over. And let's really finance solid companies, solid startups, maybe in sense of a fund, where 20 or 50 startups are there. Like I see accelerators here in the Netherlands that are putting startups in funds and then tokenize them and give them financing needs based on the milestones that they achieve. But at the same time, that gives trust to retail investors, mainly, that it's worthwhile doing, because a retail investor in itself in a single startup, that is way too risky profile, because startups is a numbers game. Yeah, and if big players like incubators and startup accelerator programs or venture builders do this with portfolios, then all of a sudden there is a new type of investor there, because there's trust. So the trust of the underlying asset, that's one thing, but make sure that you have solid people in your management that do look good in public, because people will Google you, and they will look into where the legal entities are, and that does matter. Same as experience, ability to obviously, if you're having a tech company and you only have marketing people there and no tech experience, that doesn't work. But that's stating the obvious. The need for marketing. When raising funds, and I'm sorry to say that 80% of the work is marketing. Now, there's a difference between B2B companies and B2C companies, because if you're a successful B2C company, the best way to raise the funds is to go to your customers and actually get them addicted to, because they are addicted or they like the product or service that you provide. It's easy to convince them, package a piece of ownership in exchange for equity and additional funding in that game. And that means that will allow you to do that. But still, keep in mind, you're selling a financial product, and that is still restricted. If you are the company owner, you can do it, but don't just get any marketing agency to place that, because if you're selling a financial product, if you use an external party, it needs to be a licensed party to sell your product, no matter what type of financial product that is, so to say. So marketing itself in the B2B space, if you don't have followers, then the game is find a few big investors, get your name established in the market so that people can find you, your target groups, your target customers. For example, if you are a B2B firm in the software space, let's say to legal firms, then go visit legal firms. Again, go visit your customers to be your potential investors, or work with exchanges. So there are security exchanges that are licensed, like N Exchange in the Netherlands. There's a few ones arising at the moment in Israel. There's some in the UK that's recently been established, and they have big, or at least a source of potential investors, like 10,000 to 20,000 to 50,000. And that also gives you a marketing channel to find potential investors. But the most important thing with marketing is, of course, to have a great value proposition, a good product at a great price. And price is a sensitive thing, because then we're talking valuation. And valuation is a sensitive topic to entrepreneurs. We have the potential of and the investor says, yeah, but you only make X amount of revenue, I'm not going to pay you now for your full realized potential. So I think in that sense, valuation, in my view, I always advise is to use 2-3 methodologies, and talk to some initial investors, bigger ones, and see what you can get at, and then raise the rest in the market in that sense. But valuation is quite essential in any investment proposition. I realize we're a little bit short of time, so let's do it fast is the number 5 mistake. Yeah, people get enthusiastic about opportunities of blockchain or fundraising, and they get in fast. But fast is not necessarily the best thing to do, because you need to get your timing right rather than doing fast. And in order to get your timing right, you need to organize the team. Yeah, your legal advisors, your marketing people, an exchange if you need it, your internal staff, your legal setup as a company. All those sort of things need to be organized and need to move in sync. Also inform your customers, build a group on Instagram, on LinkedIn, on Telegram, on multiple channels. These things take time. Don't have a white paper ready and then say, oh, let's do marketing now. No, the marketing needs to start from the moment that this idea incubates. Yeah, and it should be a decision criteria whether you can actually make it and earn the money and get there. Last but not least, in getting the timing right, it's important that you get the experts, because if you make a mistake, your timing sets back in time, and time is money. It costs money to do things like this. I think in the earlier sessions about marketing, it was already said an STO is expensive. Well, it's not the technology that's expensive, but you got to put quite some marketing money in, and that's not €1,000. That's tens of thousands or hundred thousands of dollars or euros, depending on the capital raise that you're going through to make it happen. And that is really where you need to get your bang for a buck, so to say, and get it out in a proper situation. Now, I think I've talked you through at least the top 5 mistakes that I've seen companies being made, and therefore their STO or fundraising actually failed. Yeah, and in summary, entrepreneur was not ready. Yeah, hence they didn't know what they were getting into, and the crowd noticed that. In the choose your right financing, get your marketing aligned, don't go too fast, but also don't go too slow. I've seen companies hesitating so long that the momentum disappeared completely, and they were like, yeah, we shouldn't have done that. Yeah, why waste a year and a half on thinking about it? So these are quite some essential things, and hope they're useful to you. And if you ever plan to do something, just go to the website, send us an email on cryptodelta.nl, and we might bring you some experts or personal advice or whatever. By the way, all those sessions are what we say free of charge. Obviously, we'll try to convince you to become a member of the ecosystem, but that's optional. We are here just to help out and make sure that everybody gets the knowledge and experience that they need to achieve their objectives in this world of decentralized financing and crowdfunding.
Thank you for your speech. Sorry for interrupting. We have the next speaker coming in. You have spoken, I assume, more than 20 minutes. Thank you a lot for listing these mistakes. I am definitely sure they saved time and money to at least a few people here. So thank you a lot for your speech, and waiting for you on the panel. And
my pleasure, Boris.
And we are ready to introduce our next speaker, Fernando Verbonen, who is a pioneer of tokenization of rare cars. He will tell you about how this can be done, what is the value of this unique asset, and how you can get your exposure as well as a story of how it all started. Ray, it's a pleasure to see you here.
Hello, everyone. This is Ray Fernando. Pleasure to be here and share with you a very exciting topic, tokenization of collectible assets. I don't know if you guys get to see the desktop. I would share with you, or a little presentation, so hold on a second. All right, so we have
see your screen.
Okay. Yeah, so tokenization of assets of collectibles. We're in 2020 and there's a pandemic and global markets and turmoils. So the question is, what is that that is out there that can, protect us, or what are those safe havens? And until recently, pretty much the very wealthy would, going to gold, of course, but also other collectibles, rare cars, paintings, wines, art, stamps. So these are objects, real world assets that these folks were essentially buying initially, to use one asset, and at some point they understood that some of these assets were in fact increasing in value. These are, and of course, I mean, when you look at certain cars or certain watches, what you probably notice is that some of these assets indeed appreciate more than others. So what started as a kind of a hobby in the last 10 years has seen an unprecedented professionalization, put it this way. And this is the topic I would like to share with you today on this next minutes. I'm the co-founder and CEO of STO, a platform that focuses on these collectibles. I launched this company out of a workshop at Oxford. We focus on blockchain strategy, and at that course I learned that tokenization could essentially unlock the value of certain objects which were, let's say, reserved to the very wealthy, and most importantly, which were not liquid. So when you look at these collectibles, you see watches. You probably have seen a Rolex, Anton, that it was sold initially at market value, $10K, $12,000. But then you go ahead and search it online, and then you see on eBay that it costs actually $20,000. So what's happening here? There's also other types of assets, such as art. You probably heard about contemporary art or masterpieces, maybe even some auctions talking about, this newfound Da Vinci and hitting, record heights. So very public events, and also wine. You see some of these wines aging with time and becoming clearly more delicious, but also pricier. And you have cars, classic cars that might be found in a barn and suddenly make a splash, and there's a group of professionals that restore it, maintain it, and then they claim that the car is worth millions of dollars. So there's a research house called Knight Frank that is actually been tracking the price development of these objects. And what they identify is that, especially at that point where there is very much uncertainty in the markets, investors in general like to go for real assets. And what they saw is that, in a way, collectibles sort of resemble that hidden gem for financial assets, because not only they represent a monetary purchase. I mean, one of these cars might cost $1 million, a watch might cost $20,000, but the price of this asset changes or might appreciate over time. And what they found out is that, especially in the financial crisis in 2018, and looking at the price of these objects 10 years later, you see the development of this price, and you see it exceeding other indexes. So clearly what we see here in the last 10, 15 years is a professionalization of the space, and an object that is becoming an alternative investment and a whole new category that brings future growth for this space. So especially in the case of collectible cars, you see that their price have increased the most. In this chart, I captured the 194, so 194% appreciation. And when you look at the longer trend, 2007 to 2019, you see a particular brand, Ferrari, that has increased over 340%. So there's a few folks or companies, Knight Frank, tracking this, but also traditional institutional banking institutions are aware of this. They might not yet have any, financial products, but they do engage in some sort of PR or so. There's also some interesting indexes, basically, that track the development of not only one Ferrari, but several ones. So a survey launched by UBS asking basically their clients, where do you invest your portfolio? What kind of assets do you allocate? This is where clients above $1 million, and it was a global survey, found out a very interesting statistic. So when you look at the portfolio of the wealth, you see that investors have placed their savings into equities, bonds. These are the so-called traditional ones, but also into some real estate, maybe a house or a couple of multifamily homes that provide some nice yield. And you see that these investors also invested in private equity, such as maybe in startups, 5% of their total portfolio. But collectibles, interestingly, represent 10% of the total wealth. And interestingly, when we look at what includes collectibles, you see gold, of course, but you see fine art, precious, stamps, antiques, automobiles, and wine. So this means investors or high net worth investors invest 2 times more in collectibles than in startups. So when you look at the market, you're talking about, niches, clearly. For instance, the classic car alone is roughly estimated to be $20 billion. But you're talking about a nascent alternative asset class. And these folks already invest in these cars or paintings because of the appreciation, the inflation protection, and the diversification. Of course, some of them might enjoy them, but what we learn is that a lot of them do so for these reasons. So then the clear question is, why aren't we all doing that? And the main challenge that we see across, enthusiasts in Germany, there's 50 million people who believe or who think classic cars are of interest and the alternative investment potential is access, basically. The access to these assets is extraordinarily hard. They're usually sold through very narrow networks, so you cannot, find them easily, even if you have the capital. And then, of course, some of these assets are very pricey. So a classic car might cost up to $50 million, or a painting, even more. And even when you buy the car, if let's say not so expensive, but you have it, then you have to make sure that it's maintained, stored, and and protected by experts. So this is clearly not for everyone, especially also when you need cash, it might take time to sell it. So the way we see, the way this is being solved today, or opening, or the way this is changing, is through tokenization. And I'm quoting here a famous Swiss entrepreneur, and he's highlighting how tokenization is opening this asset class, real estate, luxury cars, or fine art, and making it essentially accessible for more people, for everyone. And this is clearly happening for 3 main reasons. On the one hand, you have the blockchain regulation, which is being, adopted and implemented in countries like Switzerland and Liechtenstein. Roel mentioned about the jurisdiction shopping. I think I agree with him. Having the right framework that protects both the investor and the founder it's definitely a must. And you have, of course, the tech development. More adoption of wallets are happening. Even in qualified investors are seeking now exposure to these assets, but also the infrastructure across, institutional custody services and so on is being adopted. You also have, of course, a discussion about the pandemic and the monetary expansion. So what does it mean to bring so much capital, so much dollars across different economies? And how does that disrupt the prices of real-world assets? At the end of the day, these are scarce. There are just that many of these assets. So clearly, the supply of demand and demand logistics might change there. And the last is that clearly through this whole virtual setup, even today on this virtual conference, everyone is clearly adopting this idea of interacting with digital platforms, investing on them, and essentially gaining an overview to directly to such a means. Compare us to before, where you had an expert, perhaps a meeting at a man, and then they would advise you and so on. So this phenomenon, these aspects are changing and are enabling this opportunity. So basically, well, the way this actually works is not so trivial. Basically, when you look at a certain asset, there needs to be a clean and simple way to link that asset into whatever is in the investor's portfolio. So in this case, the digital asset instrument or security. So the path, one of the paths that we follow here that we're very proud of because it became the world's first tokenized car, is to set up essentially to source a car. So you have a car that is ideally 10% below market value, therefore has some upside potential. Then you set up the regulatory qualification together with the regulator in order to grab this asset into an entity that has been approved and regulated by this local financial entity, and basically enables you to protect both the investors, holders of and investors on the assets, as well as the founders and the team, and basically also enabling the security to become compatible across the current standards out there. So once you grab this asset into that framework, we go ahead and basically raise the capital, and this is done through various means. We have sources, brokers that might bring some initial commitments. We have the online community who learn about us, basically chip in, and this is all captured into kind of this crowdfunding model. At that point, this event decides whether there's actually a commitment and interest from the community in this asset or not. So if there's none, clearly the funds are returned to the investors and the asset is returned to the car owner, so there's no deal. But if there is a deal, then it moves into the token issuance or security issuance setup, in which the investors get a digital asset that they can hold in their wallet that has a direct participation in the economic benefit of the underlying asset. This enables them for the first time to have a fraction or to participate in the economic exposure of a Ferrari F12 TDF, of later on a Picasso, and therefore build sort of a 21st century portfolio. And on your platform, through this digital platform, then you get to see these, a dashboard where you see the development and so on. So this is how an issuer, an investor, can sort of benefit from this. Now, through this regulatory qualification, you get access to this directly. And of course, when the exit comes, when there's a purchase of the asset, basically everyone we distribute the proceeds directly to the investors. So that's essentially how it develops. And I mean, in order for this to happen, you need to combine fintech and regulatory innovation. So when we look at the issuance platform, clearly we're looking at the handling of the digital assets, but what becomes more relevant going forward is how to address the specific needs for tokenization of collectibles. And interestingly, in the space of collectibles, you see that the tokenization becomes rather a second topic, but the sourcing of this, it becomes more relevant. So the idea here is that in a way, the community engages or participates in the sourcing of these assets. And the reason is why, finding these assets is not trivial. And of course, having devoted community members globally located would bring this into a new level. So this is an example of an asset that our team just successfully tokenized. The car is, as you can tell, is not an old one. It's not a classic one. It's a rather new one, 2015. However, it's a limited edition one. So there were 799 vehicles of this one specifically, and basically, it was sold at an auction in 2016-15 for $1.5 million. So you're looking at a car that was sold by Ferrari for $500,000, then brought to an auction for $1.5 million, and we managed to source it for 1.1. So the token itself, we believe of this as the next generations of tokens that in a way represent real assets. It has the legal backup of this prospectus. It has the compatibility with the traditional world, the so-called IC number, but it can be split, by $1, and this is quite impressive. So basically, in the future, this token is exchange ready, so we can list it at an exchange, and anyone in the world can buy a Ferrari F12 TDF for $1. And this alone enables all sort of innovation and products to pop up. And of course, this first one, was featured everywhere. But we're very excited to see more assets coming, and we see here the pipeline of, other collectibles, even classic cars, but also very exotic ones. And this is the very, very exciting field. And of course, when the way we're collaborating with this kind of with the current ecosystem today is that a single entity cannot solve cannot unlock the whole value of art. So we're building this kind of ecosystem with private banks, with exchanges, and with different providers, service providers, in order to enable a compliant distribution. And basically, what we see today is really three steps. So the first step is genuinely to deal with qualified clients. They no longer need to put very big amounts. They can start with $100,000. And here we provide them a proper investment report about certain assets on a frequent basis. And this this report provides some, guidance, some intelligence, some research findings and insights, as well as investment implications in the whole ecosystem. And basically, they decide whether to participate in a single asset or in the pipeline of net assets, but by discussing directly with our team. And then in the second step, we see, of course, retail as the key winner in this. We have millions of Germans, and there's an auto Geneva Salon with millions of attendants, enthusiasts who see the assets of these
right.
These assets appreciate and yeah.
I am to interrupt you. Your speech is fantastic, and I am sure you can talk about tokenization of cars for another 5 hours. We have the next panel starting right now.
All right.
So I thank you very much for your speech. Bye.
Bye.
So many things to discuss here. I also wanted to ask a question about NFTs as collectible. We have a Best Media Award on this conference in the form of NFT. So very interesting discussion. I hope you can jump in someday. And now I'm ready to introduce our next panel. Thank you, Ray.
Thank
you. Bye.
Ciao. Bye.
And it's time for the next panel related to success factors of digital assets offering to happen. We have amazing speakers. They will introduce themselves. So practical professionals that are operating actual tokenization platforms and executing STOs will share based on their own practical successes and failures, what works and what don't work. So I am really excited to hear the actual best practices of the industry. And waiting for the participants to join. I see everybody on the backstage. No one is late. So, yep, please, admins, are the participants here?
Hello, everybody.
Morning,
Hello.
Afternoon, evening to everybody.
We're waiting for one more participant.
Hey.
Yeah. Nice to see you all. Guys, I am sure we're going to have a killer discussion. So leaving you here, I am on the background if you need me. Have a great panel.
Thank you, Boris, for inviting us, and thank you to the rest of the panel for being here today. It's definitely a very distinguished set of people that have chosen to join this. And while the introduction sort of stated that we will look into what works and what doesn't work, I assume we might not be that binary, as I think one thing we can all start to agree on is that the market is still very young, and we have still yet to conclude the fixed formula for successful STOs. Nonetheless, we will of course discuss the learnings that you guys have had so far, and before we dive into those, I would very much like you to give a brief introduction to yourselves and your companies. I know that, Roel, you have already introduced yourself in your earlier presentation, but in case somebody is late to the show, perhaps a quick recap would be fine. But let's start with you, Victor. Could you please say a few words about yourself?
Hi, I'm pretty happy to be here today. So basically, I have started Reno 3 years ago. It was a little bit different idea for a crypto bank, and we pivot to real estate tokenization and lending services. What we have done so far, we have tokenized more than 350 million worth of real estate. We have sold for the first month of operation on our platform more than 11 million worth of tokens through our marketplace. And what we are doing basically in the marketplace is we are offering 3 services. We are tokenizing real estate. We have marketplace for tokenized assets, and we do have lending solution that is accepting tokenized real estate as loan collateral, which is our main product, and it's pretty exciting. We do believe that it's going to provide significant amount of liquidity in the space. And that being said, I just want to keep that pretty high level as an introduction, not to overwhelm you, and to give you more during the panel. So I will let other guys present themselves as well.
Thanks, Victor, and I'm sure we'll come back to some of the items that you already brought up. I'm happy to hand over to my fellow Dane, Klaus Skåning. Could you please introduce yourself to the audience?
Hello, Christian. It's nice to be two Danes on the call here. You would almost imagine that there's a lot going on with tokenization in Denmark, but that's not the case.
I think we have the full Danish tokenization industry
all of us are here on this call.
Yeah.
So thank you to STO Box also for inviting me here to this great conference. I'm actually a researcher by background. I have a PhD in computer science, specializing in AI technology, and I've also done one AI company before this one that I took to exit. It was a spin out of Hewlett Packard, and I'm a mentor and advisor for many university startups, both from researchers and students. But the last 3 years, I've been co-founder and CEO of DeFi. We don't go directly to the market as Reno does. We are rather a white label partner for real estate developers or real estate consultants that want to create their own sort of mini IPO system to finance and to manage real estate projects. So we operate under a white label business model, but we have a focus also on real estate. Thank you.
Excellent. Thank you, Klaus. And finally, Roel, a recap of your merits.
Yeah, so I'm Roel, 25 years in financial services and technology, done quite a number of things. Currently, I'm the owner of a company called Business Creation, which is a so-called redevelopment company. So we actually fix businesses. But I'm here today as the chairman of Crypto Delta. So I have a special interest in technology. I've been in the blockchain industry for almost a decade now. And we've been seeing issues around trust, scaling, regulation, whatever is happening. And that's why we set up Crypto Delta Foundation in the Netherlands, together with all sorts of partners like PricewaterhouseCoopers, Allen Overy law firm, banks, smaller tech firms like Liquid, Valut, and others. And we've got a growing number of members as we speak. And I think we've seen all sorts of tokenization happening, but that's for later.
Thank you. And also allowing a bit of speaking time to myself, just to let the rest of you know who I am. My name is Christian Sorensen. I have a sort of similar story to Roel, that I come from many years in payments, digital payments and digital financial services. It's been 20 years now, almost. 5 years ago, I co-founded Norfico as an independent advisory, consultancy, and communication firm with a dedicated focus on fintech. One of the pillars of the company was blockchain, and that got us involved in all sorts of projects. We turned our focus into asset tokenization after seeing with interest and fear the whole ICO wave coming, and we were also part of one of the first ICOs in Denmark, together with the largest law firm in Denmark, where we actually tried to suggest let's create a framework for proper regulated ICOs. But as we all know, the ICO market all but disappeared, and now we have the more mature and better regulated STO market. What we saw also was that this market needed a platform where we could gather all the industry players and also help build the bridge to the traditional financial services world. So a year and a half ago, we founded the Tokenizer as a media and information and platform for the tokenization industry. It has been run as a side project until now, but right now we're in the process of spinning the Tokenizer out into an independent company and actually fundraising for that as we speak. So with those introductions in place, I would like to go another brief round. You've all mentioned that you've actually done this. You've actually been part of issuing tokens. So could I ask you again, Victor, just to say the assets that you've been tokenizing, is that mainly real estate, or you've been into other assets as well? And if you should name one dream asset that you would like to see tokenized, what would that be? So 2 questions for you each. I think you are muted, Victor.
We're actually focused only on commercial real estate at this point, and we want to streamline this process with commercial real estate. We don't want to, tokenizing everything, because of course that we can, but we want to be able to tokenize an asset in a less than a week, let's say, if we do have all the documents in place. In order that to happen, we need a process, and that's why we decided to focus on particular assets and particular type of deals, not only the assets. So that being said, if we dream for an asset, it's gonna be Empire State Building, for example, that we want to tokenize, and it's been given for quite a while as an example of fractional ownership. So at some point, hopefully we're gonna tokenize it for real.
And what about you, Klaus? You also been tokenizing in practice.
Yeah, we have done our own STO in Denmark actually, but for regulatory reasons, we have not yet issued tokens. We hope to be able to do that within a few months, but it depends on the regulator here, which is not fully under our control, unfortunately. Then we have 2 real estate STOs in the US who are scheduled to go live later in November. We cannot, it's a white label partner, so we are not normally allowed to reveal the name. In addition to that, we have 6 STOs in Africa actually that are scheduled also for launch within 1 to 2 months. 3 of those are real estate related. The other 3 are later stage startup companies, seed and A rounds. Generally, 80% of the companies that we speak to are real estate related, and it's a mix of residential and commercial real estate. It's also a mix of new development projects and existing buildings and refinancing of existing projects. And it's also primarily company equity. So there's a company set up, an SPV that is set up to hold the property, and then we tokenize the company equity. Because the assumption is that this is what the investors prefer and this is what they are comfortable with. The dream asset, I don't really have a good guess on that, but I know what type of client I like to get into our shop, and that's definitely it's a partner that is a real estate developer with their own existing projects and an existing network that they can tap into for investors, and that understands, you could say, the value proposition provided by STOs.
Thank you, Klaus. And Roel, the STOs you've been involved with directly or indirectly, which would you highlight there?
Yeah, so I think there have been numerous over time. As I said, the first STO I did was in 2017, and that was of a company. So basically on shares. It's been a while, but since then we touched, for example, tokenization of land. So not real estate, but actual land, property, solar energy, classic cars recently, a Rubens painting, startup funds. So quite a broad variety. And I honestly, I'm not a financial expert, and I can imagine only that everybody, there's so many other things you can tokenize that people would be interested in to be co-owner or, have some of the capital and cash gains out of that. Now, if my dream, and I'm generally saying that at most of the conferences that I attend, so if it's not new for you, then sorry, but a dream is a dream, right? I'm a big believer that we need to change the world to become a better place. And one of the challenges that I've seen working in financial services industry is so-called debt. People having to get into debt and then do something, which is sort of the stick that is being applied. You go in debt, and if you don't make it, we slap you all over the place. So I would love my grandchildren to grow up, and when they without debt and without the stress of debt. So I'd love them to get born, and once they get born and registered, that we tokenize them for about 10 million euros, because that is the worth generally of an average person in their lifetime that they contribute, and that by each stage they can just consume part of that 10 million. Now we're issuing money anyway like crazy, so why not like that? So I would love that principle that my grandchildren will just be born and have 10 million in the bank account and live their life.
That is certainly worth a discussion. Tokenizing grandchildren. That's definitely an interesting aspect. But following up with you, Roel, since you've been in this industry for a while, and probably what already feels like a lifetime now, as things are progressing so fast. What is the current status of the industry, and what drives security tokens right now, and also compared to 2017 when you did your first STO?
Yeah, well, it's always difficult to speak for everybody, right? But what I see from a practical reason, I think from the entrepreneurial side or the people with the assets, they, for example, if you own a big building, it's very difficult to sell a $500 million worth of real estate because there's limited buyers in the market, right? And if you could tokenize, you could fractionalize a number of these things and get part of the liquidity much faster. So let's say the need for speed of money, that's one side. The second thing I would see is that entrepreneurs are sort of in a situation where they say, it's really difficult to get lending with banks. There's been some distrust in that system since 2008. It's not necessarily got a lot better there with all the anti-money laundering challenges that are out there. So entrepreneurs are also seeking to, difficult with banks, but blended finance and locking in customers, and tokenization helps. So it's becomes a business strategy in certain areas. From an investor point of view, and that is, of course, needs to go hand in hand because it's a two-sided market. I think a lot of investors have been disappointed with, returns, and I don't mean the institutional investors necessarily, but retail investors, high net worth individuals. And there are now options, like, for example, in the Netherlands, you have about 750,000 SMEs, and it's the most profitable part of the Dutch economy. Yeah, and as an investor, you just don't have access. Scale-ups, a lot of investors only get access to scale-ups when you're a small investor, when they go IPO. And then the big 1,000 times sort of valuation's already gone, and you're in the public market space. So investors are looking to get access to asset classes that they generally couldn't get access to because they were not on the public stock markets or things like that, or available through funds. By the way, through funds, you need to have so much money, put in 50,000 at minimum, so there's certain barriers there as well. I think that's driven by the general need in this world to redistribute wealth. So the more people get access to the potential capital gains as well as monthly income, that will help in that respect. So that's a general market need, that they would probably discuss in Davos or places like that.
Thanks, Roel, for that overview. And one of the things that you mentioned, and basically all three of you have mentioned, that's the tokenization of real estate. That seems to be the sort of the most tangible, most immediate use case that drives most of the traffic. Klaus, you said that it was 80% of what you of the requests you get are real estate related. So why do you think that that is the case, Klaus? That it's real estate that drives the market right now?
I think there are several reasons for it. It's a big asset class. It may be the single largest asset class that is relevant for tokenization. It is huge. I think it's around $228 trillion globally, something like that. And only 7% of that is available for retail investors to invest into. And a lot of people would like to invest into it. So there is a gap to close. I think it's much bigger if you compare to other asset classes such as infrastructure, energy projects. Potentially equity crowdfunding could be bigger. But to me, real estate as an application of STOs is a better application than equity crowdfunding for startups. And STO in itself is a risky proposition. It's a new form of financing and sort of, financing your project, and it's risky in itself. Why combine it with a startup that is also a potentially very risky investment? So to me, as an STO platform provider, it's nice to work with projects that are much more solid and stable and with a trusted yield year by year, so that we at least reduce the risk in one place. Also, finally, I would say we actually see a lot of interest from the real estate developers. There are many of them that are interested in being early adopters and being on the leading edge of technology, and there also is a good value proposition for them just outside the STO in itself. They have the chance to automate and digitize their processes, to be more easily able to manage a large investor group, to target new types of investors, and to get liquidity.
Yeah.
So for them, there is a really good value proposition if they understand it.
Yeah, and Victor, it's hardly no surprise that you are all in favor of real estate tokenization, given the focus of your company. But can you say a few words about why did you choose to focus on real estate tokenization?
So as Roel said, this is a huge asset class that is not accessible for most of the retail investors, basically because of, especially when we're talking about commercial real estate, where the deals are pretty sizable, in millions, they're pretty much above $5 million in the United States. The average deal. So, which makes it inaccessible to a lot of retail investors. And the good thing about real estate is that you have predictable income. So it's quite stable. Our focus as a company is also to real estate that is income producing and could provide immediate cash flow for the investors. That being said, I do believe that also there is one huge problem, and the problem is that it's super illiquid as an asset class. So basically, that's our main value proposition. It's actually to provide liquidity in that space, and we're designing different products down the road that's gonna help us build that. But yeah, that's the main problem. And how I realized that there is this problem with the liquidity basically was I spoke with different family offices, and they asked me, hey, can we tokenize our real estate, as it's quite illiquid, basically. And I started thinking about that, in the meanwhile.
Yeah.
But yeah, definitely I saw an opportunity, and we targeted this asset class.
Do you think there is also maybe even a psychological element to the fact that digitization and tokenization can be sort of abstract, but if we apply it to something very, very concrete like a real estate asset, it becomes easier for the market to understand? Is that a correct assumption, do you think?
Yeah, and also, when you're specialized in something, you understand their needs better. So basically, you're talking with only people that are in that space, either from both sides, as in investors and as real estate owners, so to say. And that being said, you're understanding better the market, their needs, and you're able to streamline the process that is going to work perfectly for those particular needs. And that's why we decided not to take any other type of projects. We've been asked for tokenizing art and equity and so on and so forth. But yeah, we don't want to take all the deals on the market because we don't have a legal framework for them. We already have legal framework for real estate. We have all the documents, and we're able to tokenize pretty quickly. And as I mentioned, we prefer income producing real estate. Even we can take other deals like constructions and development projects, but we prefer income producing.
Roel, bringing you back in here in the discussion. Since I'm sure if I ask Klaus or Victor if the technology is working and the platforms are ready, I think they will both say yes, since they are running platforms, both of them. Do you see any current technological challenges? And then I will follow up with regulatory challenges, but let's focus on technology first.
Well, look, I think technology has a huge capability. So generally the technology is ahead of regulation. Let's put it like that. But most importantly, technology needs to serve as a business case. For example, if you really want to transfer a piece of land from one person to another, generally you need a notary. So using a private blockchain to do that generally doesn't eliminate the notary. So you need to move it to a public blockchain to do things like that. So other people might say, use the private blockchain for trust, right? Whatever. And these sort of statements, I think we really need to be very aware about. Now, so technology, yes, it needs to serve the business case. That's most important. And that's generally cost saving for investors. Because if we can save the cost, we can put more smaller assets in situations like this to be tokenized. And as we all know, there's a few buildings of $1 billion, there's a little bit more 500 million, there's even more of 100 million, and ultimately most buildings are, depending where you live, but general houses or apartments, and how could they actually be tokenized, or even smaller buildings like garage boxes, etc. Now, that is, I think, quite essential. But what we also have to be very careful about in this field, and maybe we can touch upon that later, because when we're talking about tokenizing real estate, there's this something huge happening in the current Corona market, and that is office buildings are empty. If you own them, who's going to pay them to turn them back into apartments where people live? Now, tokenization might be a way to get liquidity in, but at the same time, when it's already tokenized, is all the token holders are going to contribute to that refurbishing, right? So that's interesting to see what the rights are and what the obligations are of token holders. So that's where you get into the legal aspect. Hence, I made a comment earlier today about the Isle of Wight, the Isle of Man. By the way, I'm not against it for professional investors. They know what they're doing, right? But when you talk about retail investors, that means nothing to them. They just see an opportunity and they have no clue on what their rights are and what their obligations are in certain circumstances. And a lot of companies, unfortunately, especially in a longer time ago, didn't explain it because they didn't know themselves. So there was a good reason behind that. But now we're getting more educated. I think that is really the part of what's going on. Now, the most important thing currently that needs to happen in regulation, and I'm preaching, against an audience that knows this, is harmonization. So it's not so much new laws that I need to be invented, just harmonize the thing in Europe, harmonize the thing across North America, harmonize it in Asia, and then harmonize it around the world. Yeah, that would be the best thing to do. Now, there are a few areas from my perspective that I find a little worrying. If we get law to be technology dependent, then what if a new technology comes? We have to change the law again. And that is something, and at least in the past, that we've seen in the Netherlands to be very well organized, because the stock market was first launched in the Netherlands in the 1600s. We had a lot of experience with these things. And that meant that in those days, the laws are old. There was no technology then, so the laws are technology independent. So you could actually tokenize a company 5-6 years ago using blockchain technology. Nobody would care, right? Because it's just you have a share and you issue it. That's fine. Yeah, nobody cared. A lot of other countries, they did care of the technology, and therefore they are in the news changing their laws. Now, I'm very curious to see what's going to happen with EU law, because that is actually suggesting that we need to move towards a sort of technology and law connection, which I'm not a big, not in favor of, because that will slow down innovation as such. Now, I'm not saying that it's a bad thing. I'm just saying slowing down innovation. Maybe that's good. We get a more, relaxed life. I'm not sure. But ultimately, these topics, harmonization, do the same thing across Europe, align it with North America, especially focus on investor protection. That is extremely important to be clear there, but also be clear to people issuing tokens what their responsibilities are to that matter. Secondly, I would prefer that it wouldn't be technology dependent, but it's more generically about rights and ownerships. I think that's where the framework of law is most valuable. And thirdly, I would really argue that in this field of regulation, we shouldn't have so many different. If I just look at Europe, we have the EU doing things, and in countries are things, and we've seen this. Christian, you've been in the payment space. How did open banking, e-invoicing regulation, PSD regulation, it's all European frameworks, slightly differently interpreted in each country, right? That's not necessarily what we should to do. So harmonization and, country by country giving input, but centralized regulation that will be deployed in a single way is extremely important to harmonize what we're doing. And, I'm not a lawyer myself. Actually, I don't like law myself, but I've gotten involved throughout the years. And I know a lot of lawyers that see, okay, they want to make some money, but they also want to have a reasonable landscape that you don't have to worry about tiny details and write 2,000 pages contracts. They also prefer 50-page contracts that are easier to explain and understand. Yeah, because it's also fun to see progress. So that is, I think, where regulation shouldn't be a power play. And I sometimes have the feeling that if I now look at the European marketplace, France is screaming, Germany is screaming, and they want to set back the Netherlands. Yeah, because we can already do this for years. We don't have limitations. Just come to the Netherlands, tokenize whatever bloody thing you want to tokenize. It's fine. Yeah, investors know where they are. The rights are very clear. Yeah. However, other countries haven't got it. So you see that it's used a little bit as a political play, and that, well, that's the situation. So harmonization, no power play, and keep it technology independent as much as possible would be great assets to drive the market and the trust.
I would like to stay on the regulatory topic just a bit more. And Klaus, you already talked about that you faced problems with the regulation not being ready in Denmark. Do you also vouch for Roel's vision here of a totally harmonized set of rules, or do you see that as the Visa guy inside Roel looking for one solution to cover the entire world? Or how do you see this?
It's a really interesting discussion, and actually I think that we come from the perspective of tokenizing company equity normally, which is shares. And to me, it's not this. The regulation around this is not harmonized in any way, even in the traditional financial system. And to me, it's actually not really necessary. I enjoyed reading the article in the Tokenizer a couple of days ago about comparing Liechtenstein regulation to Switzerland, where Liechtenstein has added a new entire layer discussing different types of tokens, including also security tokens. To me, that's the wrong approach. I think in most countries, just as in Denmark, you can add just maybe 1% extra regulation or change a few words in the existing regulation to cover the fact that we are just working with normal securities in a digital version. who can, and then there may be a few twists because it's a token on a blockchain. But that would actually be my wish and my recommendation for regulators to try to do it in that way instead of inventing totally new regulation, trying to cover different types of tokens and different types of actors and so on, and introducing new types of licenses that you need to get in order to be an actor in the space and so forth. Many countries are doing that. Yeah. And I think it's a mistake.
but if we look at the MiCA proposal out of the EU, and well, while it specifically mentions security tokens, it actually says that, well, security tokens are securities, and we have security regulation already in place.
Yeah, why not? Yeah.
Victor, which jurisdiction are you operating under?
We're operating under U.S. security laws, and I could say that they're probably the best as far as what I know. Pretty much we are fitting the current security laws and regulations. We're complying with them, and we don't need something specific for tokenization that much, except we are using one amendment in Delaware, which is allowing us to issue digital representation of shares instead of paper certificates. We are offering digital certificates, and that's the only difference. What I do believe that need to be improved over time, and we are seeing it as a kind of as something that could be done better, is the way we're onboarding investors. For example, right now we are tokenizing our offerings under Regulation D, which is allowing us to onboard only accredited investors, and that's quite restrictive because we're not able to onboard everyone. So that's the main idea of tokenization, to provide ability to every investor, even the smallest investor, to participate in bigger asset classes, which right now is not the case. However, a new amendment came just last week, which is basically increasing the amount of money that you can raise to a crowdfunding fundraise, which is allowing pretty much retail investors as well. And actually, for deals up to 5 million, we're gonna see that possible in a month and a half, in about a month, let's say. Yeah, that's gonna be helpful. Still, it's not gonna serve every project, but at least smaller tokenization projects are gonna be done that way, I guess, and that's our goal as well. So basically, we do have the pretty much everything that is needed here. It just needs certain improvement as well. And one problem that basically I think it's more related to real estate, that probably could be exempted or improved, is that we are using more, as I mentioned, regulation that is based on fundraising for startups, and it's quite protective because of that. I do think that investing in real estate is not the same as investing in startup company in terms of risk. So that should be taken under consideration from the regulators, and probably we can have different terms as industry. That's my opinion.
Yeah, and actually on the US regulation, even though you said that there are good regulation in place, or rather good exemptions in place, that the SEC has also announced just last week that they want to simplify these exemptions and consolidate them to make it more transparent and easier. Roel, I would like to just pick up on some things that Victor said, that making this more accessible to everybody, and you also touched upon it yourself in initially talking about basically the democratization that we so much like to talk about when we talk about digital assets, making them available to everybody. But the laws are also there to protect the regular citizen. And what do you think we should do when it comes to making regular people understand what is needed or what's required? We talked about obligations, and you brought up yourself. What if something happens or needs to happen? What if there's a broken gas pipe that needs to be replaced in the commercial property? And there's no money to do it. Will the token holders be liable? And if they can't pay, who will then pay? That was a long question, I know. Sorry.
Well, yeah, it's a little bit of a long question. Shall I give a long answer?
In the interest of time, can we do medium?
Yeah, medium. Okay. So protect investors. Well, first of all, I think that starts with the one issuing the asset, right? As Victor just mentioned, most investors know in the US what a Delaware entity looks like, because the rules are very simple, the obligations, it's transparent. And in 52 American states, everybody understands Delaware principles. So that means you have a huge market acting under a single framework, legal framework. Great, awesome. Yeah, in Europe, we only have one single legal form that is actually standardized across. That's the cooperative, right? Each, like a limited entity in the Netherlands or an AB in Sweden or whatever, they all have slightly different aspects. That is not helpful for investors, because then it's invested under Swedish law, I need to investigate. If it's under French law, I need to understand so harmonization, again, I'm not saying the cooperative is ideal, but at least it's harmonized across Europe, right? So that helps in getting access to mass consumers and mass markets, yeah, because they don't have the time, knowledge to educate themselves in so many different things. So that's one side of the equation, right? Then the question was how to deal with certain problems. And I think, for example, this is where you need to be very clear with it when you're investing in real estate. Well, do you actually own it? Because owning it means generally also that if I rent out a house that I own to somebody and the guy that lives there says I'm paying the rent but outside needs painting, you need to have money to pay for that, because that's your general responsibility. So the contract that's out there, and generally in real estate, and Victor or Klaus, you know better than I do, but there's an operator that does the maintenance and support of the real estate, that's generally covered. Yeah, so there goes some fees that way, operating companies, and that works out. But now the bigger thing is, okay, so I actually have this office building, and guess what? The corona took out the complete office market space in certain areas of commercial real estate. Now I want to turn it into an apartment. Now it's completely tokenized. We have 5,000 token holders, and the cost is 10 million euros to refurbish the thing. Yeah, where's it coming from? Or are we going to end up with real estate property that can't be redeveloped because the 10,000 individual investors can't cough up all 1,000 or cannot agree what it should become? Should it be an apartment building? Should it be a single big house? I don't know, whatever. They have to agree and they have to invest. And that is, I think, there is the how do you say that? The refining from the business owners to go through all potential use cases when you set up an asset for investment. And that is quite essential to be ultimately thorough. And guess what? Then, you have authority, financial markets, and all sorts of consumer protection organizations that say, read the big print. This is an investment that the consumer organization has not reviewed. So hence you do it yourself. Or this is reviewed by us, and here in simple terms we explain you what it means for you. I think that's where sort of government organizations or regulatory bodies have a very important role, not so much in regulating the investment as well as informing investors about what it is. Now, I personally don't think everybody's going to get into this market. Yeah, we opened the stock markets in the 80s for big audiences in the 90s. I don't think 100% of the people are in the stock market, yeah, and not even 100% of the potential. I think in the Netherlands, directly or indirectly, 40% of the population is in the stock market via pension fund or directly, or owning something through their bank account or whatever it is. That is not the market. I think there's more potential in tokens, because a stock price is fixed at 50 or 70, and you can't buy a portion of that. Now that is really, I think, where we should look to protect investors, right? It's mass scale, it's transparency, and the one issuing the asset is really responsible about what's going on. And I personally know that some of potential real estate situations are at risk because of what's happening in the current real estate market, that they are looking for solutions to solve those problems.
Yeah. Can I?
Yeah, please.
Something, as I've been asked about what's going to happen if the building is not performing, who's going to provide capital and stuff like this if we already have tokenization in place. So basically, we do have options to solve this problem by just get creative in different ways. One of the options, and pretty much the easiest one, I could say, is to raise additional capital, which is going to dilute the current owners. But basically, we're going to issue new tokens, and we're going to dilute the current owners. But then, you're still going to have a performing building in the end of the day. Of course, buildings are aging. Some buildings might need major repairs at some point, and that's the only way things could be done. Either they might decide to to raise capital from the current investor database. So whoever is not participating basically is going to be diluted proportionally. That's done in regular partnership agreements today. Pretty much, if the company needs money and the shareholders are required to invest into this company, they're protecting their shares. If they don't want to participate, they're going to be diluted with the amount that is raised, and that's how it works. It's not 100% guaranteed that you're never gonna spend additional money if it's tokenized, like in the real world today. So pretty much the same situation.
No, I agree with you, Victor, but the challenge is that mass retail audience is not properly informed about these sort of situations. Yeah, so it's in the small fine printed detail, you read it and people are just not educated about it. And I think the challenge with 10,000 holders, if you got to present a plan of what it's going to look like. Will it be an office? Will it be a house? Will it be an apartment complex? Right? And the decision making upfront needs to be clear that, for example, 2/3 of the votes are decision making, and that means that the other go along, right? So the whole tag along, drag along concept is not very well known in markets. And voting rights, you have advisory votes and you have formal votes for decision making, and you see that sometimes it's very untransparent for an investor. Do they have advisory voting rights, or is my vote actually worth something?
Yeah, so you're right. All these things pretty much, especially in the United States, when somebody's investing in tokenized real estate, they are getting the shareholding agreement up front. Of course, I guess most of the people are not going to go through the details and check, what are the rights that they're getting. But usually they are having pretty traditional rights, like investing in and be part of every other company. Shareholding agreements can vary, so that's very important to be said. It doesn't mean that they're gonna protect the investors. Some issuers might behave in a way that is kind of gonna hurt the investors in long term, and that's very important to be said.
Yeah, because there are interesting scams in real estate where people said, oh, you're going to get into this piece of real estate. They don't actually own it. They raise the money and then buy the real estate from a different venture that they already own at a top price. So they cash in themselves directly and leave the investors with a top price piece of real estate. Seen it happen. Right. So to anybody out there, if you ever invested in real estate, make sure that the company you buy tokens from or security asset already owns it. Yeah, and that there's a proper valuation report of what the rental income is or whatever that determines part of the valuation of that piece of real estate. But this is, again, here we're talking about education. Yeah, and I don't think the regulator can find a way to avoid stupid investment decisions, right? So we have to be really realistic. If you invest, to anybody out there, invest in something you understand. Don't do it because your brother or your neighbor said, oh, this is a great investment. Because by the time they say that, it's probably already way too late.
And actually, on that note, also in the interest of time, I would like to step a little forward in the process and not just look at the security tokens when they're issued as an STO, but also when they become available on the secondary market. So basically, we have talked about liquidity so many times. How do we ensure that there are actually the liquidity of these tokens in a secondary market? Victor, you want to go first on that?
Yeah, sure. So one thing that we very clearly said is that liquidity is not given, so it should be created. We need to work to create liquidity on the marketplace. So that being said, one of the ways that we want to provide liquidity is through our lending solution, basically, where people can use their tokens to borrow against them. In the commercial real estate market, as you know, that's our field. Most of the liquidity is coming actually from loans, than from buy and sell transactions. So that being said, the loans are a pretty important part of the liquidity process. However, we're gonna need also liquidity providers to start participating in that market, which are professional market makers and companies that are doing this for the regular stock market. Smaller retail investors, they just are part of this bigger picture, but they can't by itself provide the liquidity needed to say that the market is already liquid. So we're gonna need all these parties to get together to have potentially leverage and other sources, big players, institutional players to start operating on this market. Liquidity providers, for sure, we're gonna need them. And that's where the liquidity is going to come from. But yeah, I think, and I do believe that we're going to see that pretty soon.
Okay, Klaus, one thing is issuing the token, another thing is getting it out on the secondary market, which requires a link to the exchanges out there. I assume that there is both a technical challenge and a regulatory challenge to build that bridge. How do you see that happening?
Yeah, it's a good question. As I'm sure you know, there's only very few licensed secondary security token exchanges globally, and those that exist have very poor liquidity and haven't really proven their concept yet. Actually, I'm not convinced that they will be the solution to the liquidity in the security token space. When we have 10,000 real estate projects that are tokenized and 10,000 startups that are tokenized, how would you achieve liquidity in such a mess? Maybe you could get it from investment funds who are sort of investing broadly in that class, and then individual investors will invest into that. That might be a good solution. But for us, of course, we interact with the exchanges and we have to be compatible with them. Many of our clients believe that it's important for them to be listed longer term with an exchange. Technically, it's not very complicated. We just have to use the same protocols as the exchanges are using, such as ERC 1400, for instance, which is a good widespread standard. And then we have to be able to share the whitelisting responsibility basically with the exchange, so that we can always update the share cap table with the correct information, even if shares are or trades are completed on the exchange. So it's not so complicated on the technical side. On the legal side, it might be complicated because in some cases you may need to write a prospectus or something like that to get it listed. And it might also be quite expensive. So I think for most projects that we are looking at, it will not really be relevant for them to consider it.
Well, what is really liquidity, right? If you have a primary market trading where you have 1,000 investors and they can offer by, certain, for example, if you are in a company, generally there is the obligation to first offer your shares to your fellow shareholders, right? And if you utilize that, then it's offering, saying I'm willing to sell my shares for 10 euros. Nobody responds, or 100 people respond to buy your shares. Is that providing liquidity? I think liquidity is far away. So the promise of liquidity will take at least, from my perspective, 5 to 10 years from now in this market, because you need a lot of investors, you need a lot of assets, you need small assets, you need, you need a certain dynamic. And in certain markets, like, for example, bigger pieces of real estate, you don't necessarily want it because you sell some transactions, let's say 10 a year, and that, you don't even immediately want that to determine the market price. Yeah, you want to report on the value that certain transaction has been done at, but it doesn't mean that the next person cannot pay less or more and have to pay the same price. So market making, especially in, I think, real estate or in certain areas where assets are quite big and large amounts are available, market making has a certain role to play to at least make sure that the price is not unrealistic. Yeah, especially in secondary markets. In primary market, I see it way more as a new feature for shareholders, for asset owners to sell to fellow asset owners.
Right. And basically, isn't there also a mentality thing in that equation? Because even though we democratize the investment in early stage startups, it still requires sort of a business angel mindset, whether you are a business angel for $10 or for $10 million, that, I buy into this startup in the hope that it will become the next Spotify or the next Klarna or what have you. You don't buy into this startup in the hope that in 2 months' time it's worth 20% more than what you bought it for. It is a long-term play when you tokenize equity in a startup, isn't it?
Yeah. Usually it is, but however, you just never know when you're gonna need some money for something else. So you might think that you can hold a certain asset for 10 years, but the idea of tokenization is basically to allow you to get out at early point. Like, for example, you might have a better opportunity 3 years after after your purchase of a piece of real estate, so to say, and you just need to be able to have an option to sell it. That's one of the main advantages that tokenized assets are actually offering. And doesn't matter if you're gonna execute this transaction in an exchange or through a private transaction. The idea of be able to do that, that's the key. So right now you're locked, and in most of the cases, especially in real estate transactions, you are not allowed to basically exit by yourself. So basically, you're waiting for the general partner to decide to sell the building after the 10 years of holding. But you might need cash, and you might have a great opportunity that you can miss because of that. So basically, even if you can transact with a fellow, or you can transact by finding somebody on the street that is willing to purchase your tokens, this is still a great benefit of having something tokenized. That's very important to mention.
Thank you, Victor. And I can see we've come to the end of our session. Time flies in good company. I certainly had more questions I wanted to ask you. And while the next set of speakers are getting ready, perhaps if Boris will allow me, a very quick final question to each of you. And what would be the number one advice that you would give to any company considering an STO? Basically, starting with you, Victor, and we are out of time, so keep it to the point. Thank you.
The best advice is to actually prepare your first be realistic about the outcome and the time frame. So when you're choosing companies, don't rely just they're gonna make miracles. So if your offering is not good enough, you're not gonna have results. So basically, really depends on the underlying asset. The technology is just supporting this process of selling or fundraising. It's not the main thing. So you're not gonna raise for money for whatever you pick through tokenization. But if the asset is good, you're gonna have good results.
Okay, thank you. And Klaus, your number one advice to companies considering an STO?
Yeah, I think they should consider whether an STO is a real value add for them, and whether it really is a good option for them. So they should have some kind of special benefit out of doing an STO, which is just a different way to make a fundraise. So it should be important for them from maybe a technology perspective to be on the leading edge. They should have access to investors, and they should also have a legal clarification of whether it actually is compliant for them. And then come speak to us or someone else in the industry.
Thank you, Klaus. And finally, you, Roel, what will your number one advice be?
Yeah, so two things actually for companies doing this. Either make sure an STO fits your strategy, or if you're doing an STO, adjust your company strategy to it. Yeah, so because it's not something you can just do. You need to be really in there. For investors, only invest in things you understand.
Okay, thank you. I think that concludes our session. I don't know, there might be. Oh, Boris, you are there. Are you ready for handing over to the next session? Or otherwise, I have plenty of questions I would like to ask these gentlemen.
Oh, I assume you still have a few minutes, because the next speaker is having the connection issues. The Token platform has its
its quirks. Yeah, I could see some chatter going on. So with that, I'm very happy to.
Yeah, I remember we had a few questions in the from the participants. You may ask them so far.
Yeah, exactly, and that is somewhat related to what we've seen on or what we discussed in relation to the secondary markets as well. Do you have any examples of well-performing tokens that have been issued and since traded? Do you have any success stories that either of you have seen in the market?
So far, the only token that is tradable, let's say, it's not the only one actually. There are a couple of tokens that are already tradable, previously been issued as an STOs on secondary markets. The only real estate token that is tradable is the Aspen coin, which is tradable on T0. Usually the exemption that we are using here in the United States not allowing us to immediately go to a secondary market. We are having 1 year holding period after the fundraise. So basically, we're gonna see secondary market when the holding periods start expiring, and that's gonna be at least a year from now when we're gonna see more projects on secondary market, and the outcome is gonna start, to be more visible. We're gonna see some results there.
What about you, Klaus? Have you seen a good example of somebody that's been incredibly successful and made a lot of money to their token holders?
No, and I think that's the main problem for the industry. I agree with Jesper Cohen. I think that's maybe the only one. We lack some really visible success stories. We lack to sort of produce the overall proof of concept that we can actually provide value, I think, in general. But it's going to come really soon.
Yeah. What about you, Roel? Any besides the Aspen coin, do you have some successes that you've seen in the market?
Well, it depends what you define as success. I think I've seen a lot of happy investors in some tokenized green energy, but it's like they offer 6% or something like that, and people are happy with that. So that's fine, and you don't necessarily need to have the hundreds or thousands % of growth as we've seen in the highly volatile crypto market. That's a different risk category as well. So from a security token perspective, I think there's plenty of companies that have delivered an excellent performance and have paid dividends on their tokens, for example. So I would define that as success. Of course, like in normal business, there's also companies who've done bad, didn't pay dividend, actually valuation's gone down. But that is part of what's going on. What I also find interesting is that when you look at these startup funds, incubator programs, there's you see, for example, in the Dutch government is setting up a fund for startups. I think it's 2 billion or something, and that would be great to tokenize that. And distribute that to the whole landscape of startups in the Netherlands. That would be quite interesting. But anyway, we still have to see what the return is. And I think also when you look at the stock market, and if you invested in Uber or something like that, you're maybe not particularly happy right now.
And there was a follow-up question, which I think I already know the answer to based on your answers to the first part, because I think what the question really was is what should I go out and buy? So I think we're looking for token tips here. I don't know if with all disclaimers of no investment advice given, any of you have any investment advice that you would share between friends here?
You mean from an investor standpoint?
Yeah. You're not obliged to answer this. You're fully okay if you decline.
I don't want to, kind of advertise or any investment opportunity at this point. I mean, people should decide by themselves what they feel good about, and what is fitting their risk standards. So if you're expecting some regular cash flow from their investment, like having 5-6% return per year, that's probably real estate is fitting for them. If they're expecting 100x return potentially from investing in startup, then definitely that's different ball games. So they need to analyze deals and find something that they do believe can achieve something like this. Real estate is not gonna keep them 100% for sure. So, but it's quite steady. So they need to decide by themselves what is fitting their investment strategy.
I can see that they're still struggling with the technicalities for the next speaker.
Yeah. So maybe
Yeah.
being a little bit provocative here, Christian, I want to share something I invest in, right? But again, the same rules apply. I know what I'm doing. I understand this industry really well. Yeah. So obviously it's something in financial services. Think some of you might know them, Celsius.network. So they are basically a crypto bank. Yeah, where you can stock crypto, you can lend dollars against your crypto as collateralized.
I was actually going to say the same.
Growing. Now, so I know Alex from his fundraising days in early on, and his previous work a little bit, and actually, so I got early and I bought a few Cell tokens just for the sake of it, and then. I think it's now four months ago, just before summer, he did an equity STO on Celsius. Yeah, and I actually bought a little bit there as well because I feel that company, first of all, it's profitable. It came out of nowhere. It's profitable. It's over 2 billion in collateral right now. Yeah, so you see that there are certain aspects in what Alex, obviously being a serial entrepreneur and have done multiple large companies from scratch. You see that there is something specific happening. The way I know financial services, right? Less fees, transparent offering, kickbacks to customers rather than stacking up profit and, everything electronic, digitalizing, transparency on rates, all that sort of good stuff that's happening. And once again, going back to my point.
The next
Boris.
speaker at last managed to solve the technical challenges. It seemed the copying platform was lagging. So I thank you for the panel. You had a wonderful discussion, and I hope it really helps people not make the potential mistakes. You're all fantastic speakers. Thank you a lot.
Thank you very much for taking the time, and thank you for sticking around while we waited for the next speaker.
Thank you, Christian. Thanks, guys. Thanks, Boris.
Bye-bye.
Thank you, guys. And I'm ready to introduce our next speaker. It's Alexandre Lemarchand from the Vice President of Sale at Ledger Vault, one of the top 3 cold wallets, and formerly a finance professional with huge experience at Microsoft at Visa. So he has a lot to share about how to solve the custody issue, which also was mentioned here in the comment as one of the most important. So we are tuning Alexandre in and asking how the issue is being solved. Alexandre, waiting for you. Please turn on your camera. You can share the screen by clicking the button below, the third one with the computer on it. Can you see it? We can't hear you and can't see you. So waiting until you join in. It seems the administrators of the platform have already let you in, so you are live, but we don't see you. Probably you have to turn on your camera and microphone. They are currently off. Perhaps you have the connection problems. Try another device or another type of connection. While we are waiting for the Alexandre to finally join, I also remind you about the next event that we are having. After these speaking sessions, we are having a workshop with the demo of the Stobox digital dashboard functionality that Jean, our CEO, is going to present. I'm sure you will like it. We put a lot of effort in many nuances, so I hope you will be able to enjoy it. And on the next day, we will also have the Best Media Award, so don't forget to vote. And a great array of speakers on the second day.
Hello, everybody.
Yeah, we have Alexandre joined.
Hello, sorry. Looks like we faced some technical challenges. Please accept my apologies for that.
That's totally fine.
Thank you all for being here. I will try to catch up those few minutes late. Can you see my screen now?
Yes, we can see your screen. Everything is great. And looking forward to your speech.
Thank you very much. So hello, everybody. My name is Alex. I work at Ledger for more than 2 years, and I'm glad to be in that company to support the sales globally. I'm here today to talk about Ledger Vault, one of our bestseller in terms of enterprise scale solution to support companies building secured custodian services. Ledger, probably some of you know Ledger. Ledger, you know, is not a baby in the crypto space. We were born in 2014, and we are here to deliver one of the best technology to secure critical digital assets. We cover two main markets. The consumer market, that means you, individuals, probably listening to me today. But one of the key markets for Ledger is definitely to address the needs when it comes to secure assets in an enterprise for an organization, knowing that the organization brings its own set of constraints, such as it's first a group of people. So we had to think about the best solution to also fit those organizational needs. Today, Ledger has a worldwide presence. We are in Singapore, in Hong Kong, in Zurich, in London, as well as in New York and Paris. And today we are very happy to be with you to explain the new needs of custody. So today, the main, I would say, challenge when it comes to custody, it's you used to have the traditional financial assets, but we realized that with a new set of digital assets, people are facing new operational risks. Digital assets being the crypto that were born back in 2008 with Bitcoin, but we have also more and more securities, utility tokens, as well as stable coins, and you see more and more projects moving toward digitalization of assets. The new operational risks that we face with those type of digital assets, I'd like to categorize that in three main ones. The first one is definitely the key management. Manage securely what we call the master secret, the key secret. And it's very important to deliver the most appropriate solution for an organization to manage that. Then obviously with the public blockchain and what we see on the market, that's the way that a transaction is irrevocable. And that's very important for you to take that into consideration as before doing any type of large transactions. You want to secure yourself in a way to manage that accordingly. And then the last new operational risk that raised with the blockchain is definitely the openness of the network with many different actors and a full transparency that you need to embrace. And that's what I call the new blockchain paradigm. Back in 2015, I would say that major financial institutions that decided to enter to that crypto world, they had to build their own solution to secure their assets. You had actually not really another alternative on that market. Everybody was embracing that new economy. And that was back in 2015, the only choice you had to face was to build your own solution, sometimes leveraging other piece of technology from other partners. But if you wanted to build that business for your customers, you had no choice than building your own in-house solutions. Today, you have a large choice of different actors. You have the choice of choosing a custodian. So a custodian is a full end-to-end solution and a company that offering a financial services type of service to you. They will take into account all your funds, and it will be a turnkey solution for such the one you know today in the traditional banking. You have tech vendors, and you know back to 2015 we were not so many, but today you have serious tech vendors, and we believe Ledger is one of the key leading company in that area. But you have serious technology vendors bringing innovative solutions to the market to help you to achieve that. And then obviously you have some kind of hybrid technology. They're doing both technology and financial services. But at Ledger, what is important for you, we truly believe that focusing on technology only is very important for us, because we all know that investing in all those different solutions takes time, takes a lot of money. And I think it's better for us to be really the best in terms of security and technology and help other actors to go up to speed on that system. So today, you have really the choice either to trust a custodian or partner with a technology vendor. It is important to understand, if I'm here today, is to explain that while you didn't really have the choice in 2015, today it's time for you to consider an alternative and stop building in-house solutions. And I will try to explain why. But it's very important to build trust. And it's very important for all of you today to understand that in 2020 and 21, in few months, you can rely on very important companies that have been investing millions of dollars in building a technology and a solution to help you. And building your own infrastructure is very expensive. And I think we all know that if you look at what happened in the cloud system in other environments, we see that at the beginning, people were reluctant. They didn't want to invest in other third-party solutions. But today, let's think about what you are doing. If you're an asset manager, if you are a crypto bank, if you are financial services custodian, you're going to have to tackle a lot of projects. You're going to have to invest in many different projects to improve the level of service to your customers. So building your own infrastructure is quite expensive. And I tell you, we know that because we do it. First, you need the investment. You need the resources. You need to find the key developers that will be able to help you to embrace all those different technologies around the different blockchains. Tomorrow it's going to be Tezos, then you're going to have Polkadot, and as many blockchains as you see on the market today, you need to get the expertise to maintain that. You're going to have to maintain that system. We have major upgrades coming on a regular basis on all the different blockchains. That means you still need to develop, to maintain, and bring the highest level of technology to support the latest updates. Redundancy, what does that mean? That means if you want to secure the money on behalf of your customers tomorrow, you need to make sure that you bring the highest level of, let's say, infrastructure, such as redundancy, invest in data center, invest in cloud technologies. And that's a huge cost, but that's what you need to bring a SLA close to 100%. You need to operate your nodes. People sometimes just forget that in the blockchain world, operating nodes is not something very simple because it's an infrastructure. You need people to operate. We have 24/7 people working to support our customers. Everything has a cost. And then I mentioned that earlier, supporting new assets. As you could see, while the market is stabilizing, because we see that the market cap, we still have in the top 20, always the usual suspects, but still, we've seen in those last 2 years, huge innovation. Staking being one, DeFi being one of them we're all talking about today. So you need those resources and still to continue to invest. And that's what we do at Ledger. We do that, and that's what we propose to our customers. But obviously, you know, Ledger, the key thing for us is security. We would not exist without a very high level of security. This is what we bring to our customers. Trust, sleep well, be confident that your funds will be safe. And then you can continue to develop your services for your customers, but then rely on our technology to secure the funds. That's why we have today what we call the dungeon. It's an attack lab. They do that every day. We just got the SOC 2 compliance certifications, as well as ANSI, which is obviously a French national security agency, but one of the most famous agencies in the world, collaborating with other global agencies. And then research and development. It's a huge investment as well. 160 engineers, plus 100 coming in the next few months. What about you? Think again about what you are doing. Wouldn't it be a better idea for you to spend that investment on the key and core services that you propose to your customers? And we can work with you on that. So obviously, it's good to say we're great, we do great security, but that's a long journey. Tech providers, they should also work and closely with our partners and customers, because building a full digital asset custody technology is a long journey, because we have much more than security to bring on the market. obviously the first thing that we brought on the market was to implement the account segregation. For a custodian, because you, again, hold funds on behalf of other people, you need to hold keys securely. You must set governance rules, because security is a technical topic as well as organizational aspects. Who's able to do what and when? How much can I transfer? Do I need, as well as you could see, validation from my clients? Typically a scenario that we implement with more and more people managing funds on behalf of their customers. They want also their customer to be part of some of the validation process. And obviously then you need to have a clear understanding of what you see is what you view. This is what you see, sorry, is what you validate is through the validation transaction process. Very important to have a full transparency, meet any regulatory type of constraints that you may face in your country or in your region, such as Europe. But building a full custodian technology platform requires a lot of investment as well and research, and as well as bringing more on top of the core wallet management capabilities. Because we need to integrate new services. The wallet management is key. That's our core business. That's how everybody started. We have to face different type of wallets. We try to bring the most flexible and scalable technology to handle those. And then you realize that when you deliver those services to your customers, you need to bring new services such as tax, such as settlement, clearing, which is one of the key pain points for most of the people doing that business today. And all those blocks you see on the top will be a mix of built-in solution we bring inside our solution, as well as partnering with key actors on the market, thanks to the integration framework, where today what we call technically an API allows us to also interact with other type of services that will bring value to your technology framework if you want to deliver a higher level of service to your customers. As a conclusion, I'm here to explain that we enter into a new world, into a new period of the growth of our market. Why Bitcoin is growing fast with the market cap that reached more than $400 billion, I think we are also moving towards the third-party type of custodian business. It's important to understand that the people doing custody today, they need to embrace that new digital asset type of world. And today, it is really time for anybody in that ecosystem to think about leveraging what exists on the market. It's time to stop building in-house and build trust with key partners, and then help you to continue to grow in what you try to build, and rely on people for security such as Ledger, as well as KYC. You have a couple of very good actors, AML, etc. Any type of services that you believe will help you to bring trust to your customers. And we continue to build more integration. We truly believe in an integrated world. Ledger will never ever be able to deliver all services that are required. Ledger has a partnership type of strategy where we already decided to do what we ask you to do with us. We rely on trusted partners that are bringing very high value services to add value to our solution. Thank you very much. That's what I wanted to share to you. And then I'm available if you have a few questions, I guess.
Thank you for your nice speech, and thank you for the look on the custody from the professional providers. The last thing you mentioned about the integration going on the market, I am wondering if we have already specified providers for different kinds of services, for KYC, as you mentioned, for wallets, for custody, etc. On your opinion, are we going to see kind of horizontal integration of different kinds of services through the ways of mergers and acquisitions to provide perhaps more cheaper service due to the economies of scale or unite customer bases? Because actually setting up a business in the fintech, maybe in the tokenization space, is maybe expensive if you need KYC and custody and all of the things together, high upfront investment. Can it reduce cost potentially?
Sure. So reducing cost is always the key thing that customers are asking, because in that new market, you know, they try already first to make money sometimes. You know, people, they try to build a trading business, then they're gonna start to do to embrace that technology and try to get money. So obviously, to respond to your question, we're on a moving market. So you're gonna see different things coming in. First, what I said today, it's time to see more people focusing on a specific piece of what we try to achieve together. You said we need to invest in different things, KYC, etc. Yes, why? Because today you need to build trust, because customers, they need trust. If we want to be successful with those digital assets, if we want to grow that market cap, we need to grow the number of people embracing that new digital assets. You see great things coming in the US. You've seen the announcement with PayPal, MicroStrategy investing 50 millions of their own treasury inside Bitcoin. You see that the traditional world is starting to embrace that. But to continue to grow that, which is what we all expect, you need to bring trust to that market. And trust will come with KYC, because today you know that this is one of the important components, as well as our technology. Therefore, to respond to your question, today you have many niche actors building great and a secured solution. And for sure, based on my experience in other type of technologies, for sure you can think about people acquiring others, etc., to accelerate the go-to-market and bring more value faster to their customers. But today, it's still you know, a moving market where it's important to look at what's going on and keep people focusing on a very specific niche area, because each of those are very specific and requires a lot of investment. And for me, it's not realistic to think about embracing all the different requests that you need if you're an asset manager. And I know exactly what you want to provide to your customer, but you won't find one unique product to address all of them. So that's why, to conclude, being able to integrate something broader is important. That means you can be flexible enough to scale your platform and your framework to continue to grow and offer more services. So you could start with security, then KYC, and maybe tomorrow it will be settlement or tax, etc., etc.
Great, thank you for your reply, and I hope it provides answer to many of our viewers. I thank you for the speech. The next speaker is ready, so we continue our conversation and you get many outreaches. All the best.
Thank you very much. And I'm very sorry again for the technical issue we faced at the first minutes, but I wish all of you a great day, great event. Thanks, and happy to be there today. Take care.
Bye. And I am ready to introduce our next speaker. It is Andy Leon, the intergovernmental blockchain expert working both on the commercial and public sector and advising multiple governments on the legislation of cryptocurrency and and digital assets in general. And his speech topic today is specifically how the regulation of cryptocurrency will develop today and in the 2021, and what it means for all of us and how we have to adopt. Andy, it's my pleasure to see you today. I can see you well, but I can't hear you, unfortunately. I don't hear you. Perhaps turn on your mic. Unfortunately, did you unmute your microphone? The icon near the camera icon below. My friends from technical administration say that you have muted your microphone on hoping. So there is an icon below of the microphone which you can press to unmute yourself. Guys, please, can you send the screenshot to show what Andy has to do so we can hear him? It would be very nice. Unfortunately, we still cannot hear you. I don't. Perhaps you didn't allow the browser or the app access to your mic. One of the problems, maybe. Can't hear you. Perhaps try another device as one of the solutions. Do you hear us? Or okay, I understand. It's we who don't hear you. Maybe another device will help. Phone. It seems I started to hear another sound. Say something. No, I didn't hear you. Yeah, hosting conferences on Hopin is not an easy technical task. The technology is only evolving. Yeah, check your LinkedIn. Ross send you the screenshot of what you have to press to unmute. It should help. Meanwhile, a reminder to everyone that today is only the first day of the conference, and we are having a full array of great speakers and panels tomorrow, including the panel of legal aspects. Actually, legal is one of the most complex parts of working with digital assets as an issuer, but also with doing a due diligence on digital assets you want to invest in. Are they structured legally right? So you should definitely check out this panel, and also a panel on secondary markets and few others. I will be doing a speech as well on disruptive business model on the real estate that tokenization brings. It's actually not as simple as it seems. So you should check it out, and we are waiting for the Andy to finally join and unmute. Yeah, virtual conferences offer their own problems alongside physical ones. Hi, I still don't hear you. I don't know why the problem persists. I hope we can get your speech eventually. Okay. Waiting for you to join in from the phone. Yeah, meanwhile, thank you everyone that you are watching us. I know that virtual conferences may be frustrating at times because of these technical issues, but I'm pretty sure that you're going to get a lot of value from this speech and all of the upcoming ones. I probably mentioned it a few times already. I am very fascinated by the quality of the speakers we do have and the internationalization. We have speakers from all around the world, from US, from APC, from Europe, from other regions. It's amazing that we at the blockchain are so connected while the world is so actually dissolved and disconnected. And I think it's good that we have conferences like that promoting this global solidarity and collaboration. Yeah, meanwhile, one of the things you can do is also to ask questions that you want Andy to answer or other speakers later to answer. You can get access to the entire schedule of the conference in Hopin, and we have many cool speakers upcoming. For example, Felix Mago, co-founder of Dash, can tell you how to create a project that wasn't that is one of the top by the market capitalization and the potential impact. We're also having on the upcoming legal panel, the actually has written the multinational blockchain strategy and the participation in the creation of Malta blockchain laws. And also the implementation was not ideal. Please say anything, Andy. Did you manage to do it this time? Oh, unfortunately not. Oh. Guys on the admin stage say that that you have muted yourself on the Hopin. Oh, Andy writes, give me 3 minutes. I hope we can still get his amazing speech, because regulation is a huge problem and a huge issue in the current markets. And we will all have to adapt, all related to virtual assets. And I assume that many providers, many exchanges will actually cease to exist with regulation becoming more and more severe and more strict. And actually hearing how specifically the regulation will evolve, what are the underlying principles, is crucial to maintaining your business afloat or to finding the right projects to invest in, because there are so many shit coins now, and the one that will remain in the long term and deliver real returns is the ones who get the compliance right, who abide with all the necessary rules and regulations. So I hope Andy will really tell us how the regulation will evolve so you can choose the right projects to invest in that do abide with the upcoming regulations. We at Stobox are also quite serious in this regard with having the regulation done right. As you probably know, we have the accepted dashboard and the smart contract security tokens, which has the... Oh, it seems that I can hear you now. Say something.
Yep. I think I can hear you too, man.
Yeah,
give me 1 second. Let me see if it's truly working.
Yeah, we can definitely hear you.
You can hear me now?
Yes, I can hear you.
Okay, that will be great. So sorry about the technical error and so forth. Let's start, and I'm going to catch up with some time. So just a very quick introduction about myself. My
Andy, we stopped hearing you again. I don't know what you just did. The sound has disappeared. We've been hearing you. You said, let me introduce myself, and then we stopped hearing you. And my admin said that you muted yourself again. I don't know what happened to your browser or to settings. Try to check what happens, or maybe change the device. Log in from the phone. This is what often helps. I hope one day we will be having conference virtual reality, where you walk and see the stage and virtual booth, and you can see the speaker moving like it is on the real conference. I hope the technology grows to this stage soon, because it seems that COVID and things like that are not going anywhere. And unfortunately, we still can't hear you. So waiting for you to solve the issue. Yeah, getting back to what we've been discussing, it would be nice to... Oh, yeah, can hear. Now can hear.
Can you hear me now?
Yes.
Okay.
Cool.
All right, can you hear me now? I'm so sorry about that.
Yes, yes, we can hear you now.
Okay. So let me just let me just do it again then.
Introduction.
Okay. Hi, my name is Andy. I'm currently based in Singapore. Like most of you, we are all stuck. There are travel bans and so forth. So I'm more known in the market as an early adopter in the cryptocurrency and blockchain space. Started to my own blockchain company in 2017, and then fast forward to this current stage. I am the advisory board member for Hyundai DAC. Hyundai, as you know, is a very big South Korean brand, and DAC is the blockchain arm for this multinational. So apart from that, I give advice to governments. I was also involved in some legislation bill of cryptocurrencies. I'm also the only blockchain advisor with the Asian Productivity Organization that is based in Japan. And that organization itself also look at innovation, technology, and so forth. And through that, I got to know many other governments and also many other corporations that are in the Asian market. So today my topic will be a bit more practical, giving you an overview on the regulations for cryptocurrency globally for 2021 and beyond. I will also touch a fair bit on the commercial adoption and implementation aspects of things. And last but not least, I will look at the education part of things, the awareness, and also the thought leadership behind what we are trying to do as an industry as a whole, and also a bit of the trends that are coming up, in my own humble opinion, for 2021. So let us begin by sharing some rather positive headline that we have seen, so far. Highlighting on a few, one of which will be the investment banking giant JP Morgan, who came out with their first commercial transaction with their own cryptocurrency, JPM coin. That is more from an investment banking giant perspective. We all know that today PayPal has gone live, allowing Bitcoin and cryptocurrency spending for the US market. Then, of course, Twitter CEO Jack, he bought 50 million in Bitcoin. You see, all these are very, very positive sign that the institutional investors or the more serious institutions are taking on the Bitcoin, or taking up more faith in the cryptocurrency. A few other things that I have in mind is is less widely talked about is a MODE, MODE. They allocated about 10% of their cash reserve to buy a Bitcoin, and adopted that also as part of their treasury reserve asset. They are a listed company, just to let you know. And then in Singapore, while I'm in Singapore, I saw quite a few posts as well, where our Singapore bank DBS posted up perhaps a dummy site or a preview site where they are planning to launch their digital asset exchange platform, and that is another clue for bigger companies or bigger banks to look at digital asset, look at cryptocurrency, so forth and so on. Not so much of a central bank digital currency, but real cryptocurrency form of trading and so forth. And again, when we look at the market itself, 22 other banks and bank branches in India also started to offer their crypto banking services, I think last month. And last but not least, another good headline that we all know about will be Alibaba founder Jack Ma talk about digital currency are the future. So you can see that the positive signs are all coming up. Why is this so? It is very much also because of there are more and more good people in the industry pushing the cryptocurrency agenda across. Governments are slowly and surely accepting the concept of cryptocurrency and how that is going to work for their money, for their whole fiat. And of course, these are the good stuff. But if you look at it deeper from a news perspective and so forth, you know, we have the not so positive ones as well, like the BMX founder got arrested for violation of US AML laws. China as well. The OKEX, which is one of the largest exchange in the world, they has literally stopped all the withdrawal, you know, after the founder was arrested, probably a month or so ago. And then again, the not so good stuff, which is about $150 million worth of tokens were being hacked away in KuCoin exchange and so forth. But is this really not positive? Because, you know, in our talk with different governments and regulators, you know, they often brought up the point about the negative portion of things, right? So for me, if you look at the examples that I've quoted in this earlier introduction, I think it is more positive than negative. And then secondly, I think our industry is taking its shape. Regulators are catching up, and investors are more aware of what they are investing. So in a nutshell, I dare say that, you know, we are somewhat in the mainstream already. You know, you look at the things that are being talked about, the things that is being published on the news, and also because of the acceptance from the government, things are slightly more rosy and so forth. And then if you look at the government attitude towards cryptocurrency, a couple of surveyed countries, and also some of which that I work with personally, they categorize cryptocurrency differently for tax purposes. Some of them they look at it as a form of security. So things are moving on fairly well. Just quoting examples right now, like Israel, they treat it as taxed it as an asset. Bulgaria taxed it as a financial asset. Switzerland taxed it as a foreign currency. Argentina, Spain, they look at it more like subjected to some form of income tax. So things are putting in place, and corporations are also trying their way to get themselves to a more state where they are regulated and they are proper. So example, my phone call with UK regulators last month, you know, they talk about corporations got to pay tax, corporate tax, uncorporated business also got to pay a form of income tax, and individual got to pay the capital gain tax. So these are some of the take-home messages that is given to me by regulators, that, you know, they are very ready on how to cope with this big giant. So coming back to places like Singapore, where I'm at now, you know, we started to recognize cryptocurrency in 2017. A lot of companies are also resided in Singapore. You know, whether they are a shell company or really operating here, we do see a lot of them in Singapore. And the Payment Services Act, in short, PSA, in Singapore came into effect on January 28, 2020, if I'm not wrong, stating that the cryptocurrency business must obtain this license from MAS and also fully comply to AML CFT regulations in order for them to operate and start their transfer of cryptocurrency in Singapore and outside of Singapore. So such an act is a very forward-looking and a very forward-looking statement for us. And like you have mentioned, you know, we from a Singapore perspective, you know, also started other public consultations on other crypto bills to be passed on. Similarly, in places in Asia, you see very similar model that is being set forth. So having said so, I must say that again, you know, we as a practitioner, you know, we as a certain voice for cryptocurrency, we got to remember the rules behind us. You know, companies also got to remember the rules. I always like to say this, you know, we have to follow the rules that are being set, and then we are safe. You know, we just have to be upfront and open when you are dealing with unclear grounds, when we are dealing with regulators on cryptocurrency bills. And again, the cryptocurrency space have been shifting and changing very fast. Experts should also find channels to update government of their latest development, like DeFi, AMM, PMM, and to keep them informed of what are the latest scams even, or even Ponzi-like schemes that are in the market. So all these are proper education and awareness that must be told to the people and also told to the government regulators how the whole situation is like, and also help them to find ways to avoid getting themselves into all sorts of different fraud. By doing so, again, at this very beginning stage, the governments and also together with the bigger businesses will help to accelerate the kind of work that we have. So leading exchanges like Binance, are always giving free lessons to share how is the industry like, what is it about right now, and we should always look at credible sources and channel, and take good reference from there and share the right kind of thinking, with your communities and so forth. I would also like to emphasize on a few things that I got from regulators as a form of feedback. They are looking at this kind of a formalized think tank that it could be blockchain based, it could be cryptocurrency centric kind of a think tank that it could be accredited to the government. It is a voice for the government and so forth. Regulators are constantly looking at such think tanks to help enhance and upgrade their knowledge. So, so coming back again to the government portion of things, I must say that from a cryptocurrency standpoint or from a more blockchain technology perspective, the core areas that governments are always looking at are finance, supply chain, and some of which they are looking at some medical related solutions that we as a technology provider can help. So if you look at this, governments are very open. Maybe just another example. I think 2 days ago or yesterday, the world's second largest bank, which is China Construction Bank, has tapped on a Malaysia-based digital asset exchange, Fusam, for the insurance of 3 billion worth of debt security over a blockchain. I think that also tell us that this whole environment is changing, and this brought me to the next topic that I want to share on my end, is that the attitude from different companies, whether they are big companies, small companies, so forth. We need to have a very positive outlook in some of the things that we are trying to share from a commercial perspective. So the other topic that I want to touch on will be on commercialization. So right now, I also heard a different panel talk about STO, talk about different service provider like marketing company, how they put forth their services about blockchain and how they help the industry. I think those are good effort that is in the market right now. But I just want to emphasize on a few things about commercialization when we come to really getting the work done. You see a lot of us right now at this current moment, we are still talking about use cases. We are still talking about test pilot trial and so forth. To me, I think those things are very much 2019. I would hope that service provider to be more clear and more precise in terms of their price, technology, and so forth, so that you could actually get more buy-in from bigger companies to use your service. Right now is no longer about trial. If you are looking at commercialization and getting the right kind of revenue. So so you got to have very clear incentive to stakeholders and partners to drive the ROI in individual blockchain solutions and potentially create additional revenue stream and cost saving opportunities for your client and also for the government. The commercial potential of the blockchain use cases also needs to be tightened, and also working towards a more enterprise solution where you give your clients a sense of a certainty in the longer term. We also have to look at more integrative approach where blockchain can again scale and proper blockchain company can form a certain standardization or SOP for your clients. So I know I'll just spend one more minute on sharing some of the trends that I see in 2021. First trend I will see there will be a new introduction of things like prop trading, social trading, copy trading. I think that would go very well in 2021. As the market for STO gets a fair bit more mature, I hope in the third or fourth quarter for 2021, STO can be the new talking point. And the fourth thing that I want to share would be DeFi. Hopefully by mid of next year, things can be more standardized, and of course, a more reasonable interest can be adopted. And the last trend that I do see is that there are a fair bit of Lotto-related businesses that are getting into the blockchain and crypto market business. I'm talking about the more legalized one. And I do see that that Lotto business and also the crypto business can work hand in hand with what we do see in 2021. Last but not least, maybe a quick quote for me is that something for Bitcoin. I do see that it is possible, for all the current bull market to go even better, But for me, I do have a bit of reservation on how Bitcoin is going to grow, because I personally do think that there is a room for Bitcoin to grow up to 100,000 even. But once this starts, it will definitely affect governmental monetary policies and also fiscal policy. You will see a whole different reaction. So for me personally, I felt that the pumping or the increase in prices for the leading Bitcoin should stay at a certain constant rate and do not go beyond what is expected, so that we can continue to grow the industry further by providing the right kind of condition and climate. So with that, thank you. Thanks so much. And sorry for the technical problem.
That's fine. Thank you, Andy, for your speech. I really felt that you can speak about any point that you mentioned about DeFi, about Bitcoin, etc. for another 20 minutes or half an hour. We have a question from the chat. One person is asking, how should a non-professional, I understand a non-legal professional, understand whether a blockchain project is working in a compliance with regulation get scammed?
To be real honest about it, I think there's no way and 100% sure that this company is a real company or a not scam company. I think if you look at the startup environment right now, a lot of startups actually start off as a pure complete scam. They do not have a revenue model. So in order for someone to know whether this is a good project or not a good project or it's a scam, I think it boils down to the revenue model that is behind it. A non-professional investor or maybe even not accredited investor, I think they should be very much aware that investing and trading in cryptocurrency is a high risk thing to do. Even if you are now a registered investment advisor, like some of my friends in US, they got themselves scammed as well, because they can be telling you that they are registered in Malta, but actually they are registered in Malaysia or vice versa and so forth. So a lot of these things are still not very transparent. I do hope that some of this discussion and some of this verification or due diligence can be available on the chain, so that things can be checked properly. You know, if you are a Malta company, you are one, and you can check it in the database or on chain. Similarly, you know, for whatever reason of whatever entity that you're operating, you know, it has to be of a certain standard. So if you are called ABC company, ABC chain, your token is ABC, your company should also be called ABC. You know, there must be this kind of assurance that we are talking about the same thing. But bear in mind, in this current situation, you see a lot of Chinese company or even South Korean companies. All this data, they do not match. So there's no way any professionals can know whether it's real or not real, unless the regulation says that everybody got to be registered somewhere on a centralized or on-chain kind of a service provider, where all the names can be captured there. Else there will not be anything that is able to assure us of anything, especially when it comes to investments and very early investments products like a ICO or IEO or whichever that's going to come next. You know.
Definitely. Thank you for your reply. I hope it really helps and people can save themselves from scams. And thank you for the nice speech. It was fine. It was fantastic, and I hope it really helped people in understanding where the world and regulation are moving. And we're ready to welcome our next speaker.
Thank you.
Thank you, Andy.
Thank you.
Our next speaker is Nicholas Weber from Liechtenstein. He represents the company Amazing Blocks, who has engaged in legally compliant tokenization in Liechtenstein. And in previous panels, we actually heard from people critique of the legislation in Liechtenstein as perhaps too complex and dividing tokens into many categories. And it is very interesting to hear the perspective of Nicholas on whether this jurisdiction is probably suitable for issuing tokens and doing an STO. So Nicholas, it's a pleasure to see you here and looking forward to your speech.
Thank you for having me, first of all. I will just screen share. Give me 1 second. Perfect. Can you guys?
Not yet.
Yeah, it's loading, I think.
Yeah, it seems that
Is it there?
Yeah, we can see it.
Okay, awesome. So yeah, then first of all, thank you for having me at this conference. It's a pleasure to be here. My name is Nicholas Weber. I work for Amazing Blocks, a Liechtenstein-based tokenization startup, which focuses on true equity tokens in line with the Liechtenstein Token Act. I am currently in Frankfurt, Germany, because we also kind of apply this remote model, so to say, that is possible in Liechtenstein to ourselves. So yeah, after this presentation, feel free to ask any questions. And in terms of your comments regarding the potential critique of Liechtenstein, I'm more than happy to kind of, you know, talk to anyone that may have any issues or questions with this, and to kind of maybe ease this talk a bit. So what we do at Amazing Blocks is we focus on the legally compliant tokenization of shares and assets in Liechtenstein, and hence we provide a tokenization solution for the entire life cycle. We have a blueprint and templates in place for the establishment of a legal entity in Liechtenstein on the one hand, and then on the other hand, our core product consists of an issuance, administration, and investment platform for the entire life cycle of these legal entities and tokenized assets in Liechtenstein. We comply fully with the Liechtenstein authorities, the legal framework, and hence merge tech and law seamlessly. Let's just imagine for a second, and I think as most people here in this conference are familiar with, you know, what tokenization can do, and that you can basically tokenize anything in Liechtenstein. Still, I would just like to briefly introduce you to, for an instance, a new asset class that we are currently in the process of creating, where we in the future also want to build a liquid market. It's classic cars. Obviously, with our solution, any type of asset or traditional company shares like registered or bearer shares can be tokenized. However, I think classic cards is a very feasible use case, which clearly shows this is an industry that is very, fragmented. It's very localized, and also usually these cards in the hands of some high net worth individuals. However, especially retail investors or people that do not have the amount of money to pay for like an expensive card like this are usually excluded from this market, and hence tokenization could then be the solution here. And generally also, apart from this, turns an intangible asset into a liquid one, and therefore improves the diversification for investors. You can have a hedge against inflation. I think this is especially in the next couple of years going to be a hot topic, with all the money being printed, and generally it allows you to participate in your dream with a small amount of investment or with a large amount, obviously, as these tokens can be fragmented, or the ownership can be fragmented randomly or as much as wanted. Why is this the case in Liechtenstein? Well, they call it the unique or the token container model, where basically the token acts as a container. Or you can also kind of compare it to a pot with flowers in it. This is an example we sometimes use to kind of have a digital embodiment of all these assets and rights in place, which are then the tokens, the true equity tokens, and this is something obviously new in this world. Usually, I think most people or people that are not too familiar with Liechtenstein usually compare it with skiing, mountains, and castles, maybe. However, Liechtenstein is a regulatory pioneer, especially in our opinion, as they have a future-oriented legal and blockchain expertise. On the one hand, they have a kind of a cluster for blockchain startups in Liechtenstein in place, and on the other hand, from a regulatory perspective, they're years ahead. Liechtenstein is a member of the European Economic Area, therefore equity tokens in Liechtenstein have EU passporting, and from a foreign point of view are usually not compare or similar to a normal security, and I think this is a huge benefit also when comparing Liechtenstein to other jurisdictions that also have similar laws with the same degree of coping or addressing the token economy that is going to emerge in the next couple of years. Yeah, why is this possible? Obviously, the Liechtenstein Token Act, which has an advanced and supervisory rules. And this, therefore, it allows, especially with our solution in place, that we kind of, created in order to fully comply with all the necessary steps of the Liechtenstein authorities. It allows to avoid time and costly efforts for assets and share ownership, and generally you do not have the necessary workarounds in place like in other countries. For instance, with our blueprint, you can basically establish and subsequently tokenize your legal entity within a 3 to 4 week period. Obviously, exceptions can apply here, just to be completely transparent. But with the blueprint that we created with our team and our legal experts, this is something that we believe is possible. And yeah, Liechtenstein has a friendly tax legislation. I think most people here that know Liechtenstein are familiar with this. Has a robust investment climate. We experience this ourselves as the Liechtenstein authorities, and also the investors in this space are very supportive of our solution, even though a lot of our core team is not necessarily per se based just in Liechtenstein. It's also in Berlin and Frankfurt. And they're still very helpful in all the aspects that we need to kind of or they need to kind of collaborate with them. They have a liberal corporate law, and one of the core benefits, something that we at Amazing Blocks apply to ourselves, is a bankless incorporation. So what this means is that you can basically found yourself with Ethereum or Bitcoin, for instance, or just generally crypto assets. In the future, CBDCs will also be possible. I assume that you can pay when they're obviously verified and legal. That you can have a bankless incorporation with crypto asset as an initial contribution. We did this ourselves. You, for instance, can check it out on our Medium channel. I wrote an article about the whole process, which kind of details each step of the way that we took to fulfill this. For our clients that approach us, we have a template in place, so they can actually take care of this step themselves as well. And I think a benefit here is that obviously you do not need to travel to Liechtenstein to set up a bank account and have to go to notaries, lawyers, and do all the paperwork, because you can basically just continue with your traditional house bank for the operational aspect of your company or legal entity. Generally, Liechtenstein delivers the perfect conditions for setting up a fund with AAA credit rating and has a modern infrastructure and political stability in place, which is something that is quite important, I assume, with especially a new disruptive technology like blockchain that needs this degree of stability from the jurisdiction, from the regulators, in order to actually acclaim the mainstream adoption that is promised. What are the pain points nowadays with setting up a legal entity? I'm sure some of you know that it's a costly process with a lot of bureaucracy. It's time consuming. You have to travel a lot, something that the Liechtenstein model kind of jettisons. You have a lot of friction with intermediaries involved, especially when talking about ownership transfer, which, for instance, with our platform is a process that is really, like, from a time perspective, much reduced, and also from a perspective of having to go to notaries and lawyers is reduced to a minimum. So therefore you can have an efficient ownership transfer in a matter of, let's say, around 30 minutes. It's a paper-based system, usually nowadays, with really any digitization and a localized investor structure paired with a low degree of innovation. And also from the perspective of just generally the security token space, which is obviously one of the core, or I think, in my personal opinion at least, one of the most disruptive innovations of blockchain. It's like the legal framework is just not on par with what the technology can do, and this is something that Liechtenstein solves, and it solves it efficiently because they do not necessarily talk about blockchain specifically, but they just talk about the trusted technology, which allows you to kind of have a bit more flexibility there and kind of distance themselves a bit from the traditional approach. And therefore, yeah, what is our role in Liechtenstein? With the regulators in place on the one hand, and our legal partners that we have at Amazing Blocks. Then on the other hand, our token pad software, which we developed and has been audited, and the trusted technology in place, which in our case is Ethereum. We kind of see us as the bridge between these two worlds, the technology and law, but also as the bridge between the traditional world of finance and the blockchain space. With our solution, you can basically have multiple assets tokenized under one umbrella. So what this means is that you can have all kinds of assets like real estate, cars, gold, patents, art, and so on. You name it, basically tokenized, and the amount or the degree of specific different tokens are traditional debt tokens that you can have, the participation rights that you can tokenize, but also obviously the two unique aspects, the equity and ownership tokens, which are the disruptive parts of the Liechtenstein model. How this looks like is that you have a legal entity in Liechtenstein, as mentioned, which will function as the umbrella for which is also then tokenized, and you can have traditional shares for this, and then you kind of basically place these different assets, legal entity, which are legally owned by it. And yeah, and then you can have you can also on top of this have multiple entities with different spheres of tokenization, which will be then, from a balance sheet perspective, multiple different AGs, which are similar to an LLC for the American listeners, which are then under this umbrella. And yeah, and how could it finally look like? That you basically have like a whole portfolio with tokenized equity of all these different assets, which tend to be, or at least used to be, highly illiquid, and now you can have a liquid market in place, and in the future, for instance, you could technically even use them as collateral on DeFi protocols or so. In Liechtenstein, generally, they rely on three different pillars: the legal contract, the tokenization aspect, which obviously is fulfilled by smart contracts. I think I do not have to go into detail here. And then you have these different tokens where the ownership transfer and fundraising is made digital. For instance, we have investor onboarding on our software, and the investor's decision is made digital, and the subsequent minting and therefore issuing of these equity tokens is also made digital. The benefits here are low cost and save time, obviously, easier global transferability, faster settlement, and high transparency, which applies to the CEOs and the management directors, the new investors and existing shareholders, because our solution kind of addresses both perspectives. On the one hand, the management board, which has the issuance and administration platform, and on the other hand, the investor perspective, which then can also verify themselves with KYC and the possibility to have an API for AML verification. The general advantages of our solution, I think, have been quite crystallized throughout my presentation thus far, so I will not go into detail here too much. Yeah, one benefit is here, for instance, that you can have a fully automated and remote process. You can manage these entities end to end and 24/7, and therefore, you know, our entire solution is aimed for the complete life cycle, not only certain aspects of it. So basically, you have a whole solution customized for our clients' needs, because we can also offer it in kind of like a white label perspective, and like when a client which has a larger project approaches us, for instance, they can have their logo and all these aspects there as well. Features of our software include also a digital share register, engagement and ESOP programs, and as well as digital asset investment and ownership transfers. I think digital fundraising has been quite clear now. This is how it kind of pans out, or just like to have it like displayed for you guys. You have the issuer token pad, which is for the role assignment, investor onboarding, the whitelisting, and all these aspects, and the digital share register, obviously. And then you kind of create these tokens to this token pad, and then you can also sell the market your investor suite, which will then be able to kind of manage these tokens for the token holders, the investors, therefore, which will have to verify themselves there, and then it complies with the Liechtenstein authorities. We meet the highest degree of customer satisfaction, and because we have a customer-centric approach, as we believe we also have to address kind of, you know, people that are not too familiar with the blockchain space. So therefore, we also have a complete guide in place. We meet all the regulatory and you know, requirements. We have a high degree of implementation speed, and generally, in terms of our technology, it's very secure and reliable because we work with the, you know, best technical team in place. Also a special a company here in Frankfurt that assists us on this, called Mikobo. We meet all the compliance integrations and the requirements in terms of KYC and AML, and collect all the necessary data from a shareholder perspective. And from our offer, we have knowledge, issuer token pad, issuer and investor software, and generally in the future also, which is our goal for 2021, we will basically also offer tokenization as a service, where therefore no setup of a legal entity is needed anymore through the Liechtenstein model, but you can basically do it through us. We are embedded in a strong ecosystem. I think I kind of also already have to update this a bit, this slide. However, I mean, on the one hand, we have legal partners like Nagel Attorneys at Law, which were involved in drafting the Liechtenstein Token Act, and you know, technology providers like Mikobo, accelerators like BlockRocket, and so on. And on the other hand, also, you know, non-profit organizations like the International Tokenization Standardization Association, which is aimed to kind of standardize the token economy, which I think will be quite important for the future of attaining mainstream adoption. Our team consists of young and dynamic blockchain enthusiasts on the one hand, and then we are also supported by advisors which are quite established already in the blockchain space. So yeah, thank you for listening to my presentation. If you have questions, feel free to reach out now or later, whenever you want. I will gladly assist you. Thank you.
Thank you, Nicholas, for your speech and your presentation. Yeah, we do have a few questions from participants. The first question is, Nicholas, what is the difference in the legislation between Liechtenstein and Switzerland?
Okay, this is a very good question, because obviously we see that Liechtenstein, Switzerland, sorry, is also quite an advanced jurisdiction, obviously. I think just from a neutral perspective, the biggest difference between Switzerland and Liechtenstein, which by the way have a special agreement themselves in place, is that Liechtenstein has EU passporting, as Liechtenstein is a member of the European Economic Area, and whereas Switzerland does not have EU passporting, or at least not in the same degree that Liechtenstein does. And also a core difference is that Liechtenstein actually implemented their own law for this, the Liechtenstein Token Act, whereas Switzerland kind of chose a different approach in terms of adding to existing laws, more or less.
Thank you for your reply. There is also a question on your opinion, Nicholas. What is the best asset to tokenize?
Yeah, this is a very interesting question. I think this goes more into personal needs, because just from a neutral perspective, you can tokenize anything. And I think with for instance, real estate, it's a bit more difficult sometimes. So just to kind of jettison this aspect here. But what you can tokenize, in my opinion, is the best. I mean, our first use cases are on the one hand shares, because we generated our own equity for Amazing Blocks. So there's 600 Amazing Blocks equity tokens, which can be found on Etherscan as well. Also, I wrote an article about this as well, so you can feel free to read it on our Medium channel. But generally, I believe that, for instance, you know, an industry that can really be disrupted in the future, that is from an investment perspective, that has like a huge degree of intrinsic value, but is very regressive, is for instance also art, because just generally artists do not have, they have so many intermediaries in place there, so therefore tokenization can be a huge help there, also from a social perspective. And also what's quite interesting to me are patents and machines. The patents, why? Because patents are something that usually, inherits a huge value in, in a company, or especially in startups. However, there's no way that you can actually grasp patents and monetize them usually. And generally the process of, verifying them in the different jurisdictions takes a lot of time, takes a lot of effort and money. So therefore, this is also a great system. And also what is quite interesting, and sorry for mentioning too many here, but this is just so exciting, is like, for instance, machines, like these huge industrialized capital goods, which are like a 60 to 80 million machine, that when you apply a pay-per-use model as well on top of tokenization, you can kind of generate a passive income in the future, where you own a fraction of this machine and basically have a daily income with, for instance, a machine that produces wood panels every day. Well, then will have like a fraction of this income that is generated with the pay-per-use model every day added to your portfolio. And therefore, I think this is also quite an interesting use case.
Amazing. Thank you for your reply, for your introduction. And thank you for the presentation. It's great that we do have already jurisdictions where tokenization can be done much easier than without these cumbersome processes, and cheaper, and thus more accessible. This is what we do really need for mass adoption. So I wish you all the best.
Thank you very much, and thank you for having me.
Thank you. And now it's time to announce the next part of the conference, and this is one about which I'm excited the most, because this is the first time the public will see that digital securities dashboard we've been working on for a very long time. We started Stobox 2 years ago, and then did a lot of pivots and testing. We developed a platform for a year, then started from scratch to make it the right way. And there's a lot of effort put into details, into compliance features, etc. And at last, our CEO, Jean, is going to join us on the workshop and show you how it works, what we have created, what are the use cases, and what are the next steps, because this is obviously only the first version, first release with the first features, and there will be more and more added in the future, such as delivery versus payment and many others. So it's my pleasure to introduce again our CEO, Jean Dayev, who will show you the internal of the Stobox digital securities dashboard. Jean, looking for you to appear. please turn on your camera, share the screen, and let's start the workshop. I'll be assisting you during this time. We will show you the dashboard in two sections. It is divided on the investor's view, with the dashboard that you see as an investor where you can purchase securities, and the issuer view, that is your ability as an issuer managing the platform to manage your investors and their KYC status and sell tokens, etc. Actually, we were calling it previously the corporate view, but decided to call it the issuer view because corporation can be not only the issuer who uses the dashboard, but an investor as well. And one of the things scheduled for future releases is adding the ability for corporations, for institutional clients to invest via the dashboard as well. We're also thinking about adding the feature for secondary market, and not in the sense of regulated exchange, because this would require very hard.
Yep.
Yeah, Gene, it's a pleasure.
Hey, hi guys. Finally, Boris, thank you.
Thank you.
Okay, guys. So first of all, I'm very excited releasing the dashboard. It was a while, and it's a big journey. So I'll be happy to share the main concepts and how we see the world of tokenization via the Stobox products. So let me share the screen first. Can you see my screen? Oh, yeah.
Yes, I can see your screen.
Okay, so before we start, I just want to inform that we have just released the business documentation on the dashboard platform. So it's not a technical documentation, but by looking at the business, anyone can understand what are the flows, what are the functionalities, and how they work. So it's available public right now at the domain doc.stoboxplatform.com.
I'll share it in the chat.
Yes, please. One second.
Now you can read it live in the chat, and I posted it in the YouTube translation as well.
Okay, can you see the screen right now?
Yes.
Perfect. So before we start, I just want to mention that it's an Ethereum-based infrastructure that allows you to offer and provide for the sale financial instruments, manage investor relations, and facilitates secondary exchange. This is just the beginning of the secondary exchange process, because it's a very regulated and a compliant procedures. So we just make sure that everything goes smooth. Plus, the dashboard supports different type of operations with different kind of securities like bonds, revenue share certificates, shares, and so on. The dashboard itself, it's a white label. It's a SaaS product. So any company that seek to conduct an STO or to tokenize the existing shares, even without the offering, in order to distribute between the existing shareholders, Stobox dashboard is the solution. So as I said, there's two types of
Jin, we stopped hearing you on.
Sorry, Boris.
Yeah, please repeat the last 10 seconds of what you said because you dropped the connection.
Yeah, I said that its dashboard is the white label solution. So whoever, any company is seeking to tokenize their shares in order to do an STO, or just to distribute between the existing shareholders or existing investors, that could be possible. And there's two separate views. There's a corporate view and there's an investor view. So what we're doing now is that we're trying to register, and we'll be registering as an investor. So that will be the first step of our journey. So I will provide my. Also, it's in a demo version. It's not live yet. It will be live, and the first project that we will be doing that to keep the platform for is actually the Stobox. So we're going to run ourselves with an STO, and we will divide our own shares of our company between our existing shareholders, between our team, and promote security token offering via our platform as well.
In fact, is that we are tokenizing not only the part of shares, but actually the entire cap table. And other co-founders and the team, me and Jean included, we will have our own shares in Stobox stored on the blockchain as well. This is a next level tokenization.
Yeah, and the first thing I want to also mention is that we see that the button called Stobox ID, it's a demo. Actually, it's an alpha version at the moment, but the idea is to be able to collect the data of different types of investors, and actually that's a private data and sensitive data in order to keep them. 1 second, please. One second. Okay, do you see the screen, Boris? Boris, okay.
It's your screen, but please turn off your camera so that participant can see only the presentation and see all the details.
Okay, let me just find out how can I do that, and that will be great.
It should be below your screen, on the lower part of your screen.
Yep, now I can. Perfect. So basically, Stobox ID will allow any investor to keep the information, and whatever there's a different offerings that Stobox does, one can log in via that one SSO, it's a single entry, in order to participate in different companies, in different campaigns. So kind of this is SSO login for investors. Okay, because we're complying and comply with the GDPR, there's all legal information a person, an investor, has to comply with. Security verification, that's a must. So once we're registered, I'm not showing how you verify your email. That's a long process. Nobody is interested in. Okay, so that's the screen that's the dashboard of the investor. For the demo purposes, it looks as I have already passed the KYC verification, but once the person is registered, we don't have that information. So the investor has to go through identity verification. It's a very important step because one of the key infrastructure aspects and the concepts is that your digital identity has to be tied to your blockchain wallet. So whatever you're going to do with your shares, with your securities on the blockchain will be transported and will be stored on a centralized infrastructure to make sure that it was that specific person in that specific time who did that specific type of operations. So we're using blockchain ledger as the primary source of information on the amount of tokens and the dates and the transactions, whereas the information about who does what on a centralized infrastructure. So we comply with the general data protection rules from the EU, which is a very important aspect. It takes a lot of, the completion of that takes a lot of technical capabilities, as we have to store different investors from different countries on in the hosting, in the database in the different countries. So that's a bit challenging, but anyway. So once the person goes in, there's a different type of potential investor. It could be a corporate investor where you invest as a corporation, or it could be an individual. Again, we differentiate between public and accredited, and almost all of the kind of civilized countries have that differentiation. There's for example, in Switzerland, there's different terms for being accredited. In US, they're different. So we try to, depending on the country that a person provides, we will comply him to his local laws. So if he's a public investor in Europe, it will be different from the public investor in Ukraine or in US. So that's something, that system that we input in the system and will be developing within the development of the whole ecosystem. So assume we're a public investor, like accredited investor. We'll go further. At this step, a person has to provide and whitelist his blockchain wallet. So again, because we're using an Ethereum wallet infrastructure at the moment, we also oversee other blockchains that we're and can be capable of. But as of today, we start with Ethereum. So a person has to provide an Ethereum, let's say, wallet to make sure that we will whitelist further on. And investment details is something that a person would seeks to invest. So it's a reference numbers. So we would like to know before he passes the KYC or once he applies, we would like to know what would be his average amount of investment. So for instance, if he invests $1,000 or would like to invest $1,000, there would be a certain procedures imposed on him. But whereas he would like to invest 100,000, there would be a different laws like AML and additional checks to that specific person. So that's a reference number, but again, it's a very important in identity verification. So let me file that through again to show how we know that each country has or may have different criteria for identity verification. For example, in Germany, there's new standards imposed, whereas other countries don't have that. So in the Stobox, in this version, in the first version, we set up a basic KYC verification, but again, our system is API driven, so we can integrate with local providers to provide a better or more compliant way of knowing who your investors are. Example, myself. Let's go with the documents, date of birth. I'm not that old, but anyway. The importance is source of funds. So depending on the size of the investment you would like, an issuer, a company that you're applying to may find out where your money comes from, and it's a very important step. So for example, I have my own savings, so I would like to invest my savings. So the corporate would have to know that. Okay, let's say Kyiv, nationality.
For each investor, but this is precisely the reason why we're asking to know how
Can you say it again, please?
is going to invest in the first place, because we know whether we want to verify the source of funds, that the person want to invest $1,000 or $50,000. In the latter case, we will ask for the verification of the source of funds for the purposes of avoiding money laundering risk. Jean, we stopped hearing you, unfortunately. Yeah, now we can hear you again. Jean, it seems that you have some connection issues. Yes.
Can you hear me well? Can you hear me well?
Yeah, now we can hear you well, but you have disappeared 15 seconds ago.
So that's a typical procedure. Perfect. That's a typical procedure on the KYC, but again, it's a first version, and depending on the jurisdiction of the investor, different types of identity verification may apply, and that can be done either through us or through a third-party KYC providers, which we already have in our pipeline. That's my internet, I think. Okay. At this step, because we're dealing with security, very important to let know a potential investor what he's dealing with. He has to comply and all the legal aspects, and the risks involved. So, which means that he confirms that he will be dealing with securities in case of loss. He doesn't have any. Yeah, and it's a declaration. It's a declaration of consent. So when the investor checks all in, the verification, the information will be passed to the dashboard of the corporate. So I will show you later on. So the corporate manager will have to view that and either accept or deny.
So in our case, disclaimers
I've been accepted. So what do I see here?
Yeah, I've been saying that all the text on the dashboard, all the legal disclaimers, all the documents can be customized to the need for the specific issue dependent on the jurisdiction. So there may be differences dependent on where you're doing your token offering. Is this Liechtenstein or US or Singapore? And there is a complete possibility to customize all of these aspects.
Can you hear me well? Just give me 1 second, please. I may have my problems with the internet.
Yes, I can hear you well. By the way, notice the investment limit on the account. This is what we mentioned previously regarding the enhanced due diligence limit. So we decided on our own STO that the enhanced due diligence limit is $10,000. Before this amount, people still have to verify their identity, but don't have to verify.
Because I might have.
Yeah, Gene, we can hear you. We are just waiting for you to restore connection completely and sign it back.
Okay, let me continue then. So,
other detail. Yeah, go.
Yeah, once the address of the investor, along with the KYC data, was verified and stored, have access to his balances. So again, using the combination of Web3 technologies along with the centralized technologies in order to combine in one's neat process of investments. So we only whitelist 3 types of cryptocurrencies at the moment. So which means that he will be able to pay for the security tokens in either in 2 ways. First of all, it's a fiat balance, and secondly, it's a crypto balance. From the crypto balance, there's only 3 types which are whitelisted, which is a USD, Ethereum, and a Stobox utility tokens. Regarding the fiat, it requires an additional integration with either it's a bank or it's a neobank or AMI, which is an electronic money institution, money provider. So again, we have a couple of those guys in our pipeline. And the idea is to be able to provide fiat integration and delivery versus payment. So once a person seeks to purchase securities and buys that on a distributed ledger from a distributed ledger technology, the payment can be done automatically via the wire of US dollars or euros. Because it's the dashboard of the specific company that creates an offering, we can see what types of security tokens are available for me as an investor. So in this case, I can see a smart the demo common stock, and that's actually a deployed smart contract with the demo tokens, which we can see and verify on Ethereum blockchain. So basically that's anonymous cap table for our company.
And noted, there will also be a custom smart contract for security tokens.
Let's look at what is available for that.
So the smart contract for securities that is used for STBX and for others that we are issuing includes the abilities such as whitelisting, so that not every person can purchase it, but only after the KYC. The ability for the remote burn and management and freezing of these tokens to provide ability for the issuer to, for example, burn the tokens on the wallet to which the private keys are lost and restore on other wallet. Things like that, or to enforce a court decision, because securities are managed not only as a technical thing, but also in the legal field. And these features of the smart contract enable to enforce legal decisions on the smart contract. Just wanted to mention this point as well.
Yeah. Thank you, Boris. I also want to add a bit more that because we're dealing with securities, all the corporate actions which can be done with securities should be done via the blockchain. So we have developed our own smart contract for securities, which means that they can be
Jean, unfortunately, you have disappeared again. So try to do anything to your connection. Answering to the question in the comments, yes, you can tokenize a fund with Stobox. Reach out to us on the email. I'll write it in the comments now. Sorry, Jean, you have disappeared for 30 seconds approximately.
Can you hear me now?
No.
Can you hear me now?
Yes, Jean, now I can hear you. So continue, please.
I'm very sorry for the connection. I'm very sorry for the connection. I don't know what's going on. Anyway, so the investor is exposed to a certain type of information that a company that does an offering that invites a specific investor to joins, the company shares information. So when we type the company profile, we'll have an extended information on that specific company. Again, it's not because of the companies, and that specific company can issue any types of securities within itself. So that's an access to a specific company. So here, and actually that's a correct information. It's a Stobox Technologies Inc., which is a C Corp based in the United States. There's an extensive information on the company itself. The company issued corporate securities, which is a common stock with a specific ticker. And again, this information can be validated on the Ethereum blockchain. A company may have an investment opportunity, which is an STO, or for example, it may not have. In a case where the shares are being divided, shareholders, and company does not seek to attract new investors. In this case, the company would not have investment opportunities, but anyway will be able to have their stocks tokenized on the blockchain. Boris, I just want to make sure that my connection is fine.
Yes, your connection is fine. I hear you perfectly.
Perfect. Within the offering, it's a very important to provide an investor with detailed information on what are the rights of that specific offering and what are the company. So the company is from a fintech, financial and software sector. It's a private offering. It's come from United States. The offering will start, and actually that's true, we will start our STO on the 1st of December. That will last till the May of 30th. We will provide a certain rights to that common stock issued in a security token, which means it's an equity right and a dividend right. We also oversee the voting rights or revenue share or any other conditions, but that specific security will not allow that rights for the investor. And also we can see that it's an active investment opportunity. Questions about how we make sure that the offering is compliant. And actually that's something that company has to translate to the investors. So if they provide certificate of incorporation, let's say a good standing, different board decisions. For example, we have a board decision that we've created in order to tokenize our shares. So that's an official board decision, revised and filed into our US paperwork, which means that our smart contract and whatever is written there, it's a primary source of our cap table management, even though it's in a non-personalized form. We have an infrastructure that would be able to provide specific names and family names and investors for those who actually hold those securities. And also it's a prospectus memorandum. Management, and this how the page of the company profile page looks for the investor. So once I'm in and I would like to, let's say I'm happy with the Stobox Technologies Inc. and I would like to, let's say, invest, I would go to a buy function. The purchase consists of 4 steps. And let's go through that. So I will type an amount of security tokens that I would like to purchase. So in our case, it's a common stock. Again, the reason why we asked the reference number, how much you would like to invest in the first place, is in order to compare those, realistic and non-realistic expectations, and ask questions if investors have provided absolutely different data for that. So let's say I would like to invest in euros and go for the next step. Because it's not like with a typical crypto. We actually have to comply and we copy the flow of the actual security purchase, which means that on this step, a person has to go through the security token purchase agreement. So this is a document he has to agree. He agrees the document in a PDF format is signed by him, which will be legally recognized as the signature. So we track the IP, we track that specific person, and we know when he did so. So when he signs that, of course, he doesn't make the
Yes, answering to the question in the comments section, you will definitely have access to the recording of this workshop to see everything again, to notice all the details. And we can, if you have any specific interest, you can definitely discuss it with us. Regarding this point that Jean is discussing, this is one of the many that are actually lost in many STO purchase process, but actually purchasing security tokens is purchasing securities, and this have to be verified by certain agreements. For example, or it seems that Jin disappeared. I hope he reappears again soon. Meanwhile, I'll tell you about these compliance details. So what you want is you or your investor will be able to actually verify that he is the owner of securities when he comes to the court, for example, or to regulators, and signing an agreement allows to do this kind of verification. I assume while Jin is not here, I'm going to share my own screen and continue the presentation. So I assume you're seeing my screen now. I'm going to the investment opportunities section that Jin was showing, and now I am where we've been previously buying shares. Yeah, so this is the point of signing the agreement. In one of the future releases, we will add the integration with DocuSign or a similar entity. So people will have to physically, electronically sign the agreement with their signature. Currently, we ask them to input the confirmation of the payment, as it requires certain effort. This is also, from the regulatory perspective, one of the options to show that you actually agree with the terms in this agreement. Actually, this agreement, I want to point out, we designed it ourselves. So this is not like a custom security token purchase agreement that you've random security token purchase agreement that you can find on internet, but a custom one that we have developed ourselves to notice all the specifics of our offering, and we can help you to develop your own stock purchase agreement as well to account for your specific needs. Now, when coming to the payment method, there are two options that you can choose: the wire transfer and the crypto transfer. Actually, we have left both of these to cater to the needs of all kinds of investor, and obviously many are more comfortable with doing the common bank transfer, because STOs, security tokens, should be open not only to super innovative investor who know well about blockchain and this kind of stuff, but I believe that they should be open to common traditional investors as well, and for those for whom doing wire transfer via the bank is more comfortable. So I'll now show you how the payment is conducted with each of these two options. If you're doing a wire transfer, an invoice is generated for the client. He can then download this invoice and go to the bank to conduct the payment. And after that, either confirm. Oh, it seems that Jin is coming back to us.
Yes, guys.
Jin, nice to see you here. I've been just on the step of showing the payment procedure for wire transfer. A crypto transfer I haven't shown yet. So I am giving the lead to you now, and please continue from here. Glad to see you back. Jin, are you here? Are you with us?
Yes.
You just stopped your screen sharing. Yeah, you're back.
I'm back. Yeah, sorry. It's all about technical problems these days.
Yeah, almost all speakers are having.
Almost all. Anyway, sorry, gents. So we are at the final stage of the payment confirmation. So me as an investor would like to invest 450 euros in that specific common stock, which I've known everything about, I've read. And what I'm gonna do is choose the Ethereum or USD. pay. At this stage, we haven't integrated the Web3 for the investor. So investors should pay that specific amount of cryptocurrency from a different venue. Once we will go live, the investor will be able to do from his own MetaMask on Stobox. So just give an example that I paid for that. One second. I will provide the hash function here and confirm. Once the corporate will see my inquiry and fulfill that, the corporation will send me the security token, and I will see that in my transaction history. So here I see that I've requested 10,000 from myself, and I received that amount of security tokens to my specific wallet. And this is a proof. I can also open a hash and see that these specific securities were transferred to my wallet. So this is the part where the investor looks at the company. There's a second dashboard for the company itself. Let's look at this. It's based on a different domain, and it should be logged via the company managers. It's very important also to understand that we don't provide registration for companies via the web. So once we have a client, or whatever, we deploy that dashboard to our clients, we will provide the credentials and we will input all the information for them in order to create the corporate part of the dashboard. Let me just log in. Security measures. Okay, because it's a mixture of a centralized and decentralized technologies, we make sure and we allow for the corporate to log in via the Web3. For example, we will be using a MetaMask as a Web3 provider. Because I have already a session, MetaMask didn't ask me for the permission. But if a corporate doesn't have, the MetaMask will show up and require the authorization of the Stobox dashboard to the MetaMask. So what can the corporate do here and see here? Again, we have the specific balance, which is on the corporate wallet. So the corporate makes sure that there's enough balance to conduct certain operations. The wallet has been whitelisted on the database, and whoever receives any specific tokens from that wallet within the dashboard, they will understand that it comes from the company itself. Here on the tokenized securities, we see actually our common stock. We had a 1 million common stock issued at the price of $1. So the 10,000 were sent to certain investors. And we again can verify and look at this on Ethereum blockchain. Once a person registers and passes the KYC, we can see him as a potential investor. So we see the whitelisted wallets, first name, last names, and the countries that these investors come from. And again, as I said from the very beginning, there are different types of accreditation. It can be public, sophisticated like in UK, accredited like in US, and all these different types of investors have their own limits, rights, and the corporate has to fulfill them. So they have to know them. So we as a Stobox, we help them by framing that. So an investor would not be able to purchase that specific security unless he is legally capable to do so. And this is a kind of an AML-regulation part, which we work on, especially on the decentralized part of the system, because the idea is to be able to enforce a regulation layer, which means that different types of investors can participate in the primary or secondary market with assumption that whatever they do is legally compliant. We have four statuses for the specific potential investors. For example, like he's not verified or he was suspended because of certain activity that we as the issuer may look suspicious, or we can disable that specific investor because he, for any corporate reasons, or he can be verified. This step, this part represents the registry. So this is a digital security registry, and this is the amount of, actually that's the registry of the common stock. So we can see what type of wallets, who actually owns what type of securities, what is the stake, what was the last transaction, and if we need to know when we will have to review his KYC. Some countries impose standards that KYC has to be or must be reviewed after 365 days. So it means that if I'm an operator, be informed to, let me show you, to actually re-KYC of that specific person. So by doing this, we will automatically block his securities on his Ethereum wallet by writing into the contract. So he will not be able to sell or to transport his security tokens unless he verifies or re-verifies his identity. So this is an investor information, me as an example. This is information which is provided by me on the, on the registration and the KYC part. But as the manager, I am able to alter this information to impose limits on the secondary market, on the primary market, source of funds. And if I'm, as the corporate manager, see that I have any hesitations, I can send the specific person to be validated by our legal KYC providers, like for example, Identity Mind. I will pay for that. I have a different type of payments. Let's say I would pay with the Stobox security token. I would conform that. Okay, probably because of the internet issues. But anyway, I will be able to pay right now, and this information will be sent to a specific KYC provider, and I will have Boolean data 1 or 0, which means that if I can accept that person or I should reject him. Again, in terms of investor management, we can suspend people, disable people, and thus this will be enforced into the blockchain itself. So none of the actions can be done with the wallets unless once they've been blocked here. I just want to make sure everyone hears me, Boris.
You perfectly. As soon as you disappear, I start speaking
Perfect.
instead of you, so that you don't get bored. So,
okay. Okay, buddy. Good. So, move on. We have an ability to send security tokens to our whitelisted investors. And again, within the smart contract, we have a whitelisting feature and limits feature. And if the specific person is not whitelisted by us, by company, it means that he cannot hold that specific tokens. So the transaction on Ethereum will not go through unless the person is whitelisted via the dashboard. Let's look how the transfer is done. I will be, instead of transferring to the wallet, I will be transferring to certain people, because the infrastructure allows me to send to that specific person because his wallet has been whitelisted and attached to his digital identity. I have my securities. In this case, it's a demo Stobox security token. Let's say there's a 1,000 of that, which I have to send. And we also oversee that there could be different type of reference IDs. For example, if I was sent, me as a corporation, I was sent a wire transfer, and in order to send the tokens, I would like to input the invoice number or the contract number which was signed. So let's say a contract number 1 from 13th of November 2020. So that will be stored for the future references. So the system asks me if I want to do that. I say yes, and voila. Let me just find out. Okay, at this stage, I might have some problems with Web3, but at this stage, I will be called a MetaMask, and these tokens will be sent to that specific wallet. The same with the free of payment. Sometimes you need to make a transaction without the payment being received. So you want to distribute existing shares, so that you're gonna do that by using a free of payment. So there won't be any tractions of the offering. Let's look at the offering part. We also oversee that the button like create an STO. So any corporate that has the dashboard will be able to create their own
Jin, we stopped hearing you, so I'm waiting until you reconnect back. Continuing what Jin was speaking about, this section offerings may be used to create your own offering of securities each time you're having it actually on the legal domain. So on practice, you are probably having multiple offerings of securities, and you may have many securities. For example, as a company, as a startup, you will have round A, round B, etc. I am getting back to the dashboard. You're going to have round A, round B, etc. on one hand, and on the other hand, you may have multiple securities listed on your dashboard. You may be a fund having several different units corresponding to different fund strategies, or you may be, well, why can't I log in as a corporate user? Interesting. Anyway, while we are waiting until the Jin reconnects, one of the use cases of the dashboard is actually that you can sell securities of other clients through it. So you can be, for example, a regulated financial intermediary selling multiple tokens through the dashboard. Or you can, for example, have a real estate marketplace. I'll be speaking about it tomorrow, and have multiple properties listed as multiple investment opportunities on your dashboard. So the section offering allows you to create multiple offering corresponding to multiple securities, or to one security, or to different investment rounds in your company. You can have even several simultaneous rounds. You can have one round of selling common stock and another of selling a preferred stock. So this provides you flexibility in managing your capital structure as a company and operating the dashboard not only as your personal dashboard for selling securities, but also as some sort of crowdfunding platform. Other sections that Jean was going to show you was the section with transactions. The point of it is that you can see the requests from users who want to purchase securities on your dashboard. So after the investor filed the securities purchase transaction, after they have actually confirmed that they sent you funds in fiat or in crypto, you are receiving as an issuer a request from this user to send the tokens back to them, and this allows you to see whether you have answered to all the requests and sent the investors the right amount of money. And one of the functionalities that we are having is actually that we allow you to compare the amount people wanted to buy versus the amount they bought realistically. Jean, hi, glad to have you back. Are you sharing your screen?
Yes, I do.
Great.
I do share.
A friend told me
I'm really pissed off with the internet connection. I can't do much about it, but
yeah, my friend, I've been told that actually on even Microsoft and Google during the hearing in the Congress virtual had internet connection problems. So we're in a good company, I would say.
buddy, we're better than Google. And should be better than this. Anyway, sorry for that. I just wanna let's look at the transactions. So there are different statuses of the transactions and the different quantities, investment amounts, and let's say those two transactions have been approved. So let's look at this. So one was paid with a wire and the second was paid with a crypto, and both of them were approved by the corporate. So here it's a receipt of actual it's a request for certain amount of tokenized securities, which we call an allocation amount. This is an amount that I would like to purchase. Actually, he paid with an USD.
David,
Yeah, hi.
we can hear you.
Can you hear me?
Luckily. Great.
Okay, good.
Yes, we
Good
can
morning,
hear you.
Boris. How are you? Or good afternoon, I guess. Were you?
Yeah, been just given a work, but internet connection problem just killed us all. Jin been given a workshop or showing the functionality of the dashboard. You saw it, and now he disappeared. So I am glad that you are continuing the event. It's a pleasure to see you, and I look
Nice
forward
to see
to
you
hearing
as
your
well.
speech.
Yeah.
If you want to share your screen, there is a button below, the icon below that looks like a computer.
Right.
It
I
is
just
crossed
took that
with
off, and then I want to try and get try and figure out how to share my presentation, right?
Yeah, after you click screen sharing, you can choose what you're going to sell, the entire screen, the specific application, or the Chrome tab. You should specifically click on the things that you're sharing.
I'm
Does it
trying
work?
to figure it out. No, that's not the right one. The hell here. It says, okay, share my entire screen. Okay.
Probably the browser is asking a permission to get access to it.
Well, it says share, but it's not picking it up.
I had a similar problem with my Mac. One of the things that may work is to share only a specific Chrome tab. So I also couldn't share the entire screen for some reason, and couldn't share in application window, but sharing the Chrome tab specific.
It's giving me the application screen. I wonder if you know, I know you saw the screen. Can you see the screen now? You can't.
No,
okay.
Now I can see it.
Sharing a window. Let me see. Damn it. Yeah, it's allowing me to share my application, but it's not allowing me to share my what do you see right now? If I put this up now, do you see a slide here?
No, you're not sharing your screen now.
I can't figure out how to do it.
In which application you have your presentation?
It's in PowerPoint.
Mm.
It's a PowerPoint presentation.
And you can share the PowerPoint as an application.
Well, I mean, that's what I'm trying to do, but it comes off. It doesn't give me. Let me see if I can.
Yeah, perhaps you can open it as a Google presentations. I've been testing Google Slides, and they've been working well.
In Google Slides?
Yeah, let me show you for a second. Like this. So, this is my presentation for tomorrow. The Google Slides are sharing well. This may solve your problem.
But this is not. These are. This is just a PowerPoint presentation. It's not in Google Slides.
Mm. You can send me the presentation via email, and I'll share my screen.
Okay.
With this presentation.
What's your email address, Boris?
I'll write to the backstage. It is BP Stobox. Wait, second BP Stobox IO. You can see it in the backstage chat. Can you see?
Yeah. BP at stobox.io. Okay.
Yes.
Okay. BP dot BP at stobox.io. Okay, there we go.
Yes.
I just sent it to you.
Refreshing the page, email page every second until I receive the presentation. Yeah, I assume next time I received it.
Okay.
Open with Google Slides. Just a few seconds and I'll be able to share it. Yeah, it works.
Okay.
Now, just tell me each time I have to transition to the next slide.
Oh, interesting. This thing's not okay. It's not picking up my camera. I don't know why that is. Okay. Okay, so that's yeah, I will. Okay. Right. That's good enough.
For those who don't know, before the presentation begins, let me introduce David. David is one of the most recognized finance professionals. He is former vice president of NASDAQ, and now he's creating an innovative investment banking network to make financial advisory and capital more accessible to smaller enterprises. It's a pleasure to have you with us today.
Thank you, Boris. Appreciate it. Nice to be with you. Why don't we go? The title of our presentation is "How Tokenization is Going to Transform Private Markets," and so why don't we get into it? Next slide, Boris. There we go. Okay, just a little bit about us. We're a rapidly growing cloud-based investment bank. We have professionals right now in 17, 18 of the 50 states in the United States already, and we have them in a couple of countries overseas now. And we're pretty rapidly growing. And as I said, we're probably at around 100 investment bankers this year, and they come out of all sorts of different firms, from Credit Suisse, Lehman Brothers, Barclays, Robertson Stevens, which was one of the old Four Horsemen technology boutiques in Silicon Valley, and so we're following this model to largely fill the void that exists in middle market for middle market investment banks and servicing small and medium enterprises. Next, Boris. There we go. So, these are just some things on my background. As Boris mentioned, I was a former vice chairman of NASDAQ many years ago, and we've had quite a bit of influence over the years. I've spoken at the G20 in Istanbul, the OECD in Paris in Italy, and for them at the Asian Corporate Governance Summit in Tokyo. I just got back from the World Knowledge Forum about a month ago in South Korea. Spoken at the Federation of European Exchanges 1 year when it was held in Zurich, Switzerland, 1 year when it was held in Oslo, Norway, and not infrequently at the SEC and in Congress in the United States. As many of you know, there are a couple of things that we've done that have led to major legislation, including the Jobs Act that gave birth to crowdfunding and other technologies, which are obviously important to to developing private securities markets here in the United States. And the FAST Act, which was really a technical corrections bill, kind of excited about getting to work because the gentleman who is running the transition team for President-elect Biden was actually one of the first advocates for the Jobs Act in the U.S. Senate, and so I've got a fair degree of optimism that we're going to do some things that hopefully will help improve capital formation broadly in the United States. But that remains to be seen. I don't want to jump the gun. And also, Wield & Co. has a blockchain investment banking practice. We've actually got a couple. One of which is called Emergence at Wield & Co., and we're very actively engaged in the space. Next. So, a couple of boards that I sit on, INX, which is the first, it actually got the first token for an operating company approved by the U.S. Securities and Exchange Commission, and it's in the midst of its IPO. This is a pretty interesting company, largely because it was a pioneer going through the Securities and Exchange Commission, and because it's going to make markets in digital assets. It had to go through not just a review to get the token that it's issuing approved and signed off on by the Securities and Exchange Commission, but also had to have its business model reviewed and approved. And so it's a good template for those of you that are sort of interested in how things are being looked at in the United States. CorkNX, which is I'm an advisor to, is a Canadian-based, Toronto-based company, which is an all-in-one platform for private companies. And interestingly, it doesn't actually use tokens. It's a closed-loop system on the block. Next. So I was fishing around for growth projections on what tokenization is going to look like, and this is actually one that was published in 2018, and it projects that by 2007 there'll be $24 trillion worth of tokenized assets in the world, which is, rather stupendous. But when you think about just U.S. equities markets, for instance, there's in the public markets alone in the United States, and this is one of the smaller markets, there's already $40 trillion worth of assets just in that one equity pool. So, there's a lot of room to grow here. And if you go through and parse through the detail, the unlisted equity tranche is upwards of $6 trillion projected by 2027. And there are a number of these tranches that are in private markets currently, like home equity and other tokenizable assets. So it's projected to be rather a large, broad scale adoption of technology, and for a number of reasons, because tokens offer some advantages. We'll talk about that in a second. Next, Boris. I hope that got your attention. I urge people not to just focus on the tokens. What's the magic in private markets is really the application layer, what we call smart contracts, where processes are triggered by events, contract conditions, including compliance checks and the like. And so in markets which are largely regulated, and there's a major compliance factor, and particularly when you're looking at going multi-jurisdictional, cross-border, what we have here is a suite of technologies that, when integrated, will allow people to much more cost-effectively navigate capital raises cross-border, and ultimately to be able to trade securities in private markets cross-border without violating securities laws. And so it's going to take down that sort of that inertia, that constipation, and minimize it. That's required high-touch use of very expensive lawyers, and so as a consequence, by taking out reducing much of that friction, it should allow these markets an opportunity to develop. Next. So, you know, what the smart contracts itself are wedged between the token and the block layer. And some of these systems, by the way, don't, you know, which I group into the same category, which are digital markets, are closed loop systems, and they don't actually trade tokens, but they do use smart contracts and they do use the general ledger. But these are all part of this sort of the same family and the same sort of evolution or revolution that's going on. The advantage of this application of technology is that it gives people autonomy and the availability to ultimately be able to hit a button to execute a trade, which has not really been the case in private markets until recently. We're starting to get there. It also allows you to be compliant. I mentioned the multi-jurisdictional compliance portion of it, which I think is really interesting. And then that you'll be able to trust these systems because documents are all encrypted and generally on a shared ledger. There's backup. I mean, particularly in distributed ledger systems where you can have multiple copies, and so even in the case where there's a nuclear magnetic pulse or solar flare, which would knock out systems, there's a case to be made that if you've got an instance or a node on the other side of the globe, that you'll have backup copies of the technology. And so in some regards, it's more it has the potential to be significantly more resilient. There's also obviously significant savings in terms of elimination of intermediaries, most notably lawyers. And then finally, because things are automated and done on the computer and you're eliminating individuals, there's an elimination of manual errors. The impact to issuers, and some of this may have been cut off, but we're going to expand the reach for capital raises. And one of the things that I do advise folks to do is, if you are doing a capital raise, see if you can offer investors both a token option and a traditional security option. Why we are going through this sort of crossing the chasm part, where the adoption phase of the marketplace, because there are some investors that just simply are not yet comfortable owning tokens. And so, you know, I like to say that the customer is always right, and you don't want to tell the customer, who's the investor in this case, that they can only gain exposure to your company in one modality. If you go back years ago, we started out with everything was done in physical stock certificate form, and then we went through electronic centralized delivery. This is sort of, in some regards, you know, part of the evolution, if you will, of settlement and delivery. And it's an interesting and exciting phase, because it should really help crash the cost of transacting in securities in private markets. Next. So, and we talk about components, and I'm just going to give some people a little bit of a framework for how to think about this, but we have trading platforms. Are they open or closed? Issuance platforms, smart contracts, valuation, which I want to drill into a little bit, because this is really important in marketplaces, and blockchain protocols. Whether you're on Hyperfabric Ledger, which is used by many in the financial institutions community, Ethereum protocol, so on and so forth. Valuation, it obviously in opaque, not smaller kinds of bespoke issuances, one of the problems is valuing securities, right? And so, you know, my belief is that most of the successful issuance that's going to sustain attractive prices, if we start to trade in private markets, is easier to value assets, or methodologies that are going to make it much easier to do that research valuation portion of the analysis on a company, or, for example, real estate assets are a lot easier to value bonds because of the the coupon, the yield-oriented investments, so on and so forth. When you get into sort of story-dependent investments, you need storytellers, and it's really difficult to get those stories out there. It's very high cost, and so we're going to start to see technologies that, get to sort of doing research through artificial intelligence mechanisms. I'm going to talk a little bit about that in one company that's doing that to drive down the cost of creating sort of research outputs to help investors value stocks in the aftermarket. Next. So here are 3 companies. The first one is a company that does a form of artificial intelligence research that's actually just starting to be, and by the way, we have relationships with all of these companies. And so that's the reason why we know them the way we do. CrowdSmart does what we call collective intelligence. There is a lab set up at MIT right now, run by a professor named Maloney. And what this platform does is it takes panels of experts, up to 25, and it is seen to outperform individual analysts, individual venture capitalists. And so this technology is increasingly being used by endowment funds and also as part of the onboarding process for private markets that want to see companies tokenized for trading. And I'm not at liberty to say which of those markets, but there's one on the West Coast, it's based on the West Coast, one on the East Coast right now that are designing this technology in. And it only works with pretty sizable companies at this point, because as you can imagine, if you have to seat a panel of experts and do a 360-degree analysis of a company and take their qualitative input and turn it into qualitative outputs and recommendations, it's not inexpensive to do, but it is highly efficacious and it's highly compelling. Another company which is working on commercial real estate, and I find this very interesting because it turns out that a lot of the insurance and other companies that have major real estate assets are largely holding these commercial real estate assets as tier 3 assets, which means that they have to set aside quite a bit of capital on the balance sheet. And so one of the big 4 accounting firms has issued an opinion that this firm's methodology for doing continuous valuations of these of commercial real estate assets will allow companies to recategorize these assets as tier 2 assets and free up capital on their balance sheets, which I think is really a pretty compelling value proposition. As I mentioned before, CoreConnex, which is a company based in Canada, does multi-jurisdictional compliance, but it does blockchain and trading and settlement as digital securities without tokens. So it's a closed loop system. And so you're going to see in this marketplace the emergence of open systems where you can trade tokens sort of basically on any trading system, any marketplace. And you're also going to see closed systems where you just get a digital account. It tells you what you own with that particular company. It's traded across the block, but the representation is in the account, and you're not actually given a token. So the revolution, if you will, or the evolution is here. It is we're seeing more and more of it. Adoption is a little bit slow, I would say, in some areas. I think Europe and Asia have been better at it than maybe the United States. I think that where we're really kind of interested in seeing the market going is where DTCC, which is the centralized digital trust company, this may be counterintuitive to people, will start to accept tokens as deposits, so that then if people purchase tokens, they can be reflected onto their traditional securities accounts. I think if that happens, you're going to see an awful lot of money pour into tokens, and obviously that's good for the business. We just need to make more of the capital that's in the marketplace largely accessible to investment in tokens, and I think that those kinds of changes will really remake the entire market for the better. Next. So I just, this is very typical of emerging technologies. And if you look at the token industry, I just want to give you a sense of what to expect. I mean, we're in the proliferation sort of early phase of this marketplace still right now. You're going to see a lot of innovation. You're going to see a lot of niche development, different kinds of business models. And we're going to kind of quickly move in the next year or two into an accelerating adoption phase where more and more investors and increasingly institutions, as we get comfortable with custody issues, start to feel comfortable in putting money into the market. We're partners with a research group in New York called Multistrat. The founder came out of Morgan Stanley, was head of strategy. They do a lot of macro research. But they also do research in the blockchain area. And it's interesting because their client base, which is largely institutional and some family offices, is increasingly interested in things relating to crypto and tokens. And so, you can start to see just through the subscriptions of research, people doing their homework and increasingly thinking about how they're going to gain exposure to these markets, which is very healthy to pushing that accelerating adoption phase of the market. And at some point, we're going to reach a little bit of maturity. That's quite a ways off, but you're going to start to see acquisitions, consolidation, rationalization. And, right now we have an inordinate number of places where you can trade crypto. At some point, you'll start to see that consolidate down and get rationalized. We haven't even gotten to that point in the private markets yet. Private markets are obviously lagging the crypto, the traditional crypto market, if I can call that, if that's not an oxymoron. So I think that this is a very, very, very interesting area to right now be an investment banker, to be an entrepreneur. And you're going to see, I think, some really significant benefits ultimately derived by improving private market access. What you will have happen is that some of those trillions and trillions and trillions of dollars worth of public assets will start to, as private markets start to function more like public markets in terms of providing liquidity, you'll see more money get allocated to private markets, which is, from a public policy standpoint, incredibly healthy, because it means that more innovation, entrepreneurship will get funded, which is obviously incredibly important to social impact, job formation, upward mobility in each of our economies, and wealth creation. And so, the real job formation and real technology innovation occurs generally with smaller companies. And so there is always this, this challenge of how do you make more money available to entrepreneurs and make it and lower the bar so that they can ultimately get an exit. The gestation periods for entrepreneurs can be decreased. And I think that one of the largely untalked about benefits of the tokenization movement is that ultimately it will make more money accessible to more entrepreneurs, which is a very, very healthy thing that I think all policymakers should be able to embrace. Okay, Boris?
Thank you for your amazing presentation, and it was very interesting to hear. And actually, you raised an interesting question, because many of the previous speakers and also practicing CEOs of tokenization platforms in the industry mentioned that one of the most exciting industries for tokenization is actually real estate. And you said that you actually rather seen one of the big benefits of tokenization in capital going to early stage companies to help drive innovation. Do you think, and in terms of companies staying in the private markets, early stage companies who are doing the most innovation are not the only ones in the private markets. There is the real estate, which was mentioned by many previous speakers. There are bigger private companies who are just not going public, which may be not very good from the perspective of transparency and corporate governance. So in your opinion, what should be done so that the capital goes specifically to the most innovative companies that are on the private markets?
Well, no, I mean, that's why I think, Boris, that forms of artificial intelligence that can, that I'm really interested in CrowdSmart, what CrowdSmart is doing, because, what they do is they seat a panel of 25 experts and they give a 360-degree view on a company, and they take qualitative input and they turn it into quantitative output scores to tell you, whether or not a company is good. I mean, you can start to see that kind of, if you can drive down the price points. Right now probably costs about 25 grand to do a full-blown 360 analysis, but it also provides outputs, has the potential to provide consultative outputs and help people do a better job of running their companies, right? And so I think that what we kind of thirst for is how to value these innovative companies or stories, right? They don't, a lot of times they're pre-revenue in the earliest phase, and they're absolutely essential to kind of plant the seeds for the next generation of companies to grow the economy. And so you need gray matter, inputs to be able to value these things, and you need storytellers. And so there's two things that I think that will kind of happen simultaneously. One is restructuring our capital markets, right? So that there's an economic incentive for storytellers to get out there and tell stories in the aftermarket, right? Get on the phone with an investor and say, there's a great little company here, you're gonna, this thing is, gonna transform the world. And I'd like, you should think about, buying $500 worth of, tokens, or whatever the case might be. And so the markets have to be structured in a way which is going to support that kind of dialogue and information flow on the one hand. On the other hand, the cost of getting research together needs to be driven down. And I think that that's where artificial intelligence kinds of methodologies will and inputs, whether you crowdsource that information and turn it into actionable outputs. I think that the two go kind of hand in glove. The person's telling the story to an investor to get a buyer to offset a seller, and the research that's actually being performed. And so I see components that are going to help transform these markets. And look, in the United States, we got very close to creating a new form of stock exchange called a venture exchange. It was in a bill that was done by Congressman Emmer called the Main Street Growth Act. Congressman Emmer is a Republican in Minnesota, and it was wrapped into an act which was an omnibus bill, was probably even bigger than the Jobs Act in the United States, and it passed the U.S. Congress. It was called the Jobs and Investor Protection Act, or something to that effect, in 2018, and it passed the Congress, the House of Representatives, 406-4. It was incredibly bipartisan. So it shows you that there's an appetite, and it was so bipartisan that the smart money was saying it was going to get tacked on to the Senate Appropriations Bill and passed into law. It was endorsed by Donald Trump in his White House blog statements. He was very pro this particular bill, but then he shut down the government over the wall. And then what happened is there was never a budget to tack the bill onto, and it pushed the legislation into the next Congress, which mooted it, right? It absolutely takes the legislative calendar when you go into a new Congress, and it sets the clock back to zero. So, but there's a lot of nuggets there, and you know, we'll surface that with the new administration because it was so non-controversial. Maybe we'll get a bill that will actually allow people to start with a whiteboard and restructure public markets so that you can get an IPO done earlier, to your point, right? So that they're not in private markets until they're, you know, unicorns. You know, we need to get back to the current head of the transition team for President-elect Biden gave a speech in the U.S. Senate years ago, and the final line was, is if we can get the $25 million IPO to work, we'll put America back into business. And so I think that there's an appetite. I mean, for those of you that don't know, the Jobs Act, which gave birth to crowdfunding in the United States, was actually signed into law by President Obama on April 5th of 2012, right? And so there's been an appetite in both parties to do some of these things. And so I'm cautiously optimistic that we'll be able to you know, get a new form of stock exchange and address some of these issues to make it easier for companies to go public. And that will then all of a sudden make it much more attractive to invest in private companies because you now lower the hurdle to get an exit, right?
Yeah, that sounds like a working solution. I assume also another important component is tokenized venture funds to get more capital into the private markets at early stages specifically, because for a common person who wants to put like in $100 or $1,000, paying 25 grants or even a lower amount for AI-based research is too expensive. But if you are putting more money that you gathered into the private markets as a fund, then it's a more reasonable spending. So I assume tokenized funds are an important component into this ecosystem.
Yeah, I think that it may be easier to do in Europe than in the United States. I mean, in the United States, you start to run into 40 Act problems, and there are limitations in the private markets with these funds, typically in terms of how many investors you can have, right? And so you can do things under different kinds of structures. I mean, we probably would have to do some innovation, but there's also another problem, which is if you start to trade a venture capital fund, how do you value that venture capital fund, right? And it's going to be very similar to closed-end equity funds. And I think as the European community probably knows, I mean, a lot of closed-end equity funds have a history, because they exist in Europe as well as in the United States, have had a history of trading at a big discount to their intrinsic net asset value, right? And so the problem is, you know, you issue it, it has a tendency to trade down. So from an innovation standpoint, by the way, I ran equity new issue new product development at a top 10 firm years ago. So I'm very used to kind of, you know, innovating with securities. But you need to do some things sometimes with these funds to, you know, for instance, to pay a dividend out of equity just to get them to trade better in the aftermarket, you know, to make them more bond-like. We actually did a closed-end fund years ago. It was the Zweig, many years, probably 20 years ago now. But it was a closed-end equity fund investing in public equity securities, and they were all trading it, you know, at a 15-20% discount to their net asset value. And so with Marty Zweig, it was the Zweig fund. We said, got him to agree. He said he could make 10% with his eyes closed every year. So why don't we, you know, why don't we tell people we'll pay a 10% a year distribution, and we'll do it on a quarterly basis. And that closed. It actually had the effect of closing the discount to net asset value up very dramatically, right? It takes a lot of moxie to do something like that and a lot of confidence to do something like that. But it had exactly the effect that we wanted it to have, which is to close down the discount to net asset value very quickly. So, you know, there are things that you could do.
I assume it's hard to do from operational perspective. So funds of that kind, they have to have a really big pipeline to be able to take someone public in a smaller exchange each quarter to be able to pay dividends. But I assume in theory it is possible.
Yeah, it is. I mean, and you know, look, it's there's a lot of really one of the challenges going forward. If we don't, lower the bar to getting companies public, that we are closing out the market, and where a lot of the alpha is being created, right? The uncorrelated returns are being created in private markets. And so what we've done, and this is a question for policymakers, is that what we really want to do, right? Don't we want to make alpha generating opportunities available to everyone, even those with small amounts of money? And then how do you manage the risk so that they don't get taken advantage of, right? But I think that is something that, at least in the United States, I've seen policymakers, start to debate, because, we see all these unicorns that go through their hyper growth phase, and by the time they go public, and it's, whether it's Facebook, when Facebook went public, I mean, the hyper growth phase is already behind you, and so if you're not an institution or a high net worth individual, you missed that one, right? You didn't have an opportunity. So I think that these are things that will be reset. I mean, the fundamental problem is when we went to all electronic markets, and we it's great to trade innately liquid, large capitalization stocks, but these things don't need liquidity providers. The liquidity providers are needed by smaller capitalization securities, which are where you have a big seller and no buyer. Somebody has to get in the middle and make a market. And if there's no economic model for that market maker to make a living and to manage their risk, then these markets start to fall apart, and investors leave those markets. They move up market, which is exactly what we've seen throughout the world. And that's why the bar has been so dramatically raised on going public. It's absolutely got nothing to do with Sarbanes-Oxley and disclosure requirements. It has to do with the certainty of getting that company public, and the risk. And if the risk of failure goes up, which it has because of the changes, the shift over to electronic market, and the diminution, the shrinkage in distribution quality with the big investment banks, then you're not going to get a good outcome if you're a smaller company. So you're smart to stay away from public markets. This is why we see SPACs, for instance. SPACs are sort of a sign of this disease, which is I can create a SPAC and I have certainty of outcome. I can go public, right? People are not concerned at that point about the dilution, the incremental dilution of going public through a SPAC, because they know that if they close on the acquisition, they're going to get their funding. So there's a high certainty of outcome, and entrepreneurs are, they don't want to spend their time on something that's got less than a 50-50 chance of getting done. They got better things to do with their time.
Thank you for your reply. Thank you for a wonderful conversation. We can have it, I assume, for hours, but it's already late, and it is time to proceed to the next section of the conference. So, David, thank you a lot for your speech and for the follow-up discussion.
Nice.
Our viewers can also follow your work a lot, and I hope we have another chance to have a conversation as well. I'm also going to finish our demo now, the demo of the dashboard, which was interrupted by the connection problem. And tomorrow at approximately 3:20, 3:30 p.m., we are going to, at GMT +2 time, we are going to do the demo again to take care about the connection problem without all interruptions and this stuff. So if you're interested, feel free to join. And this is an invitation to all the
send me a link for it tomorrow, and I'll put it on my calendar tomorrow. That'd be great.
Okay, I'll make sure. Thank you again.
Boris, nice to see you.
Have a nice day.
Take care. Yeah, good luck to you. Take care.
Can you hear me now? Okay, and now I start to sharing my screen, and you will probably stop hearing me. Can you hear me now? Yes. Amazing. Okay. By the way, this is everyone link, so I'll start sharing another one. Just give me a second to open the right link, and here it is. Yes, so I start sharing it again. Okay, can you hear me now? When I started sharing, please tell me that everything is fine. Amazing. Then I'm continuing the presentation and hope tomorrow we can do everything right. So here is the offering section. As I mentioned previously, you can use it to create many offerings on a single dashboard, which will allow you to host some kind of a crowdfunding platform or a real estate marketplace using this dashboard as well. The next important section is a transaction sections. What it allows, it provides you with two benefits. Benefit number one is that you can view the entire transaction history here and synchronize it with use it for reporting, for example. But also, it provides you with an opportunity to complete that transaction from this specific tab. So if you remember, in the individual investor view, there is no delivery versus payment. That is, investor is sending you the payment and then waiting for you to send the tokens back. And here at this tab, you are seeing the customers who have sent you payment, but you did not send them tokens back yet if they are not approved. These are the transactions that have the status new. So you can review these transactions. You can review how much they have sent, all the necessary information, whether they are whitelisted. For example, one of the problems that you are seeing with this payment is that the wallet from which you received the transaction is not the same wallet which investors specified during the KYC procedure, and that you're able to you will probably want to do some additional you will probably want to do some additional KYC on this investor and ask for the reason what is happening. So you may actually reject this transaction if it went wrong due to the wallet being incorrect. And now let's see for another payment. And here you can also review the payment request, how much the client requested to pay. However, this does not necessarily match how much the client paid in reality. For example, the payment should be 2,600, but the client paid 260 due to making a mistake, for example. In this case, actually, what you can do, you have two options. One, you can send him only 2,060 tokens if it is above your investment minimum. So for example, if your investment minimum is $100 and the client paid $260, you can send only 260 tokens instead of 2,600 because of the wrong payment. And if it falls below your minimum investment, let's say the minimum investment is $500, then you reject the transaction and ask the client to conduct the transaction again. So this provides you protection from the potential mistakes that obviously anyone can make, the typing mistakes when sending the payment. And we decided to add the flexibility to protect you from these potential mistakes. So this section is very important precisely because it allows you to, instead of going to this section and conduct the transfer, you can do it from the section of transactions itself and thus make sure that you don't miss anything and all the tokens you send correspond to the transfers you received, which is obviously a legal need. But even if you do something wrong, if you send the wrong amount of tokens or you send them to the wrong person, this problem can also be fixed due to the features of smart contract, which allows the remote burn of the tokens. We don't put it on the front end yet, this function, but so it is done by using the technical means. So if you have a problem and you need to burn certain tokens that were sent mistakenly, you only have to contact us and we will help you with anything. And the last section, quite trivial, is settings, when you can enable two-factor authentication, change password, and update your banking details. Because actually your clients, when generating an invoice for the wire payment, they are receiving the credentials that you specify here. So the invoice for the payment is generated automatically. So this section is important. That's all. Let me review again if there are some additional questions. Oh yeah, I see people writing me the support. Great. And let me see also whether there are questions on the YouTube. Yeah, I see there are no questions. Okay, I am very grateful for your attention and your understanding to the connection problem and everything. I hope you enjoy this workshop. We will be sending the feedback questionnaire to all the participants. So if you find 5 or 10 minutes of your time to give us the feedback on the dashboard with which features you liked, which ones you didn't like, and what you would like us to add to make it even more useful to you, to your clients, to your investors, we would be very grateful. And if you missed anything or you want to have a recap, tomorrow at 3:30 or 3:20 by GMT +2, we are going to make the workshop again. Jin will fix his connection issues by the time, so we will do anything right, and you can ask any questions you have at that point again. So thank you again. This is the end of the day 1 of the conference. I am very grateful to everyone who came. I am grateful for your insightful question. I am very grateful to our speakers. We have fantastic speakers who gave us deep insights from different parts of the world, and some of them even had to get up at 5 a.m. to participate in the panels. And I am especially grateful for your serious approach. That's all for today. I hope to see you tomorrow. We have fascinating panels scheduled for tomorrow. The panel about secondary markets. We have a panel about legal aspects, and obviously legal aspects and liquidity are one of the most complicated ones to get right. So make sure to visit these speeches. I am going to make a speech about these specific business models in the real estate. So I hope to see you tomorrow and have a great evening. Bye-bye.